Welcome back to Power Breakfast on CNBC TV18. Now, in a major development overnight, US President Donald Trump announced tariffs up to 100%, yes, on imports of branded and patented pharmaceutical products from 1st of October, unless a company is building their manufacturing plant in America. President Trump has also announced a sweeping 25% tariff on all heavy trucks made outside of America to protect their truck manufacturers. The tariff will come into effect from 1st of October and are intended to make America's truckers financially healthy. And lastly, the president announced a 50% tariff on all kitchen cabinets, bathroom vanities, as well as associated products starting from 1st of October as well. Now, that is the latest update that we have coming in from President Trump. Now, he's also signed an executive order declaring that his plan to sell TikTok's US operations to US and global investors will meet the national security requirement. Listen in.
This is going to be American operated all the way. And great respect for President Xi, and I very much appreciate that he approved the deal, because to get it done properly, we really needed the support of China and the approval of China.
Are you satisfied that there's no security concerns for the
Yeah,
US?
I am. I really am.
It would push disruptive
The biggest reason is that it's owned by Americans, and very sophisticated Americans, and people that love the country, and very smart Americans too. So they don't want anything like that to happen.
And let's look at what the US markets did, right? Overnight, a muted day of trade that came in the US markets as well. All the three major indices that closed in the red. So Dow Jones was down almost 0.4%. We had S&P 500 down 0.5%. Nasdaq also was down 0.5%. We're watching out for key data points that will come in the US as well. The inflation data points, that is what we'll be keeping an eye out on. Obviously, we are the US market where the major players like Oracle, Meta and Tesla were also seeing a bit of a pullback coming in, leading to the pressure coming in even on Nasdaq. So that's what we'll be keeping an eye out on. Muted day and muted handover coming in from the US market as well. But on that note, we're going to slip into a very short break. Up next, we'll get you the cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC-TV18. Now let's move on. And speaking at the G20 Foreign Ministers meeting, External Affairs Minister S. Jaishankar bats for making energy and other essentials accessible to everyone and calls out double standards. Listen in.
The costs, especially to the global south, in terms of energy, food and fertilizer security, were starkly demonstrated by ongoing conflicts, particularly in Ukraine and Gaza. Apart from jeopardizing supplies and logistics, access and costs themselves became pressure points on nations. Double standards are clearly in evidence. Peace can certainly enable development, but by threatening development, we cannot facilitate peace. Making energy and other essentials more uncertain in an economically fragile situation helps no one.
Okay, on that note, let's go across to Manisha Gupta, who's here to tell us what are we watching out for in the world of commodities this morning. Good morning, Manisha. Anything apart from gold and silver, or that continues to shine?
So I'll give it a back to gold then and talk about silver rather, because we are looking at a new 14-year highs of $45 an ounce for silver now. And with that, we've seen silver prices gain up by almost 56% for this year until now, clearly outperforming what gold has done. For silver, it clearly is about firm industrial offtake from photovoltaic panels and electronics. And then you're looking at tight physical availability, whether it's coming in from smelters. There is reduced from deliverability also. And the premium for near-term metal delivery is very high. So that is what is keeping silver in good favor there. The other thing to keep in mind is about the crude oil prices trading at a 7-week highs. And with that, we are headed for a 4% weekly gain for the crude prices, which is the best since mid-June. There is decline in crude inventory, suspension of Kurdish oil exports, NATO's warning of a robust response to Russian airspace incursions, and then Russia also is looking to introduce a partial ban on diesel exports until the end of this year. All of these factors really supportive, almost holding $70 a barrel in case of Brent prices. We're looking at good gains into this one as well.
Okay, Manisha, thank you so much for the latest update in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast. Nifty implied open is still indicating a bit of a muted start for the Indian markets. Now it's down just 13 points. When we started the show, it was down almost 30 points. So yes, a very muted start is what we could keep an eye out on. Don't go anywhere. Up next, your Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Well, I must say, Fridays are supposed to be sort of, winding down into the weekend. Not a pickup in activity, but a slowdown in activity. I'm talking about news flow, but it's the exact opposite what has happened over the last, 12 hours or so with tariffs and more tariffs. Another fresh sweeping set, which will be the focus here over the next 60 minutes or so into market open. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, morning.
Hi, morning folks. Morning Nigel, morning Prashant. Are you really winding down? You live in the Donald Trump era. What are you talking about? There can never be a wind down. But yes, we have those big headlines to contend with on Pharma. Right now, it's not on generic drugs. Yes. It's on branded drugs, on IP-protected drugs. And we'll, of course, get to the implications.
Well, Trump's on a roll overnight. Particularly in the last 2 to 3 hours, he's been very, very active. So we'll address that. And yesterday's market action actually wasn't very encouraging by any stretch of imagination. Just that the Navratri color today is green. That's the lone hope.
But actually, pharma stocks were, I don't know if the market had an inkling of this or not, but overall, pharma stocks were under pressure yesterday.
Yeah, no, absolutely. It's been, are these those sectoral tariffs that he's been talking about under Section 232? We don't know. It looks like it. So let's take it from the top, right? And I won't start with the US market action, but I'll start with what has been announced. So Trump has delivered sweeping tariff shock. Essentially, the message is pretty simple. It's the same, which is build in America or pay a tariff if you're importing goods made outside of America into the US market and selling to the US consumer. So he's targeted big pharma. So when we say big pharma, basic difference, innovators, guys who make the original drugs, that's essentially big pharma. What big pharma refers to, Eli Lilly, the Roche, Novartis, Pfizer, those are the big pharma names. Whereas here in India, you got mostly generic players, companies which make copies of these drugs and sell at a fraction of price to the US. Of course, there is patented stuff here in India as well, but it is a small fraction of what is exported into the US. So that's point number one. Right? Now, 100% tariffs on imported drugs unless US manufacturing begins. That is what has happened. That post will come up, and I just want to read that post up with regards to the tariff bit, or the pharma bit, and this is what it says, right? And I think the last portion is what is important. He says that, unless a company is building their pharmaceutical manufacturing plant in America, and is building, he specifically says, will be defined as breaking ground and or under construction. And I think that is the most crucial part here, because most large US company, most large innovator companies, a lot of them are based out of Switzerland, many of them are in Germany, and of course there is the largest ones are in the US. All of them are building, will mostly qualify under that definition, which is they are in the process of building in America, as defined by that tweet. We'll wait for specific details, etc. But that's the first reading of the situation. And we'll get you updates, etc. But I think purely from a first-order impact point of view, there isn't very much impact. If you remember what's happened with semiconductors, something very similar happened. And all these companies came in and promised investments, etc. They were already, by the way, making investments in the US for one reason or the other. And there's been very little impact in terms of tariffs on semiconductors being brought in from outside, chips brought in from outside into America. So I think this seems very similar to that kind of a playbook. Second order, third order impact, these companies source from outside India. We'll have to see. We'll have to work through those implications. And we will get you that. Now, 25% tariff on heavy trucks as well as what has been impacted, but that's not it. Kitchen cabinets, bathroom vanities, unholstered furniture. And as I understand it, across at least most of these items, heavy trucks will try and get in touch with the management of Bharat Forge I don't think companies like Ashok Leyland, etc., export into the US. But we'll get you an implication. But I think the other stuff, it's all made in countries like Vietnam, Southeast Asia, China, etc. Very little here in India. It's made here, but not exported to the US. So that's some specifics. Now I come to the overnight market action. And here, NASDAQ down about 0.5%. Dollar index has seen a meaningful move. We are now almost 98.5. 0.5% day before yesterday, 0.6% last night as well. Oil's moved up to almost $70 a barrel as well. So in terms of these macro markets, not looking all that great, at least as you start this morning. Nifty is closed yesterday below the daily average, key daily averages, right? I think 5 days in a row, the index has been down. The final support is 24,800. When I say final, basically a defense of this entire up move. I mean, you can see, after a 1,000-point move, an index can correct. But you got to define it somewhere that it's just a correction of this 1,000-point move, and then, the 1,000-point move, that rally will continue. So a defense of that move is 24,800. It's a 61.8% of the move, retracement of the move. So we'll see if this gets taken out or not. Bank Nifty slightly outperforming the Nifty. Here the support is the 20-day moving average, which comes in at 54,680. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. 12 points, neither here nor there, at least at the word go. Nigel is standing by with the F&O stats and the picture there. Nigel, morning.
Well, morning. The big problem this week has been the FI selling, and that's outweighed the DI buying as well. And, in yesterday's trading session, they almost nullified each other. But particularly towards the final hour of trade, you had the FI selling. Nimish was telling us that could be some kind of selling that was due. And that's precisely what it played out. Even the gross volumes were extremely high. Short point was, yesterday was a disappointing trading session, and we broke some key support levels. Let's get to the other couple of points then. The FIs, well, in the index futures, they went ahead and they added short positions. 6,500 contracts is what they added. Short positioning continues at around 84%, though it's come off from around that 92.5%. It's come down to around 84%, though they continue to add shots into the system. And now they're writing calls very, very aggressively, because in yesterday's trade, we just saw that they added close to around 1.5 call for every 1 put. So the writers were back in play in trade. And because of the kind of aggression we have seen on the call writing front, the PCR has come down. The PCR has come down to sub that 0.7 mark. It is at around 0.68. And we should get the 2 strikes up for you on the screen. The 25,000 call, massive open interest built up is what we saw. More than a crore shares getting added out there. But there is some glimmer of hope. The last straw that the bulls will be hanging on to is there were some signs of writing at around the 24,900 put, which tells you the 24,800 level becomes extremely important for today's trading session. You'll want the Nifty to, in fact, defend this on a closing basis, 24,800, 24,840 odd. While on the upside, the resistance comes in at around 25,100, going by the kind of writing we have seen on the call side. And the Nifty Bank, that yesterday was trying to show some kind of fight, but that gave it away as well. And now it's very, very close to the 20 DMA. You don't want this mark to get broken at all. That's close to around 400 to 500 points away from current levels. So the Nifty Bank will have to show some fight, given that the tech index has been under the weather. And let's see whether or not we're due for a bit of a relief rally on the tech index itself. That's down close to 5.5% in this week. Moving to one more point I wanted to make with regard to the margin trading funding book. Remember, that was at around 60 to 70,000 crores. It moved up to around 80,000 crores. Now it's at elevated levels at around 98,000 crores. And that's why you're seeing pain in the broader markets as well. So you'll want the headline index to get its act together, because otherwise, this will become a bit of a spot of bother, particularly for the broader markets. And finally, the stock that we're looking at, the one that we told you about yesterday, HFCL, was likely to come out of the F&O ban. That's precisely what's happened. So let's keep an eye out on this one for today.
Okay, all right. By the way, Asia is quite negative. Most markets across the region are simply carrying on from the weak close that we had on Wall Street. So even a market like Hang Seng, for instance, Hong Kong, is down about 1%. Japan is down. A lot of pharma stocks there, for instance, the likes of Daiichi, Sankyo, etc., all of them tumbling. And remember that yesterday there was a massive upward revision in US third quarter GDP. At an annualized level, it's at 3.8. So 3.8%, almost touching 4% that particular quarter. Maybe it was a sort of preponement of a lot of imports, etc. activity before the tariffs kicked in. But whatever it is, that's also gotten the market worried about how quickly the Fed can, do the next rate cut. So that's the picture. Let's quickly get to the equity call of the morning, and it's coming in from HSBC. Herald van der Linde of HSBC says, while Indian equities have underperformed emerging markets by 32 percentage points since mid-September 24, the worst performance since 2001, we now find the market attractive. He says in cricketing terms, he expects it to return to form. He adds valuations have fallen. The premium to the region is back at historical levels, while lower inflation and easing measures should support growth. He thinks earnings are near the bottom and are set to improve. He says their 11 top picks would include names like Marico, Trent, Mahindra & Mahindra, Phoenix Mills, HDFC Bank, ICICI Lombard, Ultratech Cement, Infosys, Adani Ports, Divi's Labs and NTPC. So turning quite optimistic on the Indian market right now. That's HSBC. Well, let's take the discussion forward first on Pharma to understand what to make of this latest proclamation from the US president. We have Aditya Khemka, Fund Manager, Incred Asset Management, as well as Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments, join in to talk about this. Gentlemen, good to have you in. Aditya, if I could open with you, I mean, what have you made of it? Because very clearly, this new tariff is going to apply to IP-protected pharma products and to, not to generics. So does that mean a small sigh of relief for now? Or is the sword still hanging on pharma stocks here?
Yeah, hi, good morning. Thanks for having me on the channel. So clearly, most of the Indian pharma companies that sell into the US sell purely generic products. And hence, the sword, I would say, is still hanging, but it's not fallen on the neck yet. Because given the situation and given the rapidly changing situation, one cannot obviously rule out any kind of tariffs being imposed on generics tomorrow or day after tomorrow. The way things are evolving, one just cannot say anything regarding how the future would look like. But yeah, only I think a couple of Indian pharma stocks like Sun Pharma, maybe even a Wockhardt. So Sun Pharma obviously has a strong specialty branded franchise in US, and that may get impacted by these kind of announcements. And Wockhardt, most of the valuation of Wockhardt stock hinges on a specialty product which they are, supposedly going to launch in US once they get approval. And hence, that kind of a risk also prevails for a Wockhardt. So in summary, I think the future looks uncertain for generics as well. But for now, the impact is purely on the IP-protected products.
And this is just coming in, Aditya, but you're saying that from a company, and we should put the flashes out, you're saying that some impact. Now, we're not quantifying for Wockhardt, Sun Pharma, Aditya, right? These are the two?
Yeah, these are the two which have, a meaningful specialty valuation built into their market cap today.
Right.
So these two, I think, would be the ones that would have a significant impact.
Aditya, would it be possible? I mean, I know we can't push you for exact numbers, but Sun's, large pipeline is specialty. Now, we don't know if every drug gets impacted or not, but any way of wrapping our heads around this? What percentage of their, say, FY25 revenue could be at risk of these higher tariffs?
FY25, yeah. So FY25, I think around 20% of Sun Pharma's revenue in FY25 came from specialty products, but that is global specialty revenue. So a certain percentage of that, a very large percentage of that would be coming from US. I don't know, maybe 70, 80% of that may be coming from US. So, in summary, about 14, 15% of Sun Pharma's total top line might be coming from specialty US products as of now.
Overall, I remember about 20%. But the specialty could be about 14, as you say. Aditya, the tweet, the post says branded or patented pharmaceutical products. This is, the specialty would fall under this, right?
Yeah, specialty would definitely be under IP-protected products.
Okay.
Under branded, you could potentially have some biosimilars as well. Because biosimilars, even though they are sold like generics, but they do carry their individual brands. So that is where I think even a Biocon may be at risk, where, they sell a lot of biosimilars into the US, which are branded products, but are not...
Aditya, we just spoke with the Biocon CEO a few days back on the fact that they are, constructing this facility in the US, manufacturing facility, right? And the post says that if you're building a plant in America and building is defined as breaking ground or under construction, then you're exempt, right? So then Biocon is exempt, right? Then in that sense, the way this is worded.
Yeah. So look, this is where the gray area is, right? I mean, the regulations aren't clear. They might change it in 24 hours, like they did the last time. So I don't really know, but what I'm just intuitively thinking is, let's say if Biocon manufactures 20 biosimilar products in India and sell it to the US and creates manufacturing capacity for one of them, or just break grounds or create enough manufacturing capacity for one of these 20 products, then is all 20 products still exempt? I don't know that. And
that we don't know. Only for stuff made in the US or, planned to be made from the US or everything, right? Once you have, so absolutely.
Yeah.
Now, second question, we're talking about direct impact, right? Companies selling into the US. Let's talk about the second way to look at this, which is US large pharma companies, big pharma basically, the Pfizer, Eli Lilly, Roche, etc. Most of them are making or have announced plans, broken ground, whatever, in the US. They fall under this category, this exemption that has been, the way it's been worded. So let's just assume for a minute that, not very large impact on them because of this, the way it's been put. Is there any second order impact from them, their sourcing through, from India, from China, etc.?
So, look, manufacturing again, so pharma manufacturing has multiple steps, right from the intermediate to the API, to the formulation, to the packaging. So if I break ground to create a packing line or a packing facility, get the product out from outside and just assemble the product in the United States, pack it up, does that qualify, under this? Again, lack of clarity in the regulation just we don't know how it will impact them. And hence, how does it impact the ancillary industries feeding into them is something that is very difficult to quantify or assess. And that is where, we are struggling a little at this point.
Okay, just one more question. Does this announcement now, and we'll wait for clarity, a lot of stuff is not known, does this increase uncertainty or reduce uncertainty? And the reason I'm saying there is even a second option, which is reduce uncertainty, is because this says, it specifically says branded, patented pharmaceutical product. So if they had to be generic, I mean, one way to look at it, maybe the positive way to look at it, it would have been here already.
Yeah.
Right? So in that sense, does it reduce uncertainty for generic players?
Yeah, so two ways to look at it, right? So originally when the tariff started, pharma was exempted. Now suddenly branded pharma is not exempted. Now one way to read it is to believe that, okay, now that branded pharma is not exempted, unbranded is exempted or continues to be exempted. Tomorrow, if this doesn't create enough of an impact and they start, tariffing the unbranded products as well or the generics as well, then, I don't know how that can play out. So in my view, in my personal opinion, I will not touch, this business as an investor till I get 100% clarity on what the tariff situation for these businesses will be.
Okay, all right. Aditya, stay with us. Let me get Prashant Paroda in. He manages a large amount of money here in India and in emerging markets as well, Asia, etc. Prashant, good to have you with us here. You heard Aditya. Pharma is the big focus, of course, because it's a big industry here on the generic side. My question exactly is that, Prashant, what I asked. This increases uncertainty. You heard the entire conversation, so you know the context. Increases uncertainty or reduces uncertainty?
I think for the generic players in India, even if you expect some little bit of tariffs, it won't be as high as these branded players. Generics are part of the solution to the overall healthcare costs in US. And my sense is even if the tariff rate will come, it will be at a much lower rate than these branded generics. So the uncertainty is that we still don't know the number, but hopefully the number would be much lower than what's in this case.
This is Section 232, Prashant? Those sectoral...
Yes, most likely it will be Section 232. Yes.
And you would expect, for no other sector have you seen, two posts. It's one post. I mean, that's what we're come down to analyze what comes next, right? Branded generic, branded pharma.
He has been hinting... Yeah, he has been hinting, President Trump has been hinting on pharma tariffs coming, and I think there was some expectations. Clearly, the amount wasn't known, and now I guess there's some clarity, at least for the branded part.
Gentlemen, morning to both of you, morning to Prashant. Prashant, overall as well, I mean, I think a lot has changed, right? There was this glimmer of hope when it came to India-US ties and the trade deal, and there was a pleasant exchange of social media vibes, right, around Prime Minister Modi's birthday. But since then, the rhetoric around Russian oil continues, and we've seen what we've seen on Pharma now. So what's your sense? I mean, if this market is waiting for a positive trigger, I mean, it's got it in the form of GST cuts or, you know, easier monetary policy, income tax cut. What could be that next positive trigger? Because this whole US situation till now hasn't shown any signs of resolving.
Yes, on the tariff front, at least for the secondary tariffs, it looks like the US situation is definitely hardening as well. And today, I guess the Turkey's president was there as well. And President Trump did point out that Turkey can help out if it stops buying gas and oil from Russia as well. So it seems to me that something is brewing, especially with Europe, in terms of tackling, the oil and gas situation. And my sense is, at least the good news from India's perspective is that they've started talking again. And, our Commerce Minister was here, and there is some dialogue going on. So ultimately, I think it will come out to some kind of negotiation.
No, Prashant, what I was, I completely take your point. I'm saying we can't second guess those geopolitical developments, right? They'll happen as they happen. My question was for the market. What can now make it sort of revive? Because from a policy front, a lot has happened. So are you expecting better earnings? Anything else that can get us out of this slump?
Yeah, I think from the India perspective, right, the government has done what it could. From the RBI also has been cutting rates. There is kind of the GST impetus. So I think people will overlook whatever this quarter earnings are and focus more on how around Diwali, kind of how some of these auto sales come. But from the valuation perspective as well, China has moved up quite a bit. So looking into next year, given the underperformance of India, I think if the earnings come through, and it might not be in certain sectors, but might be in auto or financials, we will continue, I think, to rise. With the market will continue to do well from there.
Yeah, no, absolutely. Aditya is still with us. Aditya, your last comment was you would not touch any of these names as an investor, right? That's what you said.
That's correct.
Yeah.
Yes.
And nothing at all. There's too much.
So look,
this uncertainty clears.
Yeah. So when these things happen geopolitically, your risk exposure to risk just goes up, and for the reward to go up in commensurance with that risk, the stock prices need to correct, so that my potential reward also goes up while my potential risk has gone up. We just haven't seen that kind of correction in stock prices yet to say that the reward has gone up, in accordance with the risk that I need to take now. And hence, as an investor, I wouldn't look at it.
Got it. We'll leave it there. A good conversation right on top, and pharma focus, really. Tariff focus, I should really say. Aditya, thank you for joining us on short notice. Prashant, thank you very much for running us through the overall foreign investor perspective on this. We'll take a quick break, but let me just, before that, quickly run you through what's coming up here over the next 2.5 hours. Interactions lined up, basically. 8:30, we have another focused discussion on pharma tariffs, and that's a big talking point, right? So the analyst from Elara Securities will be with us. On it, 9 o'clock, we'll have Balaji Subramaniam of IIFL Capital Services for a discussion on the Vodafone AGR case. Remember, the hearing is today. The government's supposed to take a proposal to the Supreme Court, and the court said that let's find a resolution. 9:35, focus on, well, pharma. What else? Walk Hard. Aditya mentioned Walk Hard perhaps is impacted a little bit, so lots to talk about there. That's an exclusive, followed by CS Vigneshwar of Federation of Automobile Dealers Association and Vignesh Gulati of United Automobiles for a discussion on the auto space and what's sales numbers, etc., looking like post GST cuts. And 10:15, Lata will be quizzing CNBC-TV18 Citizens NPC on whether RBI should or will cut rates on the 1st of October. So that's the star-studded lineup.
Time to slip into a short break. You got a lot of stock-specific action to track for you in a special top 10 segment. I'll run you through the list. We'll look at L&T, Tata Motors, TVS Motor, Polycab, Wockhardt. They'll all be reacting to positive news flow. Add to the list Supreme Petrochem. On the flip side, tech stocks and Pharma, Waaree Energies, Eicher Energy will be reacting to negative news flow. Take that break, come back into further detail on all of these names.
Welcome back. So, as we've been telling you, the cues across the world are not that great. US had a negative close, 0.5% lower on Wall Street, and Asia has exactly taken off from it. So, most markets around our neighborhood are down and down quite a bit. Look at Taiwan, down about 1.5%. Hong Kong's low. Let's pull up the implied open and see what the SGX Nifty, the GIFT Nifty is suggesting. How we will start 17. That's not bad. Let's see. But the market has already fallen a lot. Remember, yesterday we tumbled well over 150 points. So, maybe won't be that badly hit at the start at least. Let's get to stocks. You already know that Pharma, and we'll get Ekta in to talk about that. But there are other names as well that we should be keeping on our radar. So let's bring in the whole team, guys. Morning to all of you. Look at Ekta, bright shade of green, no matter the gloomy talk on Pharma. We'll get to Ekta in a second. But Rima, you go. I mean, IT is never out of focus as well when it comes to the US business. And Cognizant reported numbers yesterday, guidance. What do you make of it?
Well, it's Accenture which reported their numbers overnight. And yes, IT has been focused. It's down 5.5% so far this week. And year to date, the stock is down. The index is down close to about 20%. But there is more bad news because Accenture, which is its peer, reported their Q4 numbers, FY25. That was a good set of numbers. But what the street is disappointed with is the guidance. And that's the reason why, while Accenture share price declined 3% on NASDAQ, even the ADRs, Wipro and Infosys, slid close to about 2 to 3% respectively. Now, Accenture is saying that FY26 revenue growth will be 2 to 5%. This is lower than the 7% that they clocked in the prior year. Two reasons for that. One, Accenture used to get about 8% of the business from the US government, and on the back of the federal government spending cuts, they will be losing. There will be a negative revenue impact of about 1 to 1.5%. And secondly, the inorganic revenue contribution this year will be lower versus last year. So this year, acquisitions will only contribute about 1.5%. But in a nutshell, what we're looking at is the organic revenue growth to be very modest for Accenture, 0.5 to 3.5%, low single-digit kind of revenue growth on an organic basis for Accenture, and this is what has spooked. But separately, two other internals, there are lots of them, but two other internals. One, on generative AI bookings are very strong, $1.8 billion for the quarter gone by, nearly $6 billion last year. And the company has also announced restructuring. We had heard that with HCL Tech 2 quarters back, and now even Accenture is talking about an $865 million workforce restructuring. Basically, they're saying that we will be making new hires this year, but some of the talent which cannot be staffed on the new tech, on digital, etc., we'll have to let them go. Back to you.
Thanks, Rima, very much for that. I stand completely corrected. I think too much news flow, too much to digest. So I read Accenture as cognizant. My bad. But yeah, that's important takeaways coming into my
Well, that's right. Let's move on then. Let's get in Vivek. He's here to talk about L&T. Hey, Viv. Good morning.
Well, good morning. In what has been a drag on L&T's financials for close to half a decade, an important development, PTI reports that the Telangana government has offered to take over phase 1 of the Hyderabad Metro Rail project from L&T. Now, the government will pay close to 2,000 crore for L&T's portion of the equity stake, and along with that, will take over the debt completely. Remember, the debt is of close to 13,000 crore rupees. This 2,000 crore equity that L&T is receiving is against the 5,900 crore that they had originally asked. But what this move basically indicates is that a significant overhang as far as L&T was concerned now moves away. We also have JM Financial that has written on this particular development. They say that the exit potentially removes the long-term overhang on the stock and is modestly EPS accretive. They say that the exit from these assets avoids PBT PAT loss of close to 626 crore at L&T's level, and an EPS uptick of close to 4% is what L&T could enjoy. Remember, losses were at 3% of L&T's consolidated PBT and approximately 4% of consolidated profit after tax for FY25. It's further positive given the fact that it can boost ROE by close to 60 to 70 basis points. We reached out to the management of L&T. We're yet to receive a response from them.
All right, when things go right, things go right in a big way, right? And they continue to keep going right. Cycles. L&T, of course, has been has benefited a bunch of things going right for the last couple of years. Stocks, watch out for it. It's a positive. Material one, as Vivek points out. Tata Motors is the next one. Was a top Nifty loser yesterday. Hormuz is here with more. Hormuz, over to you.
Morning, Prashant. And important clarifications being issued by JLR in the queries that CNBC-TV18 had asked them. And they responded to those queries, mentioning the fact that they have begun phased restart of the operations. There are sections of digital assets that are now up and running. The global parts logistics centers has returned to full operations. And the financial systems that processes the wholesale of vehicles is now online, which will enable the faster registration and sale of vehicles to the clients. But two important issues on the insurance bit, they mentioned that they do not comment on commercial matters, and on the financial bit as well, they mentioned that they will update on the same in due course of time based on their financial reporting standards. So although there are some operations that have come on stream, clarity still awaited on whether the production will actually begin on the 1st of October. But since the stock is beaten down, they'll latch on to some positive news. Expect some green here today.
Okay, all right. So some good news for Tata Motors. Finally, thanks for that, Hormaz. Now let's get to Ekta and understand how, what the potential impact could be of this tariff news on Sun Pharma. Ekta.
Thanks very much for that. So just want to start with the news that Trump has announced 100% tariff on imports of branded and patented pharma drugs. So that means that majority of the Indian companies that do produce drugs right now are generic drugs. They basically are copycats of the patented drugs which have gone off patent in the US. Now, however, why is Sun Pharma in focus is because Sun Pharma has a segment of drugs which they sell in the US, which is basically specialty drugs. Now, specialty drugs consist of Ilumya, which is for psoriasis, Sequoia, Odomzo, which is for cancer, Winlevi, etc. So these are a couple of the drugs which they have on in their specialty branded portfolio in the US. That is currently 19.3% of Sun Pharma's sales. FY25 specialty sales were $1.2 billion. It was up 7.1% year on year. Global Ilumya sales, which is one of the key drugs for them, was up 17% to $681 million. And even Q1, they saw 17% growth in terms of specialty sales. Interestingly, this is what could possibly get impacted for Sun Pharma if in case there is this 100% tariff that comes through. Now, it's important to note that the company does not disclose the percentage of sales that they have from the US plants. They do have US manufacturing operations. They don't disclose how much they make from that. Now, in the Q1 call, one of the questions to them was that do you have to increase your onshore manufacturing? So Sun Pharma had indicated the current capacity that they have is good enough in case for the company to not undertake onshore manufacturing without adding new capacity. So this is what the indication was, that they seem to be okay when it comes to US manufacturing, enough to possibly appease the US government. Now, this is on Sun Pharma. We need to see the impact. We need to see whether Trump is also talking about fresh capacity coming on, because he said building capacity in the US. So that's another variable which we need to watch out for. Other stocks, other generic stocks such as Dr. Reddy's, Lupin, Torrent, Glenmark, all of them, they are likely to not be impacted. But why could they be lower today? Because of the fear on what Trump could do going forward. It is in his best interest to not impact generic drug prices in the US, because that's basically the key thing where drug prices are lower. But they could possibly impact it in terms of any kind of supply chain tariffs which could then be implemented. So I think these are a couple of variables we need to watch out for. Net, generic pharma should not be impacted. Sun Pharma should be impacted because of specialty portfolio. And what we need to watch out for is any kind of tariffs on the supply chain, which includes APIs. That we'll come to know over a period of time.
Beautiful. Thanks a lot, Ekta. Dr. Ekta, for putting all of that into perspective. And all through the day, Ekta will keep breaking that down for you. Thanks a lot. Well, let's move on and let's get in Vivek. He's here to tell us about Waaree Energies. Vivek?
Well, that's right. So, news agencies, multiple news agencies have reported the company is now under a probe in the USA. And this is basically for evading solar tariff duties. Now, customs officials are investigated if Waaree Energies sidestepped US tariffs by actually going ahead and exporting Chinese-made cells and panels by labeling them as made in India. Now, remember, Chinese-made cells and panels are subject both to anti-dumping as well as countervailing duties in the USA at a much higher rate compared to India's exports. Now, this is in addition to, in August 2025, when the consortium of US solar manufacturing companies had gone ahead and petitioned for both ADD as well as CVD imposition of solar panels on Indian exports. So this is a double whammy as far as the Waaree is concerned. Remember, amongst Indian solar module manufacturer makers, Waaree Energy has the maximum exposure in terms of the order book. In terms of exports, over 41% of the total order book actually is to the export market. Close to 20% of the revenue could be impacted. Expect some red on Waaree today.
Okay, all right. So we're going to watch out for this under investigation. Thank you for that, Vivek. Let's quickly move on. Hormaz is here. He's telling us about Eicher and TVS Motors. What's the news here, Hormaz?
Eicher has given out a clarification about the fact that they were also impacted because of the rare earth magnets ban from China, and they, as a result of which, had to deviate from the certain guidelines that were under the PM e-drive scheme under the phased manufacturing program guidelines. Although this deviation is temporary, it has impacted their eligibility to apply for incentives under this PM e-drive scheme for over 52,000 vehicles that have been made or are likely to be made in the future as well, and as a result of which they are likely to forego incentives of up to 26 crores, although they have mentioned that they have successfully developed a heavy rare earth free motor and have also received a testing approval from the testing agency for the same. So expect an initial red on Ather, and the stock might recover because of this development that they have highlighted. And on the other hand, TVS Motors has established a global center of excellence in Italy, and as part of this initiative they are going to acquire a 100% stake in Engines Engineering, which is an Italian automotive and design company, for around 5 million euros. The company is known for advanced prototyping, innovation in high performance motorcycles, and some experience in MotoGP racing as well. So it's a positive development for TVS Motors in the European market. Expect some green there.
All right. Hormuz, thank you very much for that. More stocks with news flow. Vinny is here with those. Vinny, good morning.
Hi, good morning. So firstly, starting with Polycab. Yesterday, obviously, we had seen the stock price see a bit of a fall after the promoters sold that 1.5% stake. But the buyers, the marquee investors who have come in now, JP Morgan, they bought around 15 lakh shares. This is nearly 1% of the stake, and that is at 1,107 crores overall stake is what they bought. Other than that, we have other marquee buyers like Morgan Stanley, HDFC Life, Society General, Kotak Life among some of the buyers. So expecting some green here today on the screen for the stock. Wockhardt, that's another one we'll keep an eye out on. Lancet Regional Health has published a phase 3 study for nafisthromycin, which is an important drug launch that the company has been working on. So this one in India will be the first antibiotic launch that comes in for this type of a drug in more than 30 years. So important one there. And for Wockhardt also, it's an important drug. Do not forget the drug has been granted a qualified infection disease product status by the US FDA as well. So that is why green expected here. Good study improvement that is showing for the drug. Lastly, Supreme Petrochem, they have commissioned around 90,000 capacity per annum that has been in 2 regions. One is obviously in Maharashtra, and another one is at that Amdoshi facility. So on the back of this, we could see some bit of a green for the stock as well.
Got it. Thanks a lot for that, Vinny. In fact, we have the management of Wockhardt who will be joining in later today at around 9:35 a.m. for more on the new drug and the US tariff impact. Time to slip into a short break. On the other side, Bino of Elara Securities will be joining in to talk about Trump's new tariff announcement on Pharma. Welcome back. Hope you're having a good Friday morning. Well, plenty of action with regard to the markets, and help us out with some fundamental analysis. We have Bino, who's here to help us out with how do you approach Pharma. And we also have Sid Kemka, who will be joining in to help us out with other stocks that will be in focus. Bino, let's come across to you. First of all, good morning, gentlemen. And thanks a lot for joining in. Bino, out of nowhere, Mr. Trump has got active in the wee hours of this morning. And he's talking about Pharma, based on the feedback that we have got. It may not be such a big impact, at least as of now, but Sun Pharma could be the stock in focus. How do you read the situation?
Hi, good morning. Like most of the other tariffs, this also, as of now, is not going to cause a major disruption in my initial reading. Of course, the details of this are not yet out. White House has not yet put out a detailed statement or the text of the act that the president has taken. But what we understand from the tweet is that if a company has a plan to put up a manufacturing plant in the United States, it is exempted from the tariff. It is worth noting that the statement does not specify that the product on which the tariff is going to be imposed needs to be manufactured in that plant. So in that context, almost every large company, including Sun Pharma, has plans in the US.
Okay.
They would have plans to expand capacities, put up additional units in those plans. To that extent, most of the companies will get exempted from this act, is my initial reading. Of course, we will wait for the details to flow through. Specifically in case of Sun Pharma, we also need to keep in mind if Sun Pharma's major products are finally getting shipped from Europe. Europe already has a trade deal with the US, which imposes 15% tariff on pharma. So it is a possibility that the tariffs on those products will be limited to 15%.
Right.
But what overrides what is something which we need to see once the final text comes out. As of now, I don't see any major risk to the earnings of any of the companies.
Well put, Bino. So as of now, what is your rating that you have on Sun Pharma?
I have an accumulate rating, which means it can keep on compounding from these levels.
So, so going by what we have on the plate right now, Mr. Trump can do anything. But if there is weakness on Sun Pharma, you would look. The advice would be to go ahead and accumulate, right?
Yeah, if any significant weakness in Sun Pharma stocks, I would look at as an opportunity to accumulate the stock based on information available right now.
All right. Would it be too brave to think that generics get off the hook now since he's gone after branded? Would that be too brave, or would you? Some on the street believe that maybe there's a positive read-through from this. Would that be too brave?
Yes, I strongly believe that generics will be exempted because putting tariffs on generics can be disastrous for the US economy, the US healthcare system. Drug shortages can go through the roof, which can hit back at Trump's support base. So generics will remain exempted in the foreseeable future is my strong belief. And in addition, the tariff on the branded drugs, if at all some real, in select cases, very select cases, not across the board, could benefit generic pharma as well.
Okay. Bino, thank you. Just one quick question. Biocon, we spoke with the management of Biocon recently, and they said that there is, they're building a plant in the US, right? So, is all exports into the US then exempt if you're building a plant for something in the US, or only what you build in the US in that sense is exempt?
What I understand from the limited tweet that has come out is that if a company is building a plant, its products are exempt.
Yeah, that's what I also
not
thought.
Specifically
Yes.
The product. It is not specific to the product.
Yeah.
To that extent, if they are building a plant in the US, then its product should be exempted, is my understanding. But of course, we'll wait for the detailed statements.
Yeah. No, got that. And that was a sort of first reading that, I was thinking about how to put it, Nigel. Big pharma, tariffs, big pharma, little impact. That perhaps is how this is going to play out. And something like what's happened with semiconductors. Just go back and see what happened with semiconductors. Something very similar. But of course, I mean, with semiconductors, there was no impact here on India. And with pharma, at least there is some cross-connection with, but mostly it's all generics, etc. Thanks very much, Bino, for joining us bright and early. Siddharth Khemka is with us from Motilal. Siddharth, good to have you here. Let's talk about a bunch of other names as well. Pharma, we've done a bit. Tata Motors, I don't know if you heard Hormuz and Sudarshan talk about this earlier. Stock's been under pressure, the JLR impact. What's your sense?
Hi, good morning, Prashant. Yes, so I think if you look at Tata Motors, we have been a bit underweight quite some time since I think last 2 quarters we have downgraded the stock to neutral. And what we see is that JLR continues to face several headwinds, tariff wars, US depreciation versus some of the other currencies, and uncertainty over the EV transition. I think all those things continue, and on top of it, the strong competition from some of these Chinese players in other regions. So we believe that near-term earnings could remain under pressure. We have cut our FY26 estimates in the last 2 quarters, and we believe that given the multiple headwinds, we continue to remain underweight on Tata Motors, best avoided in the current environment.
Okay, all right. Sid, request you to stay with us. We'll slip into a short break. When we come back, we'll get an exclusive conversation with the chairman and managing director of HAL. Don't go anywhere.
Okay, welcome back. There's about 8 minutes to go for the pre-open session to kick off. What we're going to do is get you a very interesting conversation. By the way, the GIFT Nifty started to move a little bit more on the downside. About 50 points lower is what we have. Defense Ministry has signed a nearly 62,500 crore rupee contract with HAL, Hindustan Aeronautics, to procure 97 Tejas Mk-1A aircrafts for the Air Force. Our colleague Parikshit spoke with the HAL CMD, Mr. D.K. Sunil, who outlined the timeline for the additional 113 GE engines, along with, of course, addressing this news flow as well. It's a rare voice. Listen it.
We've already made an investment of almost 2,000 crores over the past few years. We have 2 lines in Bangalore producing 8 each aircraft. And the third line at Nasik, we've spent close to 700 crores to expand that and make it another line capable of producing 8. And the first aircraft will roll out this month from that line. But the point I would like to make, and which I'm very excited about, is that we effectively have a 4th line in the private sector, where the airframe parts come from the private sector. We get the wings from L&T in Coimbatore. We get center fuselage from VEM Technologies in Hyderabad. We get the center fuselage from Alpha Tokol. We get the vertical tail and the rudder from TASL, it's a Tata Group. So we effectively have a 4th line in the private sector. So this will bring our capacity to close to 30 in the next couple of years. And I think the investments that we have made over the last couple of years are now bearing fruit, and we will be able to meet the requirements of the Air Force in the time frame.
You said that you will soon, in the couple of years, have a capacity of making 30 aircraft per year. By when would you reach this capacity?
See, the private sector today has just started delivering. This year, we took the first delivery of the wings and the center fuselage from the private sector. My assumption is in a couple of years, they'll be able to give us maybe 6 to 8 structures in total. So in addition to the 24 that we have already established, conservatively, I would say we can get 6 from the private sector, taking it to 30 aircraft by 2027.
Right. Just to also ask you about the delivery timeline for the previous order of 83 LCA Mark 1A, Mark 1 Alpha jets that were ordered in 2021.
Yeah, the aircraft production has started. Today we have 10 aircraft on the flight line, which means they have been integrated with the engine, they have been test flown, and they are waiting for the engine. Today we have 3 engines, Cat A engines, that is brand new engines, and we expect another 9 in this financial year. So in this year, we will be able to deliver 12 aircraft. And as you know, the hold has been because of the engine supply from General Electric. And we expect 20 engines in the next year. So I think the production will ramp up from next year onwards beyond 12, and we will be able to reach those based on the engine supplies. Notwithstanding that, our plan is to build these airframes, test them with the Cat B engines and get them ready. And as and when the engines come, we will be able to supply.
So you said, sir, 1 fighter jet you're looking to supply by this month, within September, and how many in October? Because there were some reports that 2 fighter jets will be delivered in October.
Yes, we have 3 aircraft which are ready with Cat A engines as of now. But we have some firing trials regarding the missiles, which is ongoing. So we expect that in October, we should finish these trials and be able to deliver this couple of aircraft in October. That's the expectation. But as of now, we have 3 aircraft with Cat A engines.
Okay, and you're hoping to deliver them by end October?
Yes, couple because we have started those trials, and we are optimistic that once these trials are successful, then we will be in a position to deliver these aircraft.
I would also like to ask you that by when do we expect HAL to sign the follow-on order for more GE engines that will be required for the new orders that you have received? There have been reports that very soon HAL will be signing a deal with GE for 113 more engines. By when do you expect to conclude that?
We have already concluded the negotiations. The financial figures are finalized. We expect in a month, now that this main contract has been signed, before end October, we will be able to sign the contract with GE for the 113 engines. The negotiations and the price has been already finalized.
What will be the timeline now, sir, for the complete delivery of the 83 that were ordered in 2021 and now the 97 which have been ordered?
Yeah, the total orders, both the orders combined is 180 aircraft. So we should be able to close this by FY 32-33.
Okay, some very, very specific takeaways and timelines there indicated by the HAL top management. We'll in fact discuss this and whether it changes estimates for shareholders at all after the break. Need to get into that quick break. Come back on the other side. Of course, we'll also have our technical experts joining in with some trading ideas. Welcome back. 12 minutes to go before our market opens out. Let's quickly, take that question on HAL with Siddharth Khemka, who's been waiting by patiently. Sid, so now we have specific timelines. The management is promising those engines are coming. I mean, he's just told Parikshit on the specifics as well and the delivery. The first of the aircrafts will be delivered in October itself. So will you be looking to rework any of your estimates on the stock? What's the call?
So, hi, Surabhi. I think, yes, that's a big clarity that is coming in. I think not only the new order of 97 light combat aircrafts that was already anticipated, but it represents a significant milestone for HAL, and as it reinforces the visibility of its long-term revenue stream and its positioning within the India's self-reliance in terms of the aviation sector. What we are also seeing is that deliveries are scheduled with the engines now getting delivered over the next few quarters. We are seeing strong bump up in October to December, where 6 more engines will come up. So definitely, we are working on our numbers. We were anticipating a much of it already pegged into our numbers, but we see a strong growth in the near term as well. So it gives a lot of clarity for the near term. Long term visibility was there, which continues. And in terms of valuation, we see that compared to some of the other defense players, it is trading at a significant discount given these kind of uncertainties, which now gets away. And hence, we believe that HAL is among prime for a valuation re-rating candidate within the overall defense space. So we maintain a buy rating on HAL with a target price of 5,800, giving one upside potential of 20%.
Ah, 1,000 rupees upside from where the stock is right now. Got that. Okay, Siddharth, thank you very much. You have a great Friday. And thank you for joining in today. Well, let's quickly move on to the technical calls as well. Quick glance at the Nifty, down 119 points, by the way, in pre-open. So it is looking a little tough. Mitesh is with us along with Shrikant this morning. Gentlemen, morning. Great to have you in. Mitesh, it's looking tougher and tougher. What now? So we get this gap down. What do you do then?
Good morning, Sumi. So I think, the way we have kind of slipped in the last about 6 or, if you count today, it will be 7th session. We've broken the short-term averages, we've broken the near-term support. So the idea is that while there is still a chance of an upside happening, I think, one should wait it out till you see some kind of a reversal and the market starts to capture 25,100 again. If it doesn't do that, good chance that we'll see the decline extend to about 24,700. And that is my worry. I think, so the markets could be slightly more volatile in the days to come by. The bank Nifty also, yesterday kind of just closed below that 55,000 level, just marginally below that. But closing below that was a slight negative. So the bank Nifty, if it doesn't capture 55,100 immediately, you might see the bank Nifty go down to 54,500 to about 54,400 range. And that means that next few days could still be slightly more biased on the negative side.
Okay, all right. Let's get to Shrikant as well. Shrikant, any Nifty trades today?
Good morning, Sabi. I think, we believe that the markets are deeply oversold, and in such type of markets, we should look for taking some long bets very close to important support levels like 24,800 or 24,850. Today, maybe we may see the markets opening somewhere close to those levels, and after opening around those levels, we can expect a rebound in the market. That's my overall view. We were expecting market to stop around 25,150, but it has broken all the levels. And today, if we see the statistics of options, then based on that, the markets are completely oversold. At current levels, we should look for buying some stocks from the metal space. In that, Vedanta we like, which is around 461, 462. There we are expecting stock to move towards the levels of 475 or 480. It has been consolidating below the levels of 450 for a longer time, nearly 10 months. Now it is comfortably holding about the same, which is positive, and we can expect further more activity in Vedanta. The other stock on which we are bullish is Hindustan Aeronautics as well as Bharat Dynamics. I think this defense space should do well in the near term. In that specifically, Bharat Dynamics is showing a lot of strength. It is around 1580-85. There we are expecting stock to move towards the levels of 1650 or 1670 sort of levels. We can keep a stop loss around 1550 for buying Bharat Dynamics at current levels.
Okay, so going with some defense names over there. Mitesh, what about you? Stocks for the day?
Surabhi, I have a mix of buys and sells, 2 buys and 2 sells. On the buying side is Hindustan Zinc. It's broken out of a 4 or 5 day kind of consolidation between this 462 to about 450, 448. And that should mean possible more upsides to about levels of 480 to begin with, and maybe eventually higher levels. So buy here for a target of 480 and keep a stop at about 459. Also a buy on Oil India with a stop at 407. Here I would look for targets of around 430 in the near term. On the selling side, Blue Star, I think, after a good rally is now showing signs of profit booking and correction. So sell with a stop at about 1955 for targets of 1870. And FMCG pack, you've seen Dabur and HUL correct. I think Marico is on the verge of giving a short-term breakdown on the chart. So if it breaks 700, take a short with a stop at 710. Look for targets in the range of around 680 to about 678.
Right. Thanks very much for that, Mitesh. Appreciate it. Sudarshan, thank you very much for joining us with those calls. Just want to quickly look at two names. Sun Pharma in the pre-open. The pre-open is, by the way, finished. Let's just put up Sun, Wockhardt, maybe Lupin. Sun is down about 2.6. Look at Lupin, Wockhardt, 2% on Wockhardt, and Lupin, I think, is the other one. Maybe a bunch of others as well. I mean, you've got lots of listed and large and decent-sized companies out there. And we'll actually, let's just have the pharma stocks all at the bottom in terms of the pre-open, in terms of where they've finally ended. So we'll do that. The other big story which we want to address, of course, is the Vodafone Idea issue, the AGR dues, right? Supreme Court is hearing a plea filed by Vodafone Idea today challenging the AGR demands raised by the Department of Telecommunications. Ashmit is here with more on this. Ashmit, take it away.
Well, a crucial day today as far as Vodafone Idea is concerned. The Apex Court is likely to give clarity on the way forward on the resolution of the AGR dues. I use the word resolution on account of the language being used by the centre in this particular case. Bear in mind, there have been previous occasions where the company has asked for relief. On those occasions, the centre's position, the DOT's position has been is that this is an issue best left to the wisdom of the court. This time, however, there's a marked change. The Solicitor General, in the previous hearing, which took place on Friday of last week, the Solicitor General had a very different language, saying that the government now has skin in the game, the government has a 49% stake, and that now there is a change of facts on the ground, which is why the centre now feels that there is a need for a solution. There is a need for the court to grant indulgence to the centre while it's trying to resolve this issue. So for the first time, the centre batting in defence of a resolution of the AGR issue. What that resolution is, what that entails is what we need clarity on. The Solicitor General, we understand, will be addressing the court shortly. This matter will be taken up shortly in the first half by the Apex Court, and that's perhaps we'll begin to get more clarity on what this roadmap to a resolution may look like as far as the AGR issue is concerned for Vodafone Idea.
Thank you for that, Ashmit, and very nicely explained that change or the slight sort of shift in the government's stance is extremely important to note, what we saw last Friday. Balaji Subramaniam, Vice President at IIFL Capital Services, is with us. Balaji, thank you for joining in. We've had these discussions several times in the last, I think, couple of years, every time we're nearing a hearing. But like Ashmit explained, today is very, very important because it was all about a demand of, I think, 9,000 or 10,000 crores. But the way the case has been sort of argued in the court, Vodafone itself and now the government seems to be, indicating that this is much bigger than a supplementary AGR demand. Your thoughts on whether you would expect any sort of a breakthrough?
Good morning. Thanks for having me on the show. So firstly, the plea that is getting heard is on the 9,500 crores of additional demand that the DOT has put up against Vodafone Idea. While that is something which is additional to the 76,000 crore AGR liability that Vodafone Idea has got, I think the bigger picture has moved to whether, the Supreme Court officially gives some leeway for the government in terms of, taking any steps towards the resolution of the AGR matter. Because, the government is in a slightly tricky position because earlier we have had Supreme Court judgments coming hard on both the government and industry, saying that whatever was mentioned in the original affidavit filed in 2019-20, those are final and, they are not subject to any recomputation or change. On the other hand, now the government has 49% stake in the company and they're also committed towards ensuring a three private player market structure. So I think what the government is looking for is, some official clarity from the Supreme Court in terms of, the degrees of freedom that the government can exercise, so that, they can start working towards potential relief measures. And as we have mentioned in the past, these relief measures could be either extending the moratorium further or extending the overall timeline of the payment of the dues itself, or it could be some change in the NPV of the liabilities. So there are multiple options out there, and each option would require a different degree of freedom. I think before the government wants to explore these options, they want some written order from the Supreme Court, which kind of ensures them that they are not acting against the past orders of the Supreme Court. So that is how I would look at it. So the tone has changed positively, but I think one has to see as to what eventually the Supreme Court says.
Excellent points, Balaji. So from a shareholder perspective, some of the options that you laid out, I mean, the government's made it very clear that they're not looking at taking majority control of Vodafone Idea. They're not looking to cross the 50% threshold. The other options that you laid out, maybe just simply extending the moratorium period, extending the repayment timelines, to what extent would they help? Which of these options that you just described would perhaps really give the company a fitting chance at some sort of a revival?
So I think if the moratorium is going to be only for a short period, like 3 or 4 years, then that won't really change things, because it is just merely postponing the problems to a future date. And again, we will reach the same situation that we are today after 3-4 years. And 3-4 years is probably too short a timeline for the company also to turn around its operations. So I don't think the cash flow issue, even with some moratorium given for a short period, like 3-4 years, will completely solve the matter. Then the other option could be that...
Balaji, I have to, sorry, I have to interrupt you. We have, we got the gist of what you're saying. Thank you very much for joining us. Apologies, we're just hitting market open, came to you late, our fault. Thank you for being here on the program, though. 24,840, 24,850 is where we are at on the Nifty. The Nifty Bank is starting about 0.28% lower, 54,840 or so. You've got the Sensex down about a quarter. You've got the small cap index down about 0.17. The mid cap index is down about 0.15% as well. More down than up is what you have. About 1,000 stocks are lower and about 700 stocks are higher at this stage. And Nifty losers are all at the bottom of the screen, but we should have a plate on all the pharma stocks specifically as well. Sun is there. Dr. Reddy's is there amongst losers. And Cipla is there as well. More down than up, but nothing dramatic, right? It's been a drift lower. Market yesterday on the Nifty at least broke some key averages. We'll have to see. 24,800 is the 61.8% retracement of the entire 1,000-point rally that we had from 24,400 to 24,500, 25,500 or so. So 24,800 by close, I think, is the level to watch for a confirmation one way or the other. So it's about 70 points lower to begin today's session. Survi.
Okay, let's take a look at what's down this morning. On the lower side, Sun Pharma straight away. The cut is about 5% as of now, 4.7% to be precise. The others have also been dragged lower. Cipla, Dr. Reddy's. Remember, it's the issue was sentiment and overhang. I mean, could it be, in some form, generics next? Could there be something more coming? And that's what's weighing on the entire pharma side of the market. Apart from that, some of the other names that are weak include a Bajaj Finance, Shriram Finance. The NBFCs are starting lower. ICICI Bank is lower by about 0.8%. IT is in no great shape. TCS, Infosys, all on the red side of the screen. Wipro is lower by about 0.5% as well. The Accenture guidance is not inspiring too much confidence about the next couple of quarters. So that's where the cut is coming in. Some of the consumer names like Nestle and Titan also slightly lower. Even Trent for that matter. So consumer, IT, pharma, all on the lower side. Let's see what's working. L&T up 1.3%. BEL is continuing its good form from yesterday. Maybe we can also put up Hindustan Aeronautics. The stock yesterday was up just about 1% or so. Now it's up about 0.5%. And of course, metals have had a great week so far, and that story continues. JSW Steel, Hindalco still flashing a little bit of shine on the green side of the screen. Nigel.
Well, that's right. A few stocks that are deserving special mention. Finiotex Chemicals ahead of that board meet that they have scheduled. Stock is up 4.5%. Right, that stock in fact comes up in the screen. They bagged an $18 million order from South Africa. For the time being, big return. Size of the order not too large, but the street seems to be enthused on that one. So that's why you have RITES that's up close to around 5.5%. Big move is what we're seeing. Bottom of the screen, Titan is calling for some attention. Massive large trade out there, 0.7% equity changing hands. We'll keep an eye out on that and try to get you further clarity on that front. Polycab, yes, we had JP Morgan Fund, MS, HDFC Life among the buyers as the promoter sold close to around 1.5% stake. So that stock as well comes up in the screen, holding with mild green as we speak. What else? Sun Pharma is under pressure. You have Lotus Laboratories that's under pressure. They're coming up in terms of the top losers on the downside. So both those two stocks should come up for you. Actually, the Pharma index itself is under the weather. But going by what all we have, it'll be interesting to see whether or not we do end the low point of the day. We saw sentiment got hit on the tech space, and that index hasn't recovered all of this week. So let's keep an eye out on both those two indices. Prashant.
Well, that's the lay of the land, right? It's down about 0.3%. And we've sort of continued on this slow drift lower after the high that the market made at about 25, what was it, 500? It was a nice 1,100 odd point move that we had. More in a bit. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers. Someone who looks at companies bottom up and has good ideas all the time. Not all the time, Sanjay, maybe overstating the case. But great to see you bright and early.
So you, Nigel and Surabhi.
Absolutely wonderful. Sanjay, talk to us a little bit about this pharma business from the US. We've had a couple of analysts join us from the morning.
Right.
And, I was taking the opposite side, maybe just as a little bit of devil's advocate, but maybe angel's advocate, that maybe this removes overhang because he's done on pharma, it's branded, it's big pharma, he's not touched generics. Of course, I mean, you can always argue what stops him from targeting generics next. But from a stock point of view, just thoughts and your way of looking at it.
Yeah, I think, let's start with what happened in IT, right? You suddenly saw a notification on the H1B raising of 1 lakh on the incremental issues of visas, H1B visas. So the direction is clearly not in the right context. Like, they are trying to do something quite ad hoc, which is very unpredictable and it's very, very difficult to predict what will happen to these global businesses. So I think market is nervous on that. Rightly, this is for specialty exports from India to them. I mean, it's not about a generic. But, he also made a statement a few weeks back that the prices there are very, very high and they need to be slashed down. Now, if that happens, then obviously they will tell the generic pharma companies to take some part of the pressure. So I think that uncertainty is what is reflecting in the prices right now. And it's rightly so, and it's very tough to take a view in the near term.
Okay, hi Sanjay, good to see you. So pharma, things are still up in the air. But, one sector where you were relatively more overweight, I think, was autos, if I remember correctly, Sanjay. And that's played out very, very well. Your portfolio will be looking much better because of that. What do you do now, though? The stocks have, seen a good run in the last 45 days since that hint came in with regard to GST rationalization. And now we're getting into the strongest consumption period. How do you approach this sector since you were as is overweight?
Yeah, no, we are overweight and it helped us. So Maruti helped us. Mahindra, we were all throughout positive, almost now for 2 years, which worked very well. And then, while Samardhan Motherson is a global company, but we really like their aggressive expansion strategy and the unlocking they can do. I mean, there could be near-term concerns, but genuinely we believe this could be one of them which can meaningfully, what we call as can double in 4 years. Then this is one company we like, despite it being global. And of course, we had some Tata Motors. We took a knock because of this unforeseen event. While we were okay with the near-term issues, so this is something which will be hitting them for a while and causing pain in Q2 and also maybe Q3. But overall discretionary space, we were positive. Now I think, they're not like Maruti is not cheap. We own it, but the whole thing is earnings will be minor upgrades from 4, 5, 6% volume growth to 7, 8%. But the valuation re-rating has significantly moved up from 16 times to 18, 20 times. So they're not cheap now, right? So we'll hold on, but we are now cautious. We'll not book profits yet, but we'll not buy.
Hi, Sanjay. Good to have you on this Friday. So there's Pharma, there is IT. Those US hits keep coming, right? Even H1B visas. Same time last week, we were talking about IT. But I think as per what I remember from around March, April levels, you had some exposure, not much, but some exposure to some large cap names as well. I'm not sure if you've pared that down, if you've sold it. What's the stance been? And are you looking at a different form of services? I mean, these digital businesses, the likes of your urban company, Eternal, etc. What are you doing there?
So I tell you, IT, we are underweight now for 3 years. We had persistent and Coforge, but luckily we sold off because we really found that there could be uncertainty. And luckily before this pain, we own Infosys because we don't go zero on a sector like IT, and we are underweight with Infosys with a mild overweight, and that is hurting us. In terms of the new digital piece, we've evaluated each of them. We held on at one point, PTM, delivery, but we find them very, very expensive, So like Manish said, these are like Hussein paintings, where you need to buy at any price. We think we agree to that, and we are really finding very difficult, given our style of car, our valuation of a portfolio is 14 times. But consumption, we like telecom, we are big overweight, we've got Indus, we've got Bharti, we've increased. So we will play consumption through those pockets.
Yeah, this is a very interesting. First time I'm hearing stocks being compared to MF Hussain paintings.
It was so nice, so right also, right?
Yeah, it's just there, right? You got to take it or leave it. In that sense. Actually, my next question was telecom and Indus, Sanjay, which you find attractive, right? It's moved up a little bit, maybe 10% off the lows or something. And today, by the way, the case is being heard in the Supreme Court. I remember a lot of people were asking how is this hearing different compared to all the previous hearings, because the court has been very clear. We spoke to a lawyer who gave an interesting angle. He said, this time, it looks like so far they followed the DOT's recommendation. This time, the government seems to be stepping in and saying, well, we want to maybe come up with a proposal to resolve this. And that seems to be the difference in that sense. So it's important for Voda idea, but I think also for Indus.
Yes. So, Bharti, I just take Bharti. Bharti is a structural play. They will increase the market share. Even if Voda exists in a weaker form, it will still, Bharti can genuinely do very well in 3-4 years, right from ARPU increase. Clearly 60% of the increase in ARPU is falling on the bottom line, revenue market share increase, the subscriber gain, and of course the other businesses now like data center, they are very, very large players. So you will see some of this unlocking of those values in digital space by Bharti in 3 years. Near term, it is not that cheap, but we will hold and we are overweight. We want it through partly paid up. Indus Tower, our thesis is from a Vodafone perspective, first, from a Vodafone Idea perspective, I read the whole judgment, and while, what we think is, it's difficult to first predict what the judgment could be, but the government stand is clearly towards and they have been saying that we need a 3-4 player market, including BSNL. So we think that, there certainly can be some relaxation in terms of the payment tenure. I am not very sure about the liability getting reduced, but it is difficult call. But the government intend that Vodafone will continue itself. I think, they will certainly want, with the help of judiciary, to make some rule. But Also, we believe that it's a very tough road ahead with a debt of 2 lakh crore. Let's say even if there is some reduction, it still would be, later on deferment. So it's going to be a tough scenario for Vodafone to move ahead. But from an Indus perspective, even if we take, let's say Vodafone, from an Indus perspective, if Vodafone goes belly up, which I hope it doesn't happen, those towers will be required by somebody, right? So if Vodafone's EBITDA contribution to Indus is, let's say, 5,000 crores, it will not be zero. It will be 3,000 crores. So even if you reduce that, and we like the strategy recently on Africa or the solarization of towers, and we believe the growth rate will get better from 6-7% to 12 to 14% for Indus Towers. And it's an absolutely net cash company. So there is serious value, a little bit of growth, and we could see re-rating. So we've taken a bet that, Vodafone in a weaker form will help Indus. And then if it gets stronger, great. And it's really cheap at 5.5, 6 times a year.
No, so you own it? Indus you own, but Vodafone you don't own, right?
No, we don't own Vodafone.
Yeah.
Indus Towers?
Yeah. Yeah, all options are on the table, right? And we've all seen the previous cycles. We've seen debt getting converted to equity. We've seen banks starting to own highways and power plants, and anything's possible. Anything's possible when people decide to get down to it, as long as it has the court's blessings, right? So let's see what comes up. Promises to be an exciting day. Okay, very quickly, entering the last leg of our conversation, consumption. You mentioned that that's something obviously you're looking at. It's a very wide basket. So can you give us some specific names? What are you most optimistic on here? Which side of consumption? I'm asking X of autos, that we've already discussed.
Yeah, so X of autos, we have telecom, we think is consumption. Bank, financial, retail credit is consumption. Housing is consumption. But we don't own FMCG. Because FMCG, it's worked for, again, 3 years. Interim, it does give us some pain. But we genuinely believe that even after this GST cuts, it's going to be taking a while before they get back their volume growth rate. And we are actively open to watching it, but we still feel valuation on implied growth are still very, very high compared to what they've delivered in the last 5 years. So we are zero on FMCG right now. And we are looking at each of the large players, Trend, Titan, but we don't own them. At a price, maybe we'll consider.
So that's FMCG and nothing else on QSR, on your footwear and value retailing, none of that?
No, we don't own them. Value retailing also is very expensive, 70, 60,
No value in value retailing, huh?
Absolutely.
Okay, got that. Just overall, Sanjay, I mean, the market as a whole, I know we ask this question all the time, but earnings have to move up, right? Are you optimistic that we'll actually see double-digit earnings growth this year?
Right. So I'll tell you bottom line. What we are doing, we have some capital in our AMC. So we're systematically investing every month. Because I think from here on, and we are telling that to our clients also, the second quarter is going to be weak because all the reasons we know. We are watching third quarter outlook, which is very important. But I really feel that the time correction and price correction, time correction has happened. Price correction could be there, and 2-3 months more and 3-4% lower is the maximum risk we see. And I really feel that third and fourth quarter will see slow recovery. And then FY28 is what people look at. And if we take 14-15 rupees earnings by then, and these are on broad conservative estimates on 27-28, India will still, I feel, get 20 times. That's 29,000. So that's 18%, 16-17% in 16-17 months. So I think a 3-4% lower and some time correction, and I think bottom of stock picking should start.
Okay, all right. 120 points lower is where the Nifty is at now. Sanjay, thank you very much. It's a fantastic discussion, and so glad you're with us here this Friday morning. Have a good weekend.
Have a nice day.
And talk to you soon again. So, by the way, the market's now below 24,800. I can show you this visually, and we'll try and do that. Basically, that entire 1,100 point move has been now retraced, which basically means that, that was what 24,800 was. I mean, either you're continuing that up move or, I mean, that up move was ended in a fresh impulse, maybe lower has begun. And you're right there as we speak. So we'll have to take it step by step. 24,770 is where we find ourselves at. And the market, by the way, has moved a little more decisively lower. And look at market breadth. Yeah. 2,100 stocks are lower, and we've got about 400 stocks which are higher. So it's 5:1 slam dunk in terms of declines to advances right now. Surabhi.
Absolutely. I mean, and we've of course been reaching all kinds of levels in the downside. That's how it's going. By the way, on the pharma stocks, there's a mild recovery. Let's just add that. For instance, if you look at a Sun Pharma, which opened with a 5% cut, now there's some pickup from the lowest levels. The pharma index is still down, but Sun is, trying to fight back to some extent at least. Speaking of pharma, let's get to our next conversation. And Wockhardt is the company on our radar. We have Mr. Khurakiwala joining in. There's so much to discuss, including the company's own plans and some positive developments around some of the drugs that they're developing and discovering. So great to have you in. But we first, of course, have to get to the overnight news, right? Just a couple of hours back, this 100% tariff on branded drugs, as well as on anything which is IP protected. Let me just start right there, sir. You, of course, decided to get out of, US generics earlier this year. But then you are developing a lot of the other, branded drugs or specialty drugs, perhaps with the hopes of getting back to the US market at some point in time. Now, do those plans change with what has happened?
One of the important things is all our new molecules like Zenec, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Zenec in USA.
Okay, so you don't think it will have a significant impact? Since we're talking, specific to that drug, Zenec, what were the timelines that you were working with in terms of development, and how critical would the US market be in the scale-up and the sales of this particular drug?
We would be filing to US FDA sometime next week. We would be filing Zenec next week.
But sir, you don't, where is the drug being produced? Because the order seems very clear that the tariff is going to be there 100% unless there is manufacturing in the US.
It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Mr. Khurakiwala, good morning, sir. Prashant here.
Yes, Prashant.
The way it's all on the back of a social media post, right? That's how this is being conducted from President Trump. So details, etc., we don't know. We've been talking to analysts. The other question is, for example, in semiconductors, similar thing was announced. All companies said we are investing so-and-so, so-and-so, so-and-so. How much will happen, we don't know. And then nobody's tariffed anything. So, and here also, the post seems to suggest if you're breaking ground, if then you're exempt. So I guess most companies will rush to announce something, and that seems to be the target, right? That seems to be the motive for doing this, Mr. Khurakiwala. My question is there a way around this by doing exactly that?
I'm sure, once we understand the whole subject, one need not have to take up at the face value of tariff.
Correct.
There are approaches and methods available where overall one can reduce significantly the impact of tariff.
Yeah. Is there a broad thinking that maybe, and the other question is if you announce something in the US that we will are only what you make in the US exempted, or what is coming out of Europe also, or elsewhere also exempted? With one manufacturing base in the US, does that mean that everything that you send into the US is exempt? That clarity is also not there.
So it's very difficult for me because I have not read this latest news of 100% to comment anything on that front. But I must tell you that all our new molecules are not manufactured in India. They are researched in India, discovered in India. They have a global clinical trial, and mostly they are getting manufactured in Europe.
This will not, if this stays, right, and this doesn't, there's always a starting position and then it kind of comes down and it's negotiated lower, and hopefully it will.
Yeah, we are looking at about 18 months to 2 years period before our first drug would be in the market.
Exactly. And by then the situation could be different.
What happens during the meantime?
Yeah. Now, let's just assume for a minute, this is all theoretical, that it does not. Would you look at, you said there are ways to mitigate it. So, for example, you license this to somebody making in the US. I mean, is that what you had in mind in that sense?
I cannot comment on it at the moment. We will have to examine both from a business strategy point of view and a tax planning point of view.
Mr. Khurakiwala, before we move to other subjects, just a final word on this. We've discussed what this means for you and how you will take a key drug like Zynic into the US market. Just a sense on what this could mean for the rest of the industry, the few players who are selling branded drugs in the US. I mean, at 100% tariff, is the business viable at all? Whether it's for you, when you will be, of course, exporting it through Europe, or for anyone else who could be exporting from anywhere, including India?
I think there are approaches available because conceptually we have visited this subject, and it is possible to get the product in the US market at a lower cost. I cannot discuss this in detail because we have just explored this possibility and we haven't come with a very specific view.
Okay. Sir, as far as, and I know this is a speculative question as of now, maybe unfair to ask, but let me ask it anyway. Do you believe that there could be some measures even on generic drugs? It doesn't impact you. You've already sold the business ahead of the curve, so to speak. But, how would you assess the possible implications on the rest of the supply chain and perhaps even the future of generic drugs being sold in the US at this point?
See, Bocart is not, has exited a generic business completely from US. So as a company, we are not affected at all. But talking of industry as a whole, it's very difficult for the US to have drugs not coming out of India because 40% of entire usage of medicine in US comes from manufactured in India. And if there is a shortage of drug because of any other reason, it will have a catastrophic effect in the healthcare management in the US. So either the levy will be passed on to the user, that is to government or to insurance companies, and the prices of the drugs will go up accordingly.
Okay, sir, let's also talk about the other development favorable for the company, which is what the Lancet Journal is saying on McNuff. In fact, if you could just highlight this point as well. So what is the data and what are the implications then for the further scale up on McNuff?
See, what is important here, it is the first publication from India which has been covered by Lancet. This also represents the integrity and thoroughness of our clinical work and the molecule itself. Because we have been in discussion with Lancet for nearly 6 to 8 months, and they have collected all possible data to make sure that whatever is published is accurate. So I think from that point of view, it is a major milestone for WOCAT and for India of the quality of clinical and development work we can do, which is of a global standard.
All right, Mr. Koragiwala, final question before we let you go. For the year on the whole, you were indicating there's going to be some margin guidance. So could you tell us what we should work with for the company on the whole? What kind of revenue growth should we work with? And debt reduction plans? 3 numbers, sir.
We have exited the US market, as you know. Then we incurred a loss of about 8 million last year. And we will carry forward some exit loss of about 3-4 million this year also. But our second half would be significantly better than the first half. And we would be also investing in a new molecule launch. But we would certainly improve our margin by at least 200 basis points.
Okay. And growth on the top line, sir, on a like-to-like basis, as you said, you've exited a couple of businesses. So what should it look like? If you can give us
but it will be double-digit growth.
Double-digit growth. All right. Okay, Mr. Koragiwala, appreciate you joining in. Looking forward to chatting up with you as we get some more clarity with regard to these tariffs on the, in the United States and the way ahead. For the time being, we slip into a short break. On the other side, we'll be joined, by the Federation of Automobile Dealers Association. We'll also joined by Mr. Gulati of United Automobiles, who will be joining in to tell us what is the sense and how are things panning out on ground for the auto segment. Welcome back. Well, the markets saw a sharp downtick. Now it's trying for some kind of stability on ground. So that's going to be important to track. The Nifty Bank actually has moved to the 20 DMA. So in terms of the market mode, the Nifty has broken the 20 DMA decisively, but the Nifty Bank just holding on to the 20 DMA. So that's going to be the crucial swing factor for today. For the time being, screen is not looking good by any stretch of imagination. Headline index, breadth of the market as well. The hope is we see some recovery. Well, let's get to focus on the auto space then. And we have Mr. Vigneshwar, President of Federation of Automobile Dealers Association, and Mr. Vinkesh Gulati, Director of United Automobiles and former President of ADA, who joins us on the show. Hi, gentlemen. Good morning. Hope you're revving up the engine. Mr. Gulati, I think you're already in one. Tell us, Mr. Gulati, first, what kind of feedback have you seen? GST 2.0 is supposed to be setting up the industry for the best possible next 30 to 45 days. What's the feedback you've got?
So awesome. We should thank our Prime Minister for such a great reform. The kind of demand hike we have seen, it's not ever seen yet. So there are a lot of other issues where the dealers are stressed. But if I talk on the demand, the inquiry level is spooked like anything. The 22nd, which is normally the first day of Navrat, where it is more of deliveries, we have actually seen quadruplet inquiries and booking happening. Most of the dealership couldn't able to handle that kind of walk-ins happening in the system. But too happy, this 40 days is looking like the best ever festive season forever, I think, because customers are very excited with the kind of price cuts happening. And lot of OEMs, including Mahindra and Bajaj, also has given them a special discounts over and above the GST cut, what has come because of the 2.0. So overall, customers, whosoever were in loop, is happy. And what luckily we have seen is there are at least 20-30% additional customers who weren't thinking of buying a vehicle during this festive period also coming in and doing the booking, where we are now confident to see a better year-on-year festive period going ahead.
You want to give us some numbers, sir, Mr. Gulati? What kind of numbers have you seen, say, in the first few days? There were some reports that suggested blockbuster numbers. Do you have a sense on any of that?
So I'll not be able to give you the actual numbers. Okay. Yes, is the right person to give that.
Absolutely.
But frankly, our bookings has actually doubled in the first 3-4 days. Whereas if I compare if I compare festive to festive bookings, when we start the festive, we have double bookings than what we had last year. So obviously we'll see a major blockbuster festive this time, but I feel Vigneshwar would be better to give you the numbers point.
Absolutely. Let's get Mr. Vigneshwar then, to comment on this. Hi, sir. Good morning. Good to see you in good times, huh? Even from a stock market perspective, we're talking about the markets being at the low point of the day. The auto index actually is at the day's high. So that's telling you the kind of mood towards the sector itself. You want to, break it down for us, the feedback you've received, what numbers do you all have on ground, and which segment actually is seeing a lot of traction?
So honestly speaking, I won't be able to give you numbers because we don't have tools to measure all these inquiries and bookings and all that. We only have tools to see how many deliveries have taken place, and the deliveries have been doing quite decently well. I have given a few calls around and found out that the entry-level segments, both in the two-wheelers and the four-wheelers, is where most of a lot of bookings is coming in. As Vinkesh rightly mentioned, a lot of people who were not thinking of a bike or a car ownership have actually jumped into the bandwagon. So I would really like to thank our Honorable Prime Minister, our Honorable Finance Minister, along with all the state GST members who have actually come together, thought as a one mind, and taking this landmark, path-breaking GST reform. It has made GST simpler, and more importantly, it has also brought down the costs, not only in automobiles, but in every sector, every service, every product, the prices have dropped. And this would really help in terms of customer going out there and shopping. And the customer going out there and shopping also means that there's a lot of circularity of money, so which again adds to the buoyancy.
Mr. Vigneshwar, hi, good morning, Surabhi here. Let me ask you for two numbers if possible. Even a rough estimate will help. Before the GST announcements, what was the festive season growth in retail sales that you were expecting? I mean, like to like, festive season last year to festive season this year. And now after the GST cuts and seeing the action on ground and the price discounts, what is the estimate? How much growth will the industry see this festive season?
I can give you an estimate of what we're expecting this festive season is anywhere between 10 to 15%, which is very good given the fact that we've been growing at 2.5-3% in the car segment, the passenger vehicle segment. And this year we've been only growing in the low of single digits even for the two-wheeler segment. So probably 10 to 15% is what we're expecting minimum. And that's going to be a breakneck growth, taking us back 3 or 4 years before. 2001, 2002, we had really, really good double-digit growths. We should be back on that track.
Okay, 10 to 15%. Yeah, industry hasn't seen that for a while. Specifically, Mr. Vigneshwar, on small cars, right? And we haven't seen even manufacturers sound so optimistic when Maruti has been saying that they're seeing the best ever inquiries in years in the small car segment. That segment was almost written off. Is this going to be a more durable revival? Will we see a bigger product portfolio shift? I mean, the market had gone entirely one way, and that's SUVs. Do you expect any significant shifts after the price cuts?
I'm not too sure about it. The SUVization, as I call it, of the world is taking place. As not only in India, throughout the world, SUVs are taking a lot of space of the car markets. A lot of shift is happening towards SUVs. In India, I don't see a major shift because even in India, the premiumization of the market is happening. People are going to higher end products. But a lot of customers who were not thinking of buying a two-wheeler, an entry-level two-wheeler or an entry-level four-wheeler will be thinking of it right now, are thinking of right now, and we are seeing them walk into our showrooms to make a buying decision. So that's amazing, because all this having a large base in the entry level segment will lead to better sales in the future too, because they move up segments. So I think this is going to be sustainable. The small car and the entry level two-wheeler revival, and it's going to be here to stay.
Okay. Let's get back to Mr. Gulati as well. Mr. Gulati, so the estimate is 10 to 15% growth this season for passenger vehicles, as Vigneshwar said. You give us your sense on the two-wheeler market as well, domestic sales. I mean, some companies have been struggling in the past couple of months, others have done well. But in two-wheelers, what should we expect in the entry-level segment up to 125cc and beyond that as well?
See, actually, we are seeing great inquiry pull up in 100cc also, which wasn't there before. And two-wheeler has always struggled where the major market was. And slowly, if you see with the electrification happening, the motorcycle sales going down, even 100cc going down. With this GST reform too, we are seeing that 100cc bikes have already started getting that kind of inquiry we used to get, around 6-7 years back. And I'm hopeful that will increase the pond. So we had seen two-wheeler, the maximum in 18-19, I feel. We haven't reached that figure. But with the kind of GST cut we have seen, an approximate 5,000 to 10,000 rupees price cut in the entry-level 100cc, 125cc, we are sure that a lot of customers who were not thinking of buying a new vehicle, new two-wheeler will come in. And it will benefit more on the rural side and additionally the salary class people, which is on the lower strata, will obviously come in. So we are confident of having, like Vigneshwar said, the entry-level cars are seeing momentum. We are also seeing a similar momentum at our Bajaj showrooms on 100cc. And if I talk to my Hero co-dealers, they are very, very excited because of 100cc prices going down and the kind of inquiries they have now started seeing because of that. And if that actually comes to conversions, I feel two-wheeler market slowly and steadily can go back to its glory days.
No, absolutely. And I think we'll have to track this one as sales proceed and, the festive season goes on. It's a real pleasure to speak to both of you to get an update from the ground. Mr. Vigneshwar, thank you very much for joining us. And Mr. Gulati, really appreciate you coming on as well. So that's markets, that's autos for you. 80 points lower. We've recovered a little bit. We're just above the 24,800 level. I think that's the critical number. The low today, Nigel, has been 24,760.
Yes.
In that sense. Yeah.
And the pharma stocks, they are the ones that are seeing a big recovery from the lows of the day. Just pull up the index itself. That's recovered considerably. In fact, Sun Pharma stock was down 4.5% in the first 5 minutes of trade. That's now down close to 2%. It's still down, but there is a bit of a recovery. Tata Motors got spanked yesterday. That stock, in fact, has fought back. That's up close to around 2% as we speak. So good going out there. And the auto pack, as we had Mr. Vigneshwar as well as Mr. Gulati, both of them saying things looking very, very strong on ground, inquiries, demand as well. So for the time being, the street is buying into that, and that index, is doing well in a market that's actually seeing some selling. The problem really is tech. Tech is not able to see a relief rally. Wipro moves to the low point of the day. That's the problem pocket. Asian Paints as well, after seeing a good rally from the recent lows, that's given away most of that rally. It's back down to around 2,300 rupees odd. And IndusInd Bank, that's a stock that's moved a little bit lower. The Nifty Bank, very, very close to the 20 DMA. It needs to hold on to that mark. Surabhi?
Okay, so those are some of the stocks in focus. The market, well, at least it's not a one-way down move. If you want to be an optimist, you have to look at that side of the story as well, because Nifty had breached 24,800, and now there seems to be some semblance of stability. And by the way, look at pharma stocks. Sun Pharma, remember we started with a 5% cut when the market opened. Now it's down to about a 2% cut. But the worry is around IT now. A lot of large cap IT is under a lot of pressure thanks to Accenture's guidance. Remember, Accenture is guiding for 2 to 5% growth in this year versus growing at 7% last year. So that obviously has soured sentiment. Once again, Tata Motors is, of course, zooming ahead, on some positive news around the company. I'm just looking at the big losers now because the mid-cap market obviously is falling quite a bit. Wari, where there's an investigation that's started in the US. This is as per Bloomberg reports, because of circumventing some of the import rules. That stock's down 5.5%. So it's the big one. Wockhardt itself is down about 5.5%. You just heard the management speak to us about their plans and implications of the 100% US tariff. Okay, well, with tariff, let's actually get back to the big story itself, and Ekta is back with us. Ekta, so some of these stocks like Wockhardt, I mean, we just heard Mr. Khurakiwala explain how they'll still go ahead and file for, one of their key drugs, but I think the market is concerned. But you tell us more, I mean, Sun itself, what more now?
Well, just to reiterate that as of now, this 100% tariff is going to be applicable to patented and branded drugs. And if in case you do have any kind of manufacturing in the US, your building capacity in the US, then you would be exempted from it. Now for Sun Pharma, they have, the maximum exposure here because they do have the branded portfolio of drugs which will be possibly impacted. So that means that they will have their specialty portfolio, which is around 19% of their total sales. But they have indicated that they do have US operations. When they were quizzed about it in the previous call in terms of onshore manufacturing, they said that they are sufficient at this point in time when it comes to onshore manufacturing, or that was what the implied view was with regards to Sun Pharma. Whether or not they need to, go ahead further, that'll be something to watch out for. For Wockhardt, it is a novel antibiotic which will eventually be a patented drug if in case they do get approval. So the street is fearing that. So that's the reason the stock is down around 5% because they don't have any presence in the US. So they would be probably impacted the most. But they are saying that they do have operations in Europe. So that is a point of lack of clarity because one does not know whether or not the US-Europe tariff would apply or whether or not this is an overarching announcement which is made by the Trump administration. So we're getting very micro in these views as of now. Let's see how things pan out in the next couple of weeks. But this is the immediate impact that we can talk about when it comes to this particular announcement. It will also have to be seen that if in case, you are increasing your presence in the US, then CDMO manufacturers could probably get impacted because of the supply chain and whether or not work would actually move away from CDMO companies. So as of now, it is a lack of clarity. We're just assuming that these things would probably play out. But when it comes to Indian generic manufacturers, say the likes of Dr. Reddy's, Lupin, Cipla, etc., you're seeing them largely unscathed because they are the guys who manufacture and supply the generic drugs to the US, which is basically 40% of their generic drug portfolio in the US. So they will not be impacted because they don't have that branded portfolio like the AstraZenecas and the Eli Lillys of the world, which will need that kind of, manufacturing capacity in the US to evade these kind of tariffs. So generic companies, as of now, unscathed, but companies which do have an innovative portfolio will be under the banner.
All right. Ekta, thank you very much for that. So that's a pretty rounded perspective on the entire matter. Sudeep Shah is with us, Head of Technical and Derivatives at SBI Securities. Sudeep, good to have you with us here. Thanks for your time. Just a view on indices and then, of course, your trades.
Good morning, Prashant. Prashant, post the last 5 days, lower top, lower bottom formation in Nifty, we have seen another gap down opening in Nifty. But now today's opening and sustaining around this 24,750 mark is important. I feel from here on, we might be heading into key support zones, which are closer to 24,700, 24,800. This 100-point band will be extremely crucial. I feel that last few days, a lot of negativity or lot of negative momentum may be already pricing, and we might be forming a extreme short-term bottom here on between 24,700 and 24,800 zone. So from here on, I feel constructively, slowly and steadily within the large cap space, or key selective mid caps, one should start getting bullish. And on the upside, now from a reversal perspective, for the reversal to be confirmed, I feel 24,950 is that first level that we should be eyeing for. About 24,950, the first levels that the indices may go up to would be 25,150, 25,200. So key levels 24,700 and 24,950.
Okay, got that. Any individual stocks, Sudeep?
One stock which is coming on radar is L&T Larsen. Now, I feel in these volatile times and times where the markets are a bit dicey, it's better to be sticking to be with large caps. And Larsen has given a breakout now on a daily chart as well as the weekly chart. The stock is doing quite well. It's holding above its key moving averages, and while the markets are falling, it's steadily rising higher. That means that there is some kind of a better relative strength witnessed there. So I feel from here on, Larsen can be added on all dips up to 36.70, 36.80. Keep a stop of 36.30. The first targets that we are looking out in Larsen would be closer to 38.50 and 39.30, maybe in the next couple of weeks.
Okay, all right, got it. Remember, Larsen has finally managed to come to some sort of an agreement with the state government in this Hyderabad metro, which has not worked out too well for them. They'll be getting some money. And I think that overhang at least seems to be getting out of the way in that particular project for them. Stocks doing well today. Take a break right now. Quickly come back on the other side and we'll get you all the latest from the commodity universe with Manisha. Welcome back. Let's quickly get to commodities and find out what's brewing in Manisha's universe. Usually it's all sparkling, but let's find out. What's the headline, Manisha? Happy Friday to you.
To you too. So almost everything seems to be surging up, and we seem to be closing this week on a much higher note, whether it's about energy, base metals or precious metals, by the way. But I want to talk about silver because we are inching higher highs onto this one. $45.20 an ounce is a new 14-year highs, and $45 an ounce also has been a level that many banks and brokerages put out as a target for the end of this year. We've already done that now. So it has been very firm industrial demand that we've seen from photovoltaic, electronics, electricals that has kept the silver prices higher. The tight physical availability in the very near term has been making premium into the prices for the near term as well. Also, there have been recent smelter and processing concerns, disruptions as well, which have been supportive. And then the markets are looking at premium for the near-term delivery when it comes to silver. Also, take a look on the strong ETF buying, physical demand, investment demand that silver seems to be looking at. And initially, we were calling it catch up to the gold trade, but now it clearly has outperformed gold as well when you look at the last couple of quarters there. Take a look at the kind of price move that we have seen in this year for silver. And I've only taken the months, or rather the price moves there. We started this year with 29.5. 33 was a multi-year high in any case, and then we saw 37 by the time it was mid-year. 39.7 almost led people to believe that 40 is not too far away. And from August and between September, so that is that 1 month that you see, we've seen prices gain up by almost $6 an ounce for the silver prices there. It has been a huge run-up in case of silver. But I don't want to talk or leave out the other precious metals. And when you look at the relative performance that you've seen for many of these precious metal prices, there you have silver up by 55%. It did go to 57% higher as well in the overnight markets, that is in New York. But platinum continues to shine brighter, 73% up in this year until now. And we've seen 42 and 43% kind of gains come in for gold and palladium as well. So very, very strong moves coming in for that market. I also want to leave you with one more thing here, and that is about the silver imports in sense of jewelry into the Indian markets. Now, those are a couple of HSN codes which the government as of now has restricted in sense of imports into India. Let me take you through the fact that the imports are restricted, that those are the codes for plain jewelry and not for studded jewelry. Also, India imports nearly 80% of its silver jewelry from Thailand, and this is under the FTA agreement there. And India does look at just about 10% of its overall jewelry in sense of imports there. So it's only 10% of a contribution, really not a big number. But if you look at the overall number there between April and July this year and last year, and you will see that big gap coming in there. So last year, import from Thailand was 87 tons. This year, it has been 361 tons. With the kind of run-up that we've seen in silver prices, this clearly is a gap that the government wanted to fill, and they have done that with restricting plain silver jewelry imports from Thailand.
Manisha, simple question to you. What is the best for viewers who are watching, right, who want to sort of buy silver? What's the best route?
I think ETFs is the best way to do this, Prashant, because you can then SIP it and do it, because silver is a bulky metal, right? 1,35,000 for 1 kg, 1,20,000 rupees per 10 grams for gold. So when you look at the difference, clearly silver is more bulky. But there's a lot of physical buying as well. People want to hold it, and that has been the criteria that we've seen in Asian markets. But when you look at Australia, US, Canada, there as well, there are reports now coming in that while people are investing via ETFs, and that's the best way to do it, but physical gold clearly is demanding a premium right now. Silver, rather.
Physical silver, demanding a premium. Okay. Thanks very much, Manisha, for that. And lots of questions in terms of what's the best way to do it if you want to gain sort of some exposure. Both metals, gold and silver, have done phenomenally well. We'll take a break. Lata will come on the other side, and CNBC-TV18 Citizens Monetary Policy Committee on whether RBI should or will cut rates on the 1st of October. That's the discussion, the question that we will debate. Stay tuned.
Since the RBI MPC's August meeting, so much has changed. 50% tariffs imposed by President Trump, a giant GST cut by Indian governments, a massive fee hike on H-1B visas by the US, and now a threatened 100% tariff on branded pharma. These steps are large enough to change the entire growth inflation dynamics since the August policy. This makes the deliberations of the CNBC-TV18's Citizens Monetary Policy Committee that much more important. Let me welcome Chairman Pranab Sen and our members, Dr. Soumya Kanti Ghosh, Dr. Sajid Chinoy, Samiran Chakrabarti, and Sonal Verma. Gentlemen and Sonal, good morning and thank you very much for joining me. Well, Soumya, as the Finance Commission member, as well, I'm going to begin with you. Last policy was branded hawkish by the market because the Reserve Bank said that the 1 year ahead inflation in, that is second quarter FY27, will be 4.9%. So market thought no more cuts. What's your assessment of the inflation trajectory now after the GST cuts and the huge Asian deflation?
Yeah, thank you, Lata. No, I think you have asked a very pertinent question in terms of the inflation trajectory. Since the last time the policy, in August, the policy was announced, I think there has been a plethora of changes, as you correctly pointed out. There has been a lot of developments on the global front, but most importantly on the Indian front also, there has been this GST rate rationalization. And of course, there are reports that, as you said, there has been serious Asian disinflation. In fact, if you look into the all Asian countries, the inflation is lower than the band of which it is prevailing. If we extend the case to India, I think in India also, the impact of GST is going to be more pronounced. If you look into the trajectory last time when the GST was cut in 2019, I think there was a significant impact on the inflation trajectory on a one-time basis, and then it declined. In the current scenario, there are a couple of points to note. The first thing is that apart from the fact that food inflation has continued to surprise on the downside, the GST rate rationalization actually translates into around 16% weightage in the CPI commodity basket, if I just take a rough approximation. So even if so that actually should translate into 114 basis point impact. But even if I assuming that the pass-through is only 50 to 60%, which is the most plausible and rational assumption, the overall CPI decline could be in the range of 60 to 70 basis points. I take it as 60 basis points. This apart, there is also the likely impact of a new CPI base which is coming into effect from February 2026, where in all probabilities the food weightage should be reduced. So if I take into account all these technicalities and also the fact that core inflation has been running significantly below par, if I take out the gold inflation, I think inflation for this year average will be close to 2.5% with a downward bias. And the most importantly, RBI has been citing this as a forward-looking central bank, that the next year inflation, when the policy is announced in June, it was 4.9%. Now it is tracking decisively below 4%. So my sense is that with an inflation rate which is going to be below 2% in September and October could be the lowest ever. And most importantly, 2.5% inflation average this year, less than 4% next year. I think there is enough arsenal in the room to suggest that the inflation trajectory will be significantly benign in the next couple of months and even in the next 1 year or so. So basically the projections of the central bank or anywise could have changed significantly, could possibly change significantly when the policy is announced on October 1.
Fair point. So 4.9 will definitely be reduced for the plethora of reasons you say. But, Sonal, on the point of that inflation number being revised by everybody for the current year to 2.4, I did a poll, and actually, if you compare to the Economist's August forecast and current forecast, GDP has been raised by 30 basis points and inflation has been lowered by everyone by about 40 basis points. That's the average I got, and that table will play. So given that, how can you at all justify a cut?
Yeah, Lata, I think, monetary policy is an art, not a science. And I think the assessment of whether the economy needs a cut or not has to be based on the underlying assessment rather than the headline numbers. So on growth, I think the biggest question is to what extent the 7.8% has been exaggerated because of the low deflators, because an economy which is slowing on a nominal basis has consequences for fiscal finances, but also in terms of business decisions on capex, consumer decisions on spending, because there's also a slowdown in nominal salary growth that happens. And I think, we also need to be forward-looking on growth, just as we are on inflation. And GST impact both on growth as well as on consumption is one-off. And the underlying drivers of consumption ultimately come back to the outlook for job and income growth beyond this one-time boost that we will get because of the GST cut. The tariff impact is already visible from the August data. The exports to US, which were growing at 25-35%, have drawn down to 7%. And going forward, we will see a squeeze on profit margin of companies, the SME, MSME exporters. Compensation that they provide to employees on their payrolls will start to moderate. So second half of FY26 is essentially when we think on average growth will slow down closer to 6% compared to H1, where growth is likely to be closer to 7.5%, because Q2 will also be boosted because of the low deflators. So I think, and I think the final point, Lata, the whole host of factors that you mentioned, which is 50% tariff and H1B visa, pharma tariff. I think the message here, and reading through the tea leaves here, is clearly that we've entered a global environment where reliance on external demand to boost growth is incrementally coming down, and therefore there needs to be a concerted effort both from monetary, fiscal, and reforms to basically push domestic demand. And I think it is in that context and the room provided by inflation and the Fed that the assessment needs to be made.
Fair point. Sajid, actually on that, just extending that, can the Reserve Bank cut in the face of a seminal fall in the rupee also just parse the global backdrop? Because in your JP Morgan conference that I attended, there were serious concerns about a pan-Asian deflation.
But Lata goes beyond that, right? I think the issue right now is that the uncertainty that we're seeing, both globally and in India, it's very binary in nature. What you're seeing in the US, for example, is third quarter growth is surging 3%, right? CapEx is doing very well, and yet the labor market's at stall speed. And so the question is, how does this break? Does this break in the form of a recession, where the labor market goes into a recession and that pulls the US economy down with it, and the Fed goes on to a long easing cycle and the dollar were to weaken and that opens up space for emerging markets? Or does it break in the other direction, where we've had many false dawns, and in the wake of this large immigration outflow, both inflows being stopped and now some outflows as well, that the break-even rate in the labor market is much lower. And so the labor market stabilizes at 30 or 40,000 jobs in the next few months. US inflation, which has been building, continues to build, and we have a very short easing cycle by the Fed, which is what Fed policymakers warned earlier this week. And the dollar strengthens and puts pressure on emerging market currency. So the risk in the US is very binary. I would argue similarly at home. The elephant in the room is we've got a 50% tariff from the US, but the macro outlook over the next 4 quarters will depend hugely on whether a deal can be struck in the next month or two, or whether we don't have a deal for the next 2 or 3 quarters. Right? Similarly, just as we have external headwinds coming from the tariff, we shouldn't ignore the fact that there are building domestic supports beyond the GST cuts. We saw direct tax cuts earlier, direct tax cuts now, very low inflation, which opens up purchasing power, a monetary easing cycle that's working through the system, and a very strong monsoon. So in the wake of all this uncertainty, right, you want to invoke Brainard's attenuation principle from the 1960s, that when you've got so much uncertainty and monetary policy has limited room, you want to move cautiously. I'm not arguing that there's no space to ease. The question is now the right time to ease? I would argue that in a couple of months, a lot of this uncertainty will be resolved. By December, we'll know A, was a trade deal struck and is the macro outlook different? B, we'll know is the domestic supports offsetting the external headwinds or are they not? And C, we'll know whether the US is in recession or not. And I think that will give the RBI much more information to then use whatever remaining space there is down the road.
Fair point. Okay, let me extend that fiscal argument to Samiran. Samiran, that is the conventional logic, isn't it? When the fisc is loose, you don't go ultra loose on monetary policy. And this time, despite the government's protestations, it's quite possible that the fiscal deficit is a little higher simply because tax collections are bad. Your take?
Hi, Lata. Actually, this is the crux of the problem that do we right now consider that there is a fiscal stimulus out there, both through the income tax cut as well as through the GST cut, and that's why monetary policy will have to take a back step? Or do we consider that the growth headwinds are so strong that we need both engines to fire at the same time? I would argue that we need to think a step even beyond that. Whatever monetary has done, even that part is not getting fully transmitted because of the bond market channel not being as effective and trying to impact even the bank lending channel through some marginal increase in loan rates for fresh loans. So maybe there is this thinking which is slightly different from the traditional thinking of saying that only one can fire at point of time. Maybe it's now where we think that both needs to be coordinated, having a simultaneous impact. Because for me, the big issue also is that while I agree with Saji's point that there is a lot of uncertainty over the next 2 months, maybe some of that will get resolved. But who knows, there could be more uncertainty coming in the next 2 months with more such headline news. We live in such a world. And to convey today to the market that we have some space, but we are keeping that space for another day is not going to be a very easy communication. In other words, a dovish pause is going to be a very difficult communication for RBI. Maybe that's why delivering a 25 basis point cut, even on the face of the fiscal stimulating, might be tactically a better stance, but it's a very marginal call.
Okay. Yeah, it looks like from what when I speak to the market, it looks like a very divided call. But before I ask you all to vote, let me get the chairman to weigh in. Dr. Sen, does growth really need help now? Is it that bad?
Well, Lata, the issue really isn't growth in and of itself. The issue, I think, now are the set of expectations that have built up because of the various factors that people have talked about. The problem, of course, we don't have a full understanding of what these expectations are. And I'm talking about both consumer expectations as well as investor expectations. And that really is the issue. Now, the whole question is that we all agree that uncertainty is heightened.
Yes.
But despite uncertainty, people are going to make expectations about the future. They're going to hedge, perhaps, but they will have expectations. The real question is, how do we handle it? Do we allow those expectations to express themselves, track it in terms of the data that we are getting, and then take the next step? Or do we preempt those expectations? Now, my personal sense is that I do not have a good enough feeling as to what these expectations are for me to take a decision now.
Okay.
And the question is, I can do a leap of faith.
Okay.
Or alternatively, I can wait a little bit.
Okay.
And that really is the dilemma that is going to be facing the MPC.
Fair point, sir. Fair point. Actually, lots more to discuss, but let's have a vote first. The first question, obviously, is going to be what will the RBI do on October 1st, the RBI MPC? Can we start with the lady, Sonal?
25 basis point cut.
Okay. Samiran?
A marginal call for a 25 basis point cut.
Okay. Chairman, I'll come to you later. Shaumyo?
Close call, but 25 basis point cut.
Okay. Already majority is 25 cut. Sajid?
I think they'll hold.
They'll hold. Chairman, which way would you tilt, sir?
I would hold.
Hold. Okay, I thought so from the way you said. Wait for uncertainty to abate. Okay, so that's the vote. Let me get the second vote after the break. We have more questions and a second vote. Back in a minute.
The Indian market continues to be under pressure. The sentiment further weakens as Pharma slumps on imposition of tariffs. Tech also falls as Accenture issues weak guidance. Auto stocks, however, they are the bright spot in trade today.
US President Donald Trump announces a 100% tariff on branded and patented drug imports. Tariffs will be applicable unless companies build manufacturing units in the United States. The pharma sector is the top sectoral loser today.
Tech stocks also opened low after the global giant Accenture issues a modest guidance for FY26. Stocks, however, have come off the lows.
Reports suggest that Waaree Energies is being probed by authorities in the United States for evading duties on solar imports. We are also awaiting the company's response to our queries on the same. The stock is lower by 5%.
And Rides wins an $18 million order from South Africa to deliver locomotives. The stock is up 3.5%. Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Ekta. And the market's in a bit of a flux this morning. The Nifty is lower, we're down close to under 100 points. The Nifty Bank is well under some pressure. The Pharma index is getting knocked back. And Ekta, the breadth of the market as well, not very, very favorable. So that explains why not a great Friday morning for the bulls. But the hope is we do see some kind of a fight back.
Hi, Nigel. Yes, absolutely. It's not a great day for the bulls at all. And for the pharma index, as you can see, the pharma index is under pressure this morning. But besides that, we do have the mid caps, which are under pressure as well. So the mid-cap index is currently down around 0.8% with an advanced decline ratio, which is extremely weak on the National Stock Exchange. Just about 600 stocks advancing to around over 2,000 stocks, which are declining. And there's been no sort of respite or improvement as the day's gone on.
Okay, all right, Ekta. Well, let's focus on a debutant then today on the bourses. GK Energy, the stock actually listed at a sharp premium in comparison to its issue price. I think we should get that up for our viewers on the screen. Still holding with a gain of around 13%. To help us out with what's the feeling, what's the way ahead, we've got Mr. Gopal Kabra, the CEO and CMD of the company. Hi, Mr. Gopal. Good morning. Good to see you in. And first of all, congratulations to you, your team, all the efforts that you all have put in with regard to coming here. Now you're a listed company, we'll be talking more often. So congratulations on a positive listing. Let's get to a couple of numbers then. Revenue and EBITDA growth has been spectacular for your company over the last few years. Now, in fact, we'll want to understand a few factors. So let's highlight the top three talking points: revenue and margin sustainability, support from the government schemes, visibility on the order pipeline. Let's get to the revenue and margin outlook, sir. Last year, you did around 1,100 crores with EBITDA margins of around 18%. Now, you're in line with regulations to give us some sort of a guidance. So where is this number headed?
Yeah, so last year number was quite good, and we are expecting ourselves to continue what we best we can make it up. And due to increase into the volume and increase in the business, we would have some positivity into the numbers.
All right. Could you quantify that? On this base of around 1,100 crores, should you be looking at what? A 30% growth, a 40% growth? If you could give us a brief number on that. And also your margins, they were mid-single digits. Then they were early teens. Now they're nearly late teens. Can you hold on to this 18%?
See, on the number side, I can say that on the 15th August, I'm sitting with the 1,000 plus crore rupees order. And on the margin side, definitely we would like to improve, because every organization would like to improve their margins. So we are working and we would be able to get some more better results in this.
Okay. Mr. Kabra, you have indicated that majority of or major amount of your volumes does come in from Maharashtra. Can you just give us a sense in terms of what other states would you now be focusing on in terms of generating revenue?
I would be focusing on the MP, UP and Rajasthan, because these are along with the Maharashtra, these are the state where the marginal landholders or marginal farmers numbers are quite higher side, as well as these are the farmers who need the more pumping solution. And solar is one of the best solution what these people have, and it's a win-win situation for the farmer, for the DISCOM, for the central government, as well as us. So we would be keep focusing on this 4 to 5 state majorly right now.
So what are the inroads that we can expect and by when?
Sorry, can you repeat?
What are the inroads that we can expect in these other states and by when? What is your timeline in terms of expansion into these other states and when can we expect it to take place, reflect on your numbers?
We have already expanded, but we go in the step-by-step process. We develop our own team rather than relying on the third-party contractor. So developing own team takes certain time. So this process has been started almost since a year in the MP. And few states like Rajasthan and UP, we have already started last year. So we will be able to see the number in coming financial year.
What about, sir, here that order book was around 1,000 crores. All of that gets executed in this year?
Generally, the 120 days timeline is as per our order instruction what we have.
Okay.
So we have to execute in 120 days from the date of the survey get approved. So when we get the green signal to install, then it's a 120 days only.
Oh, interesting. So this 1,000 crores itself will be executed in the next 120 days. That means that FY26 itself could look quite large. Could you tell us in the pipeline what kind of orders have you all bid for and by when will we know the outcome?
See, the bidding and whatever the process is there, we will able to disclose as and will go because it's a futurist thing. And right now, whatever the bidding we have done, we have already received the order. So in coming future, definitely we are expecting PM Kusum 2.0 to begin with it. MNRE, Apex Ministry has already initiated that talk, multiple meeting. And once that will move, then we will have the more things to be placed on your TV channel.
So just wanted to actually narrow down on that. What is the latest with regards to the Kusum scheme? The status in terms of the extension. You had indicated that you had met with the MNRE minister. So give us a sense in terms of where things stand currently.
Just want to correct, I never said met with the minister, sir. I said we met in the MNRE when the meeting was called by the secretary, sir. So it was all the stakeholders, we were present over there. And in that present, we had a discussion about the draft guidelines and everything, which is publicly available. And we are expecting before closing of this PM Kusum 1.0, 2.0 will begin.
Okay, all right. And, the problem with all these schemes is the receivable days, the cash conversion as well. Could you tell us, what is the levels that you are comfortable with in terms of days?
See, currently my receivable cycle you are able to see 120 days because we have the financial year from 1 April to 31st March. And when we see the last 3 years if with the same financial numbers as well, so from 285 to 411 to 1000 plus crore we have reached, but we have improvised on our receivable cycles, receivable days from 135, 140 to 120 days. So as we are growing into the numbers and we are controlling the receivable cycle and everything. So that's what we are able to bring profit on the table as well.
Okay. All right, Mr. Kabra, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the new listing, GK Energy. The stock is up around 12.8% at this point in time. So good listing and good debut which has come in from this particular company. We'll take a short break, but we'll get you a lot more on the markets, lot more stocks on the other side. Stay tuned. Welcome back. Definitely under pressure at this time for the markets. So do watch out for the Nifty, which is currently just about at around 24,790. Good time then to get in a technical check. We have Shivangi Sarda of Motilal Oswal joining in to discuss what she's strategizing at the end of the week. Shivangi, hi. Welcome to the show. Well, for the Nifty, 100 points lower. Mid-cap index is down around 400 odd points at this point. What's your sense?
Very good morning, Ekta and Nigel. Thank you for having me. So we've seen that the indices have been facing some sort of a pressure from the last 6 trading sessions, and we've seen lower top, lower bottom here on the index. Of course, the put call ratio has also sunk, and it's near 0.5 levels, which indicates that put writers have actually, unbinded a lot of positions, and call writers are shifting lower. Which indicates pressure is likely to remain. We've broken an important support level as well, so pressure is likely to continue, and this will, of course, affect certain pockets of the market. As per levels, we're looking at 24,500 on the downside for Nifty, with a resistance around 25,000 psychological level. This is the take on Nifty. Now, talking about Bank Nifty, there is slight bit of outperformance seen here as compared to the broader market because it hasn't seen such a fall as compared to Nifty. We've seen that this index has also been making lower top, lower bottom the last 6 sessions, and it has managed to hold above 54,500. So this level would be an important, crucial level to watch out as a make or break zone here for Bank Nifty. So 54,500, and on the upside, resistance is intact at 55,000 levels.
Okay, got it. All right. What about individual stocks? What are you looking at?
So individual stocks, Nigel, the first up on my radar is from a metal pack, which is JSW Steel. We've seen good amount of open interest addition here from the last 3 weeks, and we've seen consistent buying here. It has been trading in an upward sloping channel, and on a month-on-month basis, it has come out of a consolidative band of the last 12 months. So, of course, there's momentum which is likely to continue. Here in this month itself, the stock is up by around 13%, and we've seen good momentum continue. Rollovers have been quite positive for the next week. Of course, we're entering into the monthly expiry weeks, a lot of momentum and action expected here as well. So recommending a buy here in this one with a next target of around 1210 levels with a support of 1130 levels. And the second pick on my radar would be HAL. The defense pack has obviously been under a lot of action in the last 2 weeks, and HAL has rebounds from the 4,700 price band, and we've seen RSI has turned positive with a good amount of volumes added in the last 2 trading sessions despite the market volatility. So this one's on radar and definitely a buy from here with the next target of around 5,000 levels and a support of 4685 level.
Okay, all right. Thanks a lot for that, Shivangi. And one of the stocks you spotted was JSW Steel, and it appears, things are actually swinging in their favor. The COC arguments on EBITDA recovery are to be rejected. So, that's something that's come favorable in their favor. EBITDA distribution is not part of the RFRP resolution plan. And, Supreme Court, basically it appears that things are actually now in their favor, of JSW Steel. So, yes, I think we should get that up for you on the screen. Yes, the Supreme Court has overturned its own judgment. It clears JSW Steel resolution plan, and that's the reason why we are seeing the big spike up out there. So it's come in JSW Steel's favor. Earlier, in fact, the judgment was against them, and now there is, a good uptake that we're seeing in the stock price because of this. I don't think anyone on the street really was factoring in that Bhushan will be taken away from JSW Steel because they've gone ahead and, they've turned it around as well. But for the time being, this is positive for JSW Steel. If in case, the asset was to be taken away from them, then it would be a big issue because they had spent money to turn it around. They'd earned some money on this asset as well. So how would they U-turn the entire process? So that was the big question. For the time being, it appears logic has prevailed and things have gone in JSW Steel's favor. Ashmit joins us on the phone line to help us out with with the action. Well, I think we're getting a reaction. For the time being, that explains why the stock has moved to the high point of the day as we speak. So good news coming in for JSW Steel. Remember earlier the problem was that the point was that JSW Steel may have to go ahead and liquidate, that the Bhushan asset that they'd taken over a few years ago may have to go for liquidation, which would have made things very, very messy from every perspective. The money that was invested of around 20,000 crores, the profitability that was earned on this particular asset as it turned around, and how would you redistribute it and how would you re-auction this particular asset? So all of that, seems to have cleared out for the time being because the Supreme Court has overturned its own judgment that was earlier. I think it was earlier in 2025 itself. And at that point of time, JSW Steel had pulled back, big time on that particular day. And after that, we've seen a bit of recovery. To be fair, I think the stock price is actually more than 10% higher than at the time of the Supreme Court's last verdict itself. So explains why the stock is holding well in the green. We'll try to get in Ashmit, or maybe we'll try to get in a couple of reactions. But Sensex prevailed, as I said, and it's moved in. We have Ashmit, I think, who's joining us on the phone line.
No, he's not.
We'll get him in just a bit.
But nonetheless, this looks like it's positive news coming for JSW
absolutely.
Steel.
So basically the case was such as JSW Steel went ahead. They got Bhushan Power and Steel via the the bidding process. They took the asset for around 20,000 crores. They turned the asset around and everything was going according to plan. The problem was suddenly there was an appeal and there was an appeal to go ahead and liquidate this asset. And at that point of time, the Supreme Court had suggested maybe that's something that could be taken on board. But now that very same judgment has been U-turned and it's cleared the way for JSW Steel's resolution plan for BPSL, that is Bhushan Power and Steel. We have Mr. Ranina, the senior advocate, Supreme Court, who joins us on the show. Hi, Mr. Ranina. It appears better sense has prevailed and this judgment is in favor of JSW Steel. How do you read it?
Well, it's a very good development. Obviously, they realized that to dispose of the assets would create a lot of problems and a lot of things would have to be overturned. So I think the Supreme Court has understood the problems and therefore they have now given them the permission to go ahead with the merger and go ahead and continue with what they are doing in the past.
Right. So it's a step in the right direction. And, Mr. Ranina, the other problem was it wasn't just this case that would be in question. If the Supreme Court had actually gone ahead with the liquidation, there were so many other cases and the entire process would have been questioned. So I think for, all the other cases as well, it's actually a positive development. Your comment on this?
Absolutely, absolutely. I think it's a very good judgment. It is a landmark judgment because it sets the tone for all future such issues. And therefore, once the Supreme Court has allowed the merger to take place, to ask for liquidation, because liquidation is a very serious problem. Apart from selling off the assets, so many thousands of employees would be, without the jobs, and also banks may suffer. So the best is to merge. In fact, that is the whole objective of the IBC Court, to save a company, to save the institutions, financials, and to protect the interests of the employees.
Absolutely, Mr. Ranina. And just coming back to you, for the time being...
we do have another reaction. We have Dushyant Dave, who is the former president, Supreme Court Bar Association, joining in as well. Mr. Dave, what is your reading in terms of this particular ruling by the Supreme Court? As Mr. Ranina said, it sets a precedent for other cases as well.
I agree with Mr. Ranina wholeheartedly. I think Supreme Court made a grave error in passing the judgment in the first instance, Justice Belatri with his bench, and set at naught the liquidation process, which had already been implemented for almost 3 years. So I think that was really a very serious error on the part of the Supreme Court. And I would say that, I think the Chief Justice has done well to, recall and review and set aside that judgment. Because ultimately, we all know that the insolvency process in India is otherwise slow and is not hugely successful as it was expected to be. And a judgment like the one which Justice Bela Trivedi authored would have really set at naught the entire process, backward. So I think it's very important that we should expedite these processes as much as possible, because then only we can get the real value of the assets which are under challenge, under stress. And we can continue to retain the employment of thousands of workers. We can continue to increase the production. and the banks and other creditors, including sometimes, the non-statutory and unsecured creditors perhaps might benefit. So I think overall, I would say this judgment is a welcome judgment, and it really sets, as Mr. Danina said, a tone in the right direction.
So it's done and dusted now, right, Mr. Dave? It's gone in JSW Steel's favor, and no further questions on this asset. Would that be the correct understanding?
Yes, absolutely correct. I don't think there can be any further question about this, because ultimately, it's not just a question of, JSPL. It's a question of the banks, and these are public sector banks. And we are talking about thousands of crores of rupees of banks.
Correct.
So, employment is very important. Ultimately, you must realize one thing, that today there is large-scale unemployment in the country, and every job matters. And Supreme Court should be, conscious of that. So I think in a way, this is really a great reminder to us.
Appreciate you joining in, Mr. Dave, and giving us that quick comment. But before we let you go, this spells good times, not just for this particular case, but for the other cases that were pending as well, and a couple of cases that were resolved as well. It's actually a thumbs up for the entire resolution process, isn't it?
Well, the facts of this case are very peculiar. But I would definitely say that, I have not had a chance to read the judgment as yet, but I would definitely say, and I would hope that Supreme Court has really expressed opinion about the, whole law, because this law is not being properly implemented. We know that, NCLT is functioning very dissatisfactorily across the country.
Yes.
NCLT is not able to correct those errors. We know there is large-scale inefficiency and fair amount of corruption in the process. Which is hurting the country.
Okay.
Which is hurting, the banks. It is hurting public interest. It is hurting, very, purpose. You look at Europe and America, the liquidation processes are so quick and so successful. That's what we have to do.
Okay, that point is taken, Mr. Dave. We do have Ashmit joining in to give us more of a brief in terms of what took place in this particular proceeding. Ashmit, go ahead.
Well, two very important takeaways. The first is May 2nd is when the Supreme Court had given the original judgment where it had scrapped the JSW Steel resolution plan altogether. The reasons for doing so, the Supreme Court had said delays and procedural violations. These are two aspects that had been flagged. It is in review of that JSW as well as lenders had moved. Today, the judgment coming in their favor, the Supreme Court overturning its own judgment, upholding earlier NCLAT verdict and saying that this is a plan that needs to go through, that this not allowing this plan would be disastrous. It would be setting the clock back as far as the IBC regime is concerned. And importantly, there are key findings that come in favor of JSW Steel. Number one, the court says that as far as delays are concerned, it is not on account of either the COC or the JSW Steel. It happened on account of ED's investigations, ED's PMLA investigations into the matter, that neither the blame can't be put on either the COC or the JSW Steel. Further, the Supreme Court goes on to say that as far as even these delays are concerned, there were consistent efforts being made by both the lenders, the banks, as well as by JSW Steel to ensure that somehow they can be overcome. There is expeditious implementation. So that's on account as far as delay is concerned. On the issue of Bhushan Power and Steel, Supreme Court makes a very pointed observation that it started off as a loss-making entity. Now, there are thousands of crores that have been pumped in by JSW Steel. The company has turned around. It is now profitable in nature. So in spirit, JSW Steel, through its participation, has ensured that there is a turnaround that takes place as far as Bhushan Power and Steel, which is the basic aspiration, which is the basic intent behind the IBC. So with these findings, the Supreme Court overturning its own judgment, the Supreme Court ruling in favor of the JSW Steel resolution plan, the 19,700 crore rupee resolution plan. And having said that, the second aspect is equally important. In the course of the review proceedings, lenders had asked for additional dues of 6,100 crores. They had cited EBITDA during the insolvency period, saying that these are profits, that the lenders should be given these profits, 6,100 crore rupees. That argument has also been squarely rejected, saying that there is no mention of EBITDA going to the lenders as a part of the resolution plan or as a part of the RFRP, and therefore that argument also deserves to be rejected. So a huge win for JSW Steel. Number one, their resolution plan now stands restored, and number two, no additional dues of 6,100 crore rupees that they need to now cough up towards the lenders.
Okay, all right. Thanks a lot, Ashmit, for joining in and giving us a quick update. And you'll be wondering why JSW Steel is not running away, because this is a sentimental positive. No one was factoring in that the asset would actually be taken away from them, because it would be an absolute mess. They'd put in closer to 20,000 crores. They'd put in additional money after that as well to get the asset running. And how would you redistribute the EBITDA that they have garnered over the years after turning around the asset? So it's a positive nonetheless. It removes the uncertainty. But in that sense, no one was factoring in that this asset will actually be taken away. I was just looking at old notes when, in fact, this verdict did come out. The stock had cracked close to around 6% on that day. It had breached the 1,000 rupee mark odd. So from that day, in fact, the stock is actually up more than 15% from the day the verdict went against them. So maybe part of the good news already in the price. So we wrap up on this edition of Chartbusters. Stay with us. The team of Trading Hour comes up next.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me, as always, Rima Tendulkar. Rima, good morning. We are hoping to end the week on a high, but that is not the case. A sixth day of losses now for the Nifty and breaking below some very important support levels as well. No support forthcoming even from the banks or from the broader markets. But the last 15 odd minutes have been with regards to the Supreme Court. One judgment out of the way with regards to JSW Steel. We are awaiting another judgment with regards to Vodafone Idea. So there is a lot to watch out for when it comes to the Supreme Court judgments. But all in all, Rima, it's been a very forgettable week for the market.
Indeed, more than 3.5% lower now for the mid-cap. I mean, around 3.5% lower for the mid and the small-cap index so far this week. And today they are underperforming. And the problem is that there is no sector which is doing well. There is bad news all around. Banks are following because the FIs have been selling and generally it's dragging the index down. But today there is negative news coming through on pharma. IT has been hit very hard this entire week. If you pull up the Nifty IT index, that's down close to about 6.8%. That's the loss for the Nifty IT index. And the latest, the latest pressure, round of pressure is coming in from Accenture's modest guidance for FY26. So again, it's highlighting that growth is going to be very tough to come by for the technology names. And Accenture is a direct peer of the Indian listed universe. So first, there is that H-1B visa issue, and this is just getting accentuated by the low growth prospects. But let's drill it down to individual stocks. Hormuz is moved over now to the big wall. He'll put the spotlight on the individual stocks.
Well, a forgettable day indeed, and the sector that was supposed to be in the spotlight was Pharma after the announcements made by Donald Trump. All of these stocks declining anywhere between 5 to 6% in today's trading session. Sun Pharma now at a 52-week low. When you take a look at the volumes as well, even the largest pharma company of the country is trading with volumes that are almost 15 times their 20-day average at the first couple of hours of the trading session. Kaplan Point among the top losers on the Nifty 500, Wockhardt, Natco Pharma, Newland Laboratories, all of them trading with volumes that are substantially higher in comparison to their 20-day average. We spoke to the management of Wockhardt as well earlier in the day. We had close to 10.5 lakh shares now being traded. The 20-day average is less than a lakh. So it shows the kind of volumes with which these pharma stocks have declined in today's trading session. You know, pharma has been beaten down. IT has been bashed all week. But the one pocket that has not been bashed this week has been the auto ancillary space. And all of these names, RACL, Cartech, SJS, all of them are trading with gains of anywhere between 3 to 6% even in today's trading session. And RACL, GearTech is up almost 6 to 7%. 4 lakh shares traded. The 20-day average here is only 15,000 shares. CarTrade had a brokerage note coming in earlier this week from Elara projecting a 50% upside. Here too, 4 lakh shares traded compared to 1.5 lakh. And SJS, we spoke to the management earlier this week, that too trading on very, very significant volumes. And lastly, RITES is one railway name that I wanted to put the spotlight on. Has cooled off substantially from the highs of the day though, but reacting on the back of an order win that it received. The volumes are already the highest since the 2nd of July, and today's volumes we have seen more than 2 crore shares being traded compared to a 20-day average of just under 4 lakh shares. And the important levels now to watch for RITES, first is the 50 DMA which is at 261, and the 100 DMA which comes to around 269. So significantly high volumes for RITES as well, but the stock, like many other railway names, is still down significantly from its peak, almost 36% down from the all-time highs that it earlier reported.
Thank you very much for that. I can't take my eyes off the kind of pain the IT companies have endured this week. This week, again, Hexaware is down close to about 13.5%. Coforge is down close to about 13%. Mastech, Emphasis have seen a fall, again a double-digit fall of close to about 10%. Zensar, even large-cap IT names like Tech Mahindra, TCS, Wipro have all fallen close to about 7 to 8%. It's been a very weak, tough week for the IT names. But today has been a tough day for the pharmaceutical names. And in fact, that is our big story of the day. That's US President Donald Trump has announced a 100% tariff on imported branded and patented pharmaceutical products. This will be effective 1st of October. Ekta joins in with the numbers.
Well, yes, it is definitely negative news which has come in. US President Donald Trump has announced a 100% tariff on imported, branded and patented pharmaceutical products effective October 1st unless companies are building manufacturing facilities in the US, which is defined as having broken ground or being under construction. So this is definitely negative news which has come in. So I just want to start by talking about the announcement as a whole is basically targeting innovative companies such as analysts have indicated, many of whom have anticipated such a policy and announced large US investments. For example, Novartis has planned to invest around $23 billion over 5 years. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on around a $700 million facility. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics, 40% of US requirements. Now, generic-focused firms like Dr. Reddy's, Lupin, Cipla and Aurobindo are unlikely to be directly affected, though concerns remain about potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which is Illumya, Odomzo, Sequoia and Winlevi, make up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could trim around 5 to 10% from its EBITDA. While Sun has not disclosed US production levels, it has said its existing capacity is sufficient if required. That was the indication from the company in its Q1 numbers. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, which is manufactured in Europe, is set for US FDA filing. The company lacks any US manufacturing presence, which could leave it vulnerable. Now, the market is also wary of potential effects on CDMO players if formulation companies redirect capital towards US capacity, reducing offshore outsourcing as a whole. And implementation questions remain as well, including whether the tariff will override US-Europe trade rules that cap pharma tariffs at 15% and whether APIs of finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe adverse steps are unlikely given the dependence on US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. Aurobindo's $250 million acquisition of Lannett added a CGMP facility in the US with a large tablet capacity as well, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more such acquisitions of mothballed assets or other assets and new capex if in case trade tensions do persist when it comes to pharmaceuticals.
Indeed, Ekta, thank you for breaking that down for us in great detail. And earlier today, we did speak to Habil Khorakiwala, the founder and chairman of the Wockhardt Group, to discuss Donald Trump's 100% tariffs on branded and patented drugs starting the 1st of October. And how does that impact Xenic, which is a key drug in the company's portfolio? Listen into what he had to say.
One of the important things is all our new molecules like Xenic, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Xenic in USA. We would be filing to US FDA sometime next week. We would be filing Xenic next week. It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Okay, let's talk about one more stock, and that's L&T. That's the top Nifty gainer. Vivek is here to tell us why.
Well, that's right. L&T, a big overhang lifts off as far as what we're understanding from reports. Yesterday, PTI reported that the Telangana government has agreed to take over phase 1 of the Hyderabad Metro Rail project from L&T. Telangana government is going to pay close to 2,000 crore rupees for L&T's portion of the equity stake, and along with that, they will also take over and subsume the entire debt of close to 13,000 crore rupees. While this is slightly lower than what L&T had asked them, L&T had asked them close to 5,900 crore as far as the equity component was concerned. They've received only around 2,000 crore. But this indicates that a major overhang lifts as far as L&T was concerned, basically because the interest costs were quite high. The operating profits that the company were making were not enough to go ahead and service the debt. A couple of brokerage reactions are there. JM Financial says that this particular exit potentially removes the long-term overhang on the stock and is modestly EPS accretive. They say that the exit from assets avoids PBT PAT loss of close to 626 crore at L&T's level, and EPS uptick of 4% is what JM Fin anticipates. Along with that, they say that the losses were at 3% of L&T's consolidated PBT and 4% of L&T's consolidated profit after tax for FY25. Exit is a further positive on the back of the fact that it can boost return on equity by close to 60 to 70 basis points. On the back of that, L&T, one of the top gainers today.
Top gainer on the index is L&T, 3% higher on a day when the index is down 130, nearing the lowest point of the day now is the Nifty, nearing that 24,750 level. Vivek, thank you for that update. Take a short break. On the other side, more action from the crypto markets. Manisha Gupta joins in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, in Crypto Corner, we are going to be talking about September effect, or in crypto language, they also call it the September curse, because this is a month in all years, most of the years, where you have seen a decline in crypto prices for the month of September. Actually, when you look at from 2019 to 2022, Bitcoin fell average 8 to 9% in all September. Some years it has been more, some years less, but this is exactly the kind of average that you've seen between that year. Now, the global crypto market cap also has declined below 4 trillion. It's trading at around 3.8 trillion at this point in time. The month of September clearly has not been kind to crypto, as the history has shown us. So when you look at the overall market cap, we have seen $162 billion of a sell-off happen in the month of September 2025. The last 3 or 4 days, the sell-off has been quite extreme. So $1.5 to $1.7 billion in derivatives has been wiped out on some of these individual days as well. So the sell-off has been quite sharp, quite painful as well. Now, why has it happened, and in what all cryptos has it happened? So when you look at Bitcoin for the month of September, we are down by a marginal 1.5%. A deeper cut clearly has come in for altcoins and meme coins there. You have Ether, which is down 12%, Cardano down by 8.5% as well. Same is the case with Ripple, Polygon, some of these meme coins like Dogecoin, Shiba Inu, etc., where you are looking at 4 to 12% of a cut coming in for the month of September. Why is crypto declining? Well, one of the major factors clearly has to do with the macros. It has been weakness across asset classes, and exactly what we've seen happen for cryptos as well. The US economic growth slowing. You have weak jobs data that we saw as well. The strength in US dollar index in last 3 or 4 sessions has been pushing pressure as well. And then it has been about geopolitical tensions, cautious Fed stance, and the market's also looking at the fact that crypto has run into a resistance after we saw an all-time high being hit in the month of April. Since then, it has been consolidating and making lower lows. It is what seems to be bothering as well. Also, this is the most important factor, because we're looking at large liquidations of leveraged long crypto positions happening. Now, this is the money which plays in sense of derivatives, and we've always been cautioning that you should be putting in what you are comfortable with. These are leveraged positions, and there's a long liquidation there is what has taken the crypto prices down. The prices decline have led to margin calls, and that has led to forced selling into the market there, taking prices down. Some crypto corporate treasury, and this is a report that we've seen in various publications there, that some of these corporate treasury companies used debt to fund their Bitcoin, Ethereum purchases. And now that the prices have declined, they have to pay those monies off. And that is the reason there are forced selling happening here as well. And not just this, when you look at the spot ETFs, we also are looking at net outflows there. There also is a stricter rules debated in European Union and US in some parts as well on exchanges, on AML rules, etc. And that seems to be bothering markets. So as always said, it's about September effect, September curse. There are various things coined there when it comes to crypto, when it comes to the month of September there.
Manisha, thank you so much for that. Important flashes on your screen. The Vodafone Idea AGR plea hearing has now been deferred to the 6th of October. And this was the other major anticipated hearing from the Supreme Court. Remember, the verdict last Friday was deferred to today, the 26th of September. And now it has been deferred to the 6th of October is what the latest that is coming in from the Supreme Court. Ashmit, our colleague, mentions that the Solicitor General has sought more time on behalf from the Department of Telecom from the Supreme Court, and Vodafone Idea has also mentioned that they do not have any objections if the verdict is delayed and more time is being sought. Now remember, the Vodafone Idea had put this petition in the Supreme Court to reconsider a part of their AGR dues, and since the relief was not forthcoming from the government last week, the government had mentioned that they had no problems with the petition that Vodafone Idea has filed, and some relief does need to be granted going forward as well. We get you more on this, but take a short break. We'll be right back and we continue our coverage on Vodafone Idea.
Welcome back. Still down about 125 points on the Nifty. Let's get a handle on what's happening in the futures and options space and where the shorts are getting piled on. Nigel is now joining in.
Well, that's right, Rima. It seems that, the bears are fully in control. On the technical level, so they're getting broken out. Whether you look at the Nifty, you look at the Nifty Bank as well. We'll get to that in just a bit. But look at the options data. The call writers, they are dancing away to the bank. The 24,800 call. Aggressive writing is what we are seeing. Remember, in this downfall, the writing started at around that 25,100. Then it went to 25,000. Now we're down to around 24,800 call. Tremendous amount of open interest built up out there. The premium at the start of today was 210 rupees. That's down to around 90 rupees. Pull up the 24,900 call as well. Out there, the premium was 135 rupees. That's come down by a third. It's close to around 45 rupees the last time I checked. So aggressive writing is what we're seeing on both those two strikes. And the 24,800 put as well. Big build up out there. There appears there is buying actually at that particular strike. And in today's trading session, the premium has moved from around that 35 rupees odd. It's moved to more than 75 rupees. So there is good amount of money being made for those put writers as well. So for the time being, call writing, put buying, that seems to be playing out. And the problem is both the Nifty and the Nifty Bank, they have decisively broken the 20 DMA. So the intraday chart actually should come up for you. And that's going to be a bit of a resistance now on the upside. So keep an eye out on that mark. Moving to stocks, you'll be thanking your stars that at least Reliance Industries as well as L&T, both of them are batting for the bulls, because both those two are holding one end up. And that's why, in fact, the markets are not falling decisively. Then you have Glenmark that's seeing fresh shorting out there. And SAIL is the other one that we're seeing a good amount of fresh shorts on both these two names. So for the time being, the bears say that they are in control. The bulls will be hoping at least to start defending the lows of the day and try to find back at some point of time. But otherwise, 20 DMA, that's a line into the sand.
Thank you very much for that. Moving on from the technicals to the derivative action to the technical. Siddharth Rai Mangala from Stockbroks Technologies is now joining in. Thank you for joining in. Do you want to quickly run us through whether there is more downside in store at an index level and then the stock picks?
Hi, Rina. Good morning, and thanks for having me on the show, first of all. See, Rina, if we talk about Nifty, after all the crashing that we have seen happening in this week, now Nifty is around the last important support zones for this, for the very, for this midterm. 24,800, 24,750 is going to be very crucial. So today's closing is definitely what we have to watch out for. Initially, we did see Nifty playing around 24,800 in today's session, but now if we close below 24,750, this fall can extend towards 24,400. And that fall will be very quick. On the other side, if we see the index managing to close above 24,800, there can be a substantial recovery, or we can call it a bounce back towards 25,000, 25,050. But this important 50 points range, 24,750 and 24,800, is definitely going to be a range which we have to watch out for on closing basis in today's session.
Okay, any stock-specific technical trades?
Yeah, definitely, Rina. See, since it is a highly volatile market right now and the sentiments are definitely weak, it is better to keep a balanced approach right now. So I have two stocks. One is to buy and one is to sell. First, the one which we have to buy is L&T. See, we have seen a very big move in today's session, definitely. But along with that, there is a very, very big breakout on the charts. After almost, I would say this is the first time in this year 2025 that the stock has managed to sustainably go above 3,700, and it is a very good signal. The move is very strong today, and it can definitely continue towards 39,000, 39,50. So L&T is a buy in spot right now. The stock price is around 3,760. We'll buy it here. The stop loss will be around 3,715, and our targets will be, first target is 3,880, and the second target being 3,930. Second stock here we have to go short. We have to sell here because the structure looks very weak. The name is Solar Industries. See, Rina, in the past 1 week, there has been consistent weakness in this stock, and 14,000 was a very important support, which has been broken down today. So weakness can extend. Solar Industries can be short. We can go short on Solar Industries. The October futures, we'll talk about the October futures now. The October futures is trading around 13,960. We'll keep the stop loss at 14,050, and our targets being, first target 13,800, second target being 13,750.
Thank you very much for that. Get into break on the other side. Nitin Raheja from Julius Baer India joins in. Stay tuned.
Welcome back. Still at the lows of the day now is the market. Continuing our conversation on the road ahead with Nitin Raheja of Julius Baer India, who is now joining in. Nitin, good morning. Thank you for joining in. I start off with the sector of the morning, right? Pharma, with the tariffs that have been announced. Of course, for now, it is on only the branded and the patented products. But does that now create an overhang that there might also be some action on the generics? What do you do in a situation like this?
I think if you really look at it with the current, the US dispensation that is at work, everything is at play, right? Having said that, I think the focus was on branded, pharma for a very long time. He's talked about how, prices of drugs have been very high. And hence something like this coming about, while is always shocking when it comes, was expected. On generic pharma, it given the kind of value that generic pharma adds, in fact, it actually aids in lowering cost of drugs. Also, the substitution effect is very difficult to happen overnight, and so on and so forth. So I think it would be, in a sense, this development is good from an Indian pharma perspective, but you yet can't be overweight on the sector because, despite its recent underperformance, because you don't know what other measures could come in place. But I think I would be very surprised if they come up with anything significant on generic pharma, because generic pharma is what is helping affordable. It's what is keeping drug costs low in the US. So I would be surprised if they do something there. But as a part of a trade war or a negotiating tactic, one can never be sure.
So as of now, the stance on pharma is neutral, or are you underweight because of this lingering overhang?
So we have a neutral to marginal stance on it.
Okay. And what about Sun Pharma, which is impacted on account of its specialty portfolio, which is about 17%? Was that a stock that you all used to like?
We don't talk of stock specific, but at a more broader level, he has talked about exempting companies who have manufacturing facilities in the US. And I think that's where I believe, someone like Sun should have an advantage.
Got it. What about IT, Nitin? The bad news just doesn't seem to end. You're grappling with H-1B visa, and now there is a reiteration that growth is going to be modest based on what we heard from Accenture. Not that it comes as a surprise. Not that expectations were for high single digits or even double-digit kind of revenue growth, but Accenture's numbers has reiterated that narrative. And again, there will be question marks on when growth actually recovers, with potentially generative AI being deflationary. What's the call now on IT?
So we have an underweight stance on IT. I think more than the regulatory developments with regard to the H-1B or the private member bill that has been talked about, I think the larger issue is the direction which IT is taking with AI coming into play. Having said that, I think, clearly, directionally, AI is going to change the way we have to look at IT. It's going to improve productivity for IT companies at one level, but it's also going to, and in that sense, in the first phase, you're going to see a lot of what has been spent on AI get integrated with existing companies as they find use cases. Also, a lot of data which resides at different levels within each enterprise needs to first, be sort of taken to the cloud for AI to really become effective. So at the first level, we are going to see some amount of work which is going to come for IT companies. However, a lot of that work will have huge productivity gains given all the AI tools that are out there in the market, and they're not going to require a similar amount of people to do that. So I think for IT initially, the gains of AI are going to be offset by the fact that a lot of work that they would traditionally do is going to get cannibalized by AI applications and tools, and so on and so forth. So I think overall the growth in IT is going to be far lower. And each one will traditional models are under question. Large IT, I think, is going to be under more pressure, and the whole concept of carrying large benches is going to come under pressure. I think mid IT and IT companies who have a strong domain expertise are probably going to fare a little better.
Running out of time, Nitin. Had more questions for you, but thank you so much for sparing time and joining us today. Looking forward to having you more often on this platform. Take a short break, but just before we do that, some programming note for our viewers. If you are looking for the big bets and market themes that will shape India 2030, Nilesh Shah of Kotak AMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have already signed up for this, and you can become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans.
Welcome back. Let's just shine the spotlight on Waaree Energy. That's down close to about 5.5%. Vivek is here to tell us why. Vivek.
Well, that's right. So Waaree Energy is in focus. Basically, what's happened is that as per newspaper reports, Bloomberg as well as Reuters both have reported that the company is now under a probe by the United States government for evading solar tariff duties. Customs officials are investigating if Waaree Energy sidestepped US tariffs and whether they exported Chinese-made cells and panels by labeling them as made in India. Now remember, there is a probe underway. If in case Waaree has gone ahead and done this, remember they are subject to much higher tariffs when it comes from China as compared to when it's been exported from India. Remember, Chinese-made cells and panels are subject to both anti-dumping as well as countervailing duties in the USA. This is in addition to what transpired last month, where a consortium of US solar manufacturing companies petitioned for both anti-dumping as well as countervailing duties to be put on Indian solar exports. Now, in terms of impact, Waaree is the one that is most impacted, given the fact that almost 41.3% of the total order books is in the exports market. So on the back of that, you can see why Waaree is down almost 5%. The outcome of this particular investigation is still awaited, but in case it does happen, it will be a significant setback as far as Waaree is concerned.
Significant setback indeed. 5.5% lower now on Waaree. Vivek, thank you for that update. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back. Vodafone Idea is extending the losses down 6.5%. So some disappointment that the court case has been adjourned further to 6th of October. The street was hoping for some sort of finality to come in on AGR dues, which has been such a contentious issue, but we'll have to wait for another day. Metal stocks are retracing after the recent gains. So Hindustan Copper down 3.5%, Vedanta, Tata Steel reeling under pressure. In fact, the metal index is down 1.5%, and across the board, Pharma is weak. Themis Medicare, Loris, Wockhardt, Newland Laboratory, SMS Pharma, Natco Pharma, Panacea Bio. These stocks are seeing cuts anywhere between 4 to 6%. Quite the bloodbath there in Pharma. But that brings us to a close on trading hour. Don't go anywhere. Halftime report is up next. Stocks take a beating, with mid-caps bearing the brunt after Trump unveiled a fresh set of tariffs, adding further uncertainty to global trade. IT and healthcare are the big drags. Telecom too sulks after the Supreme Court defers its hearing on Vodafone Idea.
In a landmark move, the Supreme Court has overturned its earlier order, paving the way for JSW Steel to retain its interest in Bhushan Power and Steel. The court observed that the purpose of IBC had been achieved and it would be disastrous to undo the deal. It also dismissed the EBITDA claims as this was not a part of the resolution.
The Telangana government has indicated its intent to take over phase 1 of the Hyderabad Metro along with its debt from L&T for an equity value of Rs 2,000 crores. Analysts see the move lifting a big overhang on the stock.
Donald Trump has announced a slew of new tariffs, with the most significant being 100% levy on patented and branded drugs not manufactured in the US. While India's generic industry will see no impact, select players with branded presence like Sun Pharma may see a dent.
Tata Motors armed JLR responds to CNBC-TV18 saying it has begun phased restart of its operations. It adds that its logistics center and financial systems are up and it can now sell and register vehicles for clients faster. JLR, however, did not share any details on the financial impact.
A very good afternoon. Welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it is turning out to be a down day for the markets and it's only trended lower as we speak. So we have the mid-cap index, which is now down around 1% at this point in time. It is the two export-facing industries which are really taking a hit in today's trading session. So we have pharmaceuticals on one end, Sun Pharma, which is down around 3% at this point in time, and the other space is the IT stocks. So, for example, we have TechM, which is down around 2%, Infosys, TCS, which is at a fresh 52-week low as well. So that's really where the pressure points are in today's trading session. A larger structural problem is what the street is possibly looking at. Maybe it's not a one-day effect, but, a downtrend that we've seen for a couple of trading sessions. For example, we have Sun Pharma, which is down around 17% this year, and a stock such as HCL Tech, which has lost significantly around 27% this year as well. Hi, Vinny.
Hi, Ekta. Good afternoon. So, yes, clearly there is pressure coming in on pharma as well as IT. But let's pull up autos, right? Today, look at it. We'd have Tata Motors, Hero MotoCorp, Eicher Motors. That is managing to hold on to some bit of a green. So, that's something that we'll watch out for. Other than that, also keep an eye out on the real estate space. We have a few of these names buzzing on the back of that as well. Real estate and auto. These are the only two sectors that are managing to hold on to very, very mild gains as of now. So, keep an eye out on that one. Other than that, obviously, a lot of names that are moving, and even in the broader end of the market, either are from the pharma pack or there's any news flow that's come in, even for Waaree Energies. That's also a bit under pressure because of announcements that have come in overnight. So keep an eye out on this as well. But Ekta, clearly pressure is there today on the markets as well. And for 5 days of decline, I think that we're seeing coming for the Nifty as well.
Yes, absolutely. But let's get talking about one specific company and move away from all of the negative news with regards to the tariffs and the US-India relations. Let's talk about Jupiter Life Sciences, which is in focus. Dr. Ankit Thakkar, who's the ED and CEO, joins in now. And remember that there will be three key focuses of our discussion. First is the outlook on cashless services by insurance companies, occupancy and average revenue per occupied growth in FY26, and the current status of their 3 greenfield hospitals. Well, Ankit, hi, welcome to the show. Good to see you in. You must be happy you don't have any operations in the US.
Yes, firmly India-centric.
Okay. Well, absolutely. But, there has been a niggle for a couple of these hospital companies, your cashless services by insurance companies. There was a little bit of back and forth where there was a stoppage of the Bajaj Allianz services and then, a restart of that. But there are fundamental problems within this space, right? When it comes to insurance companies and hospitals. For example, delayed payments, claim denials, unilateral deductions. So just give us a sense in terms of where things stand and what is the resolution process here.
So I've firmly believed for a long time, and I've said this multiple times, that in the long term, insurance and the healthcare providers are partners, right? Both the industries, the providers and the payers, the growth is linked to each other. With more and more penetration of health insurance, the demand and the affordability for quality health services becomes better, and vice versa. With more access to high quality treatments, the perceived need of an insurance in the mind of a common man goes up. So yes, in the short term, it does look like an adversarial relationship in terms of price negotiations and terms of trade as such. But over the long term, I think it is a hugely symbiotic relationship. That is how I have approached our relationships with all the payers. And for the most part, we have had good cooperation from them as well.
Hi, Ankit. Good afternoon. This is Winnie joining in the conversation as well. Ankit, that said and done, what about now the company's outlook in terms of occupancies and RPOBs? Where do you see that moving? Occupancy in Q1 was at around 60%, RPOBs at 67,300 approximately. What is it that you're keeping an eye out on now? Should we expect this to increase for the rest of the year?
Yeah, so on the occupancy front, I think Pune and Indore hospitals have scope for occupancy expansion. Pune should be in the mid 60% odd. I think it can go to 70 something. Indore had crossed 65% odd occupancy when we added about 100 beds earlier this year. And that has, with the expanded base, brought down the occupancy in percentage terms. But on an absolute level, we are seeing a good growth in occupancy as the year progresses in Indore. So on a console level, we expect some occupancy increase this year. RPOBs, I think, have two contributors. One is pricing, that we have maintained that inflation-linked price impact is all that one must expect going forward. One must not extrapolate a higher than inflation price hike. But the other contributor to RPOB is the complexity of the procedures. So Indore, I think, again, has a little bit of headroom for that. As the hospital is still maturing, I think over the next year or two, we should see a little more tertiary and quaternary level work than what we are doing now. And that should help the RPOBs a little bit.
Okay. All right. You have your 3 greenfield hospitals coming up. Just tell us, when do they come on stream? You have, your 2 hospitals, one in Dombivli, one in Mira Road, the other one in Pune. Just give us a sense in terms of when they come on stream.
Yeah, so I think they are all on track. Dombivli, we have said Q1 of next financial year. We don't expect any delays at all. We should be able to launch as per committed timelines. Pune as well, we had said that, post monsoons, we will begin with the construction. Excavation is pretty much over. So we are on track there to begin Pune in calendar year 28 sometime. And Mira Road, the land-related legal updation of records with the government, etc., are all over. And now we are at the planning and approval stage. So once we receive those, we will begin construction there.
Okay. Just getting back to your current operations, you had taken a price hike, which is, which had aided 3 of your hospitals. Any incremental price hike that y'all are planning to take? If so, to what extent?
Yeah, so price hike for the most part, as I said, it will be inflation linked. The insurance contracts are usually for 2 years. And with so many insurance companies across all the 3 units, every few months, something or the other comes up for renewal. And when that happens, you see that inflation-linked price hike kicking in. Yeah, apart from that, I think we are good with the pricing currently.
Okay. You also, have cash on your books, your net cash of around 275 crores. You have mentioned that you all are looking at acquisitions. You want to add 1 hospital in terms of your portfolio. Any movement on that? And if you could just tell us what valuations are looking like as well, considering the kind of PE interest we've seen in the entire hospital space.
Yeah, Ekta, so greenfield continues to remain our preferred mode of growth unless something very attractive comes up in terms of quality and valuation both. Currently, of the opportunities we are evaluating, there is nothing on the acquisition front. Most we are evaluating a few opportunities for the 7th Greenfield Hospital. But it is still on the discussion board stage and nothing really concrete that I can announce on. But as and when it fructifies, I'll be happy to talk to you about that.
Okay. All right. We're going to leave it on that note. Ankit, thanks very much for joining in and speaking with us. So that's Jupiter Live. We need to take a short break, but a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Well, let's get talking about the technicals. It's a tough day for the markets. A good time then to get a full focus on the markets. We have Manish Hathiramani from Deen Dayal Investments joining in now. Manish, hi. Welcome to the show. Well, it's turning out to be a tough day. We have the Nifty, which is down around 0.5%. We have the Bank Nifty, which is down around 0.7%. What would your approach be to this kind of weakness?
Good afternoon to you and to all our viewers. Ekta, last week when I was on the same show, I had mentioned this whole resistance level at higher levels, where we spoke that we needed a close above 24,450 to 25,500 to be precise. That was very crucial. We did not trigger that. That worked as a resistance. That's where we have turned from. On the way down, we have broken two major supports of 25,150 and then 24,950. That's the reason we are sitting on where we are right now. One of the closures that I would look at would be the very fine level of 24,850. Even though we are lower that level right now, I would be looking at the close. If we are not able to close above 24,850, this market can go down to 24,450 and 24,500.
And Manish, which are the stocks that you are looking at today?
Currently, since I am working with the short side, I've got two sell calls. My first sell is on HDFC Bank, which is for a target of 900, stop loss of 985. The stock recently resisted at 980 and is now threatening the support of 950. If we break this, we can go closer to 900. We are also seeing an inclining volume with a decline in price, which is supporting the drop in price. The second is on Bajaj Finance for a target of 1950, stop loss of 2070. This stock has a resistance of about 2100 and thereafter we have broken the supports of 2000. This break has happened also on the back of larger than average volumes, which is confirming the current fall.
Okay. All right, Manish, we're going to let you go on that note. Thanks very much for joining in and taking us through all the technical calls on the market. Definitely a down day. Look at the advance decline ratio. It's now at around 1:4. So it's just worsened as we speak. The advances at 540 stocks and around 2,240 stocks declining on the NSE. So that gives you a sense in terms of the kind of weakness we're seeing for the mid-caps as well. The mid-cap index currently down around 1.2%. But Vivek is here to take us through all of the stocks which are in fact moving around in trade today. Vivek, over to you.
Well, thank you so much for that. That told the story of the day. The advance decline ratio, clearly more declines compared to advances. Very tough to find any shade of green on the screen today, especially as far as the markets are concerned. But one particular stock that clearly stands out is Larsen & Toubro. Big overhang lifts if in case the Hyderabad metro divestment does come about. Analysts estimate both boost in ROEs as well as EPS on the back of that, higher by 4%. The top Nifty gainer. Tata Motors, some relief coming as far as JLR is concerned. Management indicates a partial restart of digital assets. Some relief rally seen as far as Tata Motors is concerned. Tata Investment yesterday was a significant down day, but then today the stock has continued its upward momentum, higher by 5%, one of the top NSE 500 gainers. And RITES is in focus on the back of multiple order wins that the company has announced to the exchanges. On the other hand, negatively, clearly, we can't look beyond the pharma pack, and within that, Sun Pharma, 100% tariffs on branded as well as patented drugs are given a specialty portfolio amongst the top laggards in the session today. And the entire CDMO pack, all of these stocks under significant pressure. Look at names like Loris, Pyramid, Syngene, Biocon, Divi's. All of these stocks in biosimilars seeing significant selling pressure. Intellect Design is the other stock on the NSE 500, the top laggard today, down by over 5%. And Idea, on the back of the delay as far as the verdict on AGR is concerned, that particular stock has sold off over 6% lower. Lastly, metal stocks have seen quite a bit of selling pressure come about after a few days of up move or sale down by over 2.5% today.
Okay, Vivek, thank you so much for that. And the only green, I think, is all of us wearing green right now with L&T and RITES. Apart from that, everything is in the red. But thank you so much for that, Vivek. On that note, we're actually going to slip into a very short break. Don't go anywhere. We'll be back with more markets and stock-specific action after the break. Welcome back to Half Time Report on CNBC-TV18. As of now, Nifty still is trading with cuts of almost more than 100-point cuts. 0.5% decline still continues for the Nifty 50, and the top sectoral loser continues to be Nifty Pharma, down with cuts of 2%. But that's the big story of the day, right? US President Donald Trump has announced a 100% tariff on imported branded and patented pharmaceutical products. This is going to be with effect from 1st of October. Now, unless companies are building and manufacturing facilities in the US, defined as having broken ground or being under construction, this is the update that's come in there. Let's go across to Ekta to bring us what's the impact that we are watching out for the pharma companies.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts, many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15% and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Thank you so much for that, Ekta. You know, important updates that we have to be keeping an eye out on in the pharma pack. And in fact, today we also spoke to the management of Wockhardt Group on the US President Donald Trump's 100% tariff on branded as well as patented drugs starting 1st of October. Here's the comment coming from them.
One of the important things is all our new molecules like Xenic, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Xenic in USA. We would be filing to US FDA sometime next week. We would be filing Xenic next week. It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it even in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Okay, on that note, we're going to slip into a very short break. We'll come back and discuss actually with the management of Sai Life Sciences is going to be joining us up next as well. So stay tuned for that.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, it's definitely turning out to be a weak day for the markets. We have the mid-cap index, which is down around 1.3% at this point in time. And we do have the Bank Nifty also, which is down around 0.8%. But it is specifically about Pharma and IT. But do watch out for stocks such as IndusInd Bank as well, which is down around 2.8% at this point. Geo Financial is down around 1.6%. Eternal too is seeing profit booking from the Nifty space, which is down around 1.6%. So there is profit booking, which is cutting across segments and sectors at this point. L&T, however, managing to hold up with a gain of around 3% odd. Tata Motors bouncing back in today's trading session. But let's move on. The Defence Ministry has signed a 62,370 crore contract with Hindustan Aeronautics to procure 97 Tejas Mk-1A aircrafts for the Indian Air Force. Our colleague Parikshit Luthra spoke with the CMD, who also outlined the timeline for these additional 113 GE engines. Listen into this conversation.
We have already concluded the negotiations. The financial figures are finalized. We expect in a month, now that this main contract has been signed, before end October, we will be able to sign the contract with GE for the 113 engines. The negotiations and the price has been already finalized.
What will be the timeline now, sir, for the complete delivery of the 83 that were ordered in 2021 and now the 97 which have been ordered?
Yeah, the total orders, both the orders combined is 180 aircraft. So we should be able to close this by FY 32-33.
Right. My final question to you, sir, would be, what about the AMCA program? What's the level of interest that HAL is likely to show? Of course, HAL may be one of the front runners when it comes to the AMCA program.
Yeah, we are going to participate definitely in the AMCA expression of interest. We have had interest from all the partners, private partners in the country. We had issued our own expression of interest. We had 28 companies responding to it. So everybody wants to work with us. We have set up a committee internally to evaluate these responses. And we will be shortly finalizing the tie-up that we will have. And we will be bidding before the end of this month, which is the last date. Right. And this is, of course, a screening stage where the selected companies will be given the RFQ in the next stage. So we will definitely be participating.
Welcome back. Well, the market is closely watching potential effects on CDMO players if in case global formulation companies redirect capital towards building US manufacturing capacity, which could hence possibly reduce offshore outsourcing. While this does pose a risk for Indian pharmaceutical companies, Indian CDMOs, as of now, they remain well positioned to capture opportunities due to factors such as China Plus One and the US Biosecure Act, which aims to move dependence away from China. Listen in to a slice of a conversation with the management of Sai Life Sciences, who I had the opportunity to interview from the Genome Valley. Listen in to Shiv Chatur talking about a whole host of factors which are actually driving CDMOs up right now.
We've announced a 700 crore total investment for the current financial year, of which a significant portion of this will happen within Genome Valley. We're doing multiple things within this. We are actually adding additional discovery capability. We've acquired around 10 acres of land in addition to whatever facilities that we've got. That will help us add discovery services capability. We're adding process research capability and peptide research capabilities in the current facility that we are in. That would help us, get into new modalities. We're also adding additional capability within biology. We're going to be adding additional equipments and things that would kind of help us do integrated discovery services. That's really the focus for this year. That's really what we are building.
Okay. Well, you are a CDMO company, so give us a sense in terms of the kind of opportunity you might be seeing. All of your peers are talking about incremental RFPs, a lot of inquiries coming through because of factors such as China Plus One as well as the US Biosecure Act, which could be in the pipeline again. What is your experience with?
I think the last 12 months has been a significant uptrend with respect to what we are seeing in the entire industry from an India perspective, primarily driven by diversification theme. I think India for a long time has not had due share with respect to the new chemical entity business, and that is changing. What we are seeing today is customers coming and talking about a lot more strategic portions of outsourcing, people trying to pick up their partners that they would want to work with for the next few years. China has had an early mover advantage in terms of having scaled up faster, but today what the global pharma companies and innovators are looking at to actually how do you rebalance this portfolio, which is kind of skewed one way. That is going to drive growth, not just for us, but I think for the entire industry for the next few years. That's really what we are all excited about.
Okay. But how much of this opportunity could probably be, limited because of the scale of the CDMOs?
I think industry will give you time. Pharma doesn't do a one-shot move into anything very specific. There are a few factors that become very important. I think one is capability and talent, that you need to actually have the right set of talent, something that we've always built. We also believe research and development will play a significant part of how you would scale up later. A forte of Sai, that's something that we've built over the period. If these two are aligned, and if your infrastructure is aligned with the Western standards, I do believe that the growth is a continuous process. Pharma by nature is a little conservative. They will start slower. They would give you enough time for you to grow. And as long as there is no stoppage in terms of investments from right companies, outsourcing will continue to grow.
So how much have your RFPs increased in the past 1 year?
We generally don't track it by RFPs because we believe conversations are much more important.
So how much have conversations increased?
We've seen significant strategic conversations, both in terms of dedicated development centers or dedicated development partnerships that we've signed. This year we've seen customers coming back to us talking about very specific initiatives where they can start working with us on a longer term. Something on the development side that we haven't seen before, and I think that's a big trend in terms of how longer term outsourcing and manufacturing will go.
So when does this translate into numbers, and how much of it rather translates into numbers?
For larger numbers, it would take probably a couple of years, but I think you will already start seeing changes in terms of numbers, margin, and growth profile. Touchwood numbers have been good for the last 3 quarters. We've managed to meet numbers or beat numbers for all the 3 quarters that we provided, and we think that the trend is continuing as an industry.
So you did 300 crores in your CDMO business. There was a huge rise or increase in your CDMO revenues. Is that a sustainable run rate now? 300 crores becomes a base?
Within the CDMO industry, quarterly numbers are always very difficult to predict because we don't control the end product. Our end manufacturing or CDMO scale-up starts based on a customer PO. Our longer-term trend is to a 10 to 15% growth rate. That's really what we have presented
on the
CDMO business, and I think that's something that we continue to
Are
guide.
your numbers showing the impact of China Plus One already?
Yes, definitely. I think there are multiple pieces that we can see. I think when we listed, we talked about specific tech transfer projects where customers have reached out to us for a non-Chinese source for commercial projects. We've done more than 12 projects over the last 2 years. Some of them already become commercial. Some of them are in the stages of becoming a commercial supply for Sai. This is very important because the customer is looking for a non-Chinese source. It's a product that's already commercial. Now somebody needs to work on it to make sure that it still meets the regulatory guidelines and you can kind of scale it up.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is where we started the show with, right? 100 points downtick continues for the Nifty. 24,780 levels is what the Nifty continues to be at. And obviously, the broader end of the market seeing clear pressure as well. We have an update that's coming from Waaree Energies as well in terms of a clarification, because in the morning there was some news flow that came in that Waaree Energies is being probed by the US in terms of some duty evasion on solar imports. And the company is saying that they have cooperated with US investigations in the past and will do that even in this ongoing investigation. US market is a very important one for them, and they will continue to abide by the local laws as well as continue to, increase their footprint in the US is what they want to focus on. Let's also pull up RITES today, because that's the one that we'll be keeping an eye out on. They have an order win that's coming for the company, around an $18 million international order. This is from South Africa, an important one there because they're furthermore expanding their presence in South Africa. This is to deliver locomotives, and that will be completed within the next 6 to 8 months, this delivery. Furthermore, this will strengthen RITES' export portfolio as well as its presence in the Africa market, which they've been focusing on as well. So that is something that we'll be keeping an eye on. RITES is managing to hold on to gains of 2% in today's trading session. In the last hour, we have seen some bit of a gain coming in for Poly Medicure, recovered from the day's lowest point. Keep an eye out on that. Abbott India, that's another one that's recovered from the day's lowest point as well. So these are some of the names that have seen a recovery coming in, especially in the last few minutes. They're in the red, but yes, they're seeing a recovery coming in these stocks. But with that, we'll wind down this edition of Halftime Report. A quick programming note as we wind down this edition. If you are looking for the big bets and market themes that will shape India 2030, Nilesh Shah of Kotak AMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have signed up. Become a member today on the CNBC TV18 app or log on to cnbctv18.com. Access plans.
Stocks take a beating with mid-caps bearing the brunt after Trump unveils a fresh set of tariffs, adding further uncertainty to global trade. IT and healthcare are the big drags. Telecom too stalls after the Supreme Court defers its hearing on Vodafone Idea. In a landmark move, the Supreme Court has overturned its earlier order, paving the way for JSW Steel to retain its interest in Bhushan Power and Steel. The court observed that the purpose of IBC had been achieved and it would be disastrous to undo the deal. It also dismissed the EBITDA claims as this was not part of the resolution. The Telangana government has indicated its intent to take over phase 1 of the Hyderabad Metro along with its debt from L&T for an equity value of 2,000 crore rupees. Analysts see the move lifting a big overhang on the stock. Donald Trump has announced a slew of new tariffs, with the most significant being a 100% levy on patented and branded drugs not manufactured in the US. While India generic industry will see no impact, select players with branded presence like Sun Pharma may see a dent. With an aim to draw the first-time car buyers into its fold, Maruti Suzuki is planning to roll out a 1,999 rupees EMI scheme. This follows the unprecedented response to its post-GST offers that are pulling in customers in droves. Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I'm Vamakshi Doria and it's the last trading day of this week, and one would have probably hoped that the market sort of takes cues from the festive season of Navaratri. It's green day today and sees some green on the screen, but unfortunately that's not what the market is doing. It's a sea of red as far as the overall market is concerned. The Nifty for now has broken below the 24,800 mark, trading with a cut of over 100 points. The advanced decline ratio vastly in favor of the declines today, and that is being seen in the mid-cap as well as the small-cap indices as well. The mid-cap index was down almost over 1% the last time I checked, and so was the small-cap index. So again, the trend of the mid-cap as well as the smaller-cap index underperforming the benchmark index continues. Now, as far as sectoral movers are concerned, all of the sectors barring realty are in the red, and of course we're seeing some fair bit of pressure coming in on auto, FMCG, as well as the Nifty Bank. There's no support coming in from there because we did see some support at least come in from that front. But of course the big story of the day today is the US President Donald Trump has announced a 100% tariff on imported, branded and patented pharmaceutical products effective from the 1st of October. Now, unless companies are building manufacturing facilities in the US defined as having broken ground or being under construction, Ekta is bringing us all of the impact. Ekta, over to you.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts, many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15% and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Thank you so much, Ekta, for breaking down the news development as well as its impact on Indian pharma companies. But in fact, earlier today, we spoke to Habil F. Khurakiwala, who's the founder and chairman of the Wockhardt Group, and we discussed with him the US President Donald Trump's 100% tariffs on branded and patented drugs starting from the 1st of October. And what would the impact be on the Zenix drug? Let's listen in to what he had to say.
One of the important things is all our new molecules like Zenix, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Zenix in USA. We would be filing to US FDA sometime next week. We would be filing Zenix next week. It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it even in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Well, that was all on the pharma sector for now. But moving on then, in a big relief to JSW Steel, the Supreme Court has overturned its own judgment on the resolution relating to Bhushan Steel. Ashmit is joining us for more details on this. Ashmit?
Right, so a massive relief coming in for JSW Steel, the Supreme Court overturning its own judgment and granting its blessings to the 19,700 crore rupee resolution plan by JSW for Bhushan Power and Steel. Now, there are various findings which emerged in favor of JSW Steel. The Supreme Court, for one, observed that as far as the delays in implementation of this resolution plan is concerned, the Supreme Court said squarely that this is not the fault of the lenders, this is not the fault of JSW Steel. This is due to an ED investigation that was investigating Bhushan Power and Steel under PMLA. Mind you, this is important given as how the first time when this entire resolution plan was scrapped, that was due to citing of these delays. That's number one. The second is the Supreme Court very clearly records as a part of its order that the company, Bhushan Power and Steel, has changed, has turned around completely, that it was a loss-making, defaulting company. JSW Steel brought in crores of rupees, brought in thousands of employees, and with that has managed to turn the company into a profitable entity. And this, the Supreme Court said, is at the very heart and the very intention of what the IBC is trying to do, and therefore using that to back JSW's resolution plan for 19,700 crores. Not just that, there was another third key aspect, and this is a fresh demand that had been raised by the lenders, that the EBITDA for the period that the company was under insolvency, that EBITDA should flow towards the lenders. This figure was stated to be 6,100 crore rupees. The Supreme Court has struck down on that demand as well, saying that there is no need for grant of this additional dues from JSW Steel to the lenders, that this was not a part of the resolution plan, and therefore no case is made out for that. So on all fronts, a big relief coming in for JSW Steel, their resolution plan now slated to go through for Bhushan Power and Steel.
Well, thank you so much for that, Ashmit. Indeed, big relief and big positive for JSW Steel. But do stay on with us because the Supreme Court has now deferred the hearing in the Vodafone Idea AGR dues case to October 6th. Ashmit, tell us more.
Well, all eyes clearly on the DOT, on the position that they'll be taking before the apex court. There was a lot of tension, a lot of build-up ahead of the hearing today. The Solicitor General on behalf of DOT was supposed to appear, give some roadmap of what the resolution to the Vodafone Idea crisis may look like. For now, however, the government, being represented by the Solicitor General, has asked for more time. Vodafone Idea said that they did not object to this extension of time. The next hearing will take place on October 6th. But again, the substance, the facts of the case remain the same. Vodafone Idea knocking on the doors of the apex court. They had essentially moved again against additional AGR dues that are being claimed by the DOT. What is interesting, however, is when the matter had come up the previous week on Friday, last week's Friday, that's when the government had taken a very dramatically different position. Far from earlier letting Vodafone Idea fend for itself, this time the government actively batting in support of Vodafone Idea, saying that the government has skin in the game. The government now enjoys a 49% equity stake in the company, that this is an issue that requires support from the government. This is an issue that requires support from the court. So that is what has inspired some hope for Vodafone Idea going forward, with the government now siding with the company in favor of more support, in favor of some relief, at least on the AGR front. That is one issue that we'll hopefully get more clarity on at the next hearing on October 6th.
Absolutely, Ashmit. That is one important case that we'll be closely tracking and bringing you all the updates on. For now, Vodafone Idea is trading close to the day's lowest point. But moving on then to the big GST 2.0 consumption boost story. Now, earlier, we spoke to Maruti Suzuki's Partho Banerjee to understand how the GST 2.0 reform has played out for Maruti in terms of sales during Navratri so far. So let's listen into that conversation.
I think the response of the GST 2.0 reform, thanks to first the Honorable Prime Minister and the Honorable Finance Minister for coming up with this reform, the response has been phenomenal. Just to give you a perspective, that we are almost having every day 80,000 inquiries, and bookings are to the tune of 18,000 per day. And we have already crossed the 80,000 mark of the retails after the start of the Navratra. So small cars also, we are seeing a very good response. The bookings have almost grown by 50%. And the interesting part is this: beyond the 100 cities, we are seeing a much better traction of the small cars. I think it's too early to give a comment on the year-on-year basis, because the first half has been a washout. You know, the industry is almost at flat. So I think let's wait for some more time, and then it will be better to give a forecast. The total bookings, how is the growth into the entry-level cars? It's the highest in the entry-level cars. The growth is to the tune of 50% in booking. And the best part is this: we are seeing a very good traction across all our entry-level cars. Yes, along with the GST 2.0 reform, we have also tried to do a very strategic pricing. Our endeavor is to increase the motorization in India, because the overall, the pie of the auto industry was not growing. We are giving a very special offer, festive offer, till 31st of December. So we want the people to upgrade from two-wheeler to four-wheeler. And we are coming with some very innovative schemes of owning a car, the entry-level car, just by paying an EMI of 1,999 per month only.
Well, you heard it from the management of Maruti Suzuki, indicating that bookings are in the fast lane. But take a short break, then we'll get you more news and updates on the other side, so don't go anywhere. Welcome back. The brief bit of recovery that we did see in the markets has been sold into. The Nifty is now down 140 points. We're seeing some fall come in counters like Bajaj Auto, which has cooled off about 1% or so from the day's highest point, trading at 8,871. So there you go, Bajaj Auto seeing a sharp fall in trade today. Apart from that, take a look at Trent as well. That too has slipped to the day's lowest point, down almost 0.8%. Apart from that, look at Axis Bank as well. 1,150 odd levels is where the company is trading at, and in fact it has cooled off almost more than 1% or so from the day's highest point. But on to some more news from the United States. President Donald Trump has signed an executive order declaring that his plan to sell TikTok's US operations to US and global investors will meet the national security requirements. Listen in.
This is going to be American operated all the way, and great respect for President Xi, and I very much appreciate that he approved the deal, because to get it done properly, we really needed the support of China and the approval of China.
Are you satisfied that there's no security concerns for the
Yeah,
US?
I am. I really am.
That it would push disruptive
The
content?
biggest reason is that it's owned by Americans, and very sophisticated Americans, and people that love the country, and very smart Americans too. So they don't want anything like that to happen.
All right, on that note, let's slip into a very short break for now. We'll get you more news and updates on the other side, so don't go anywhere. Thanks for staying tuned into Business Lunch. Well, the Indian Air Force bid farewell to a controversial yet much loved aircraft in the form of the MiG-21, which retired this morning after 62 years of service. The IAF first acquired these aircrafts in 1963 and over 870 aircrafts were inducted over the years. The legendary Russian aircraft has taken part in all of India's conflicts since the 1965 war with Pakistan and was the first supersonic fighter in India's armory. The retirement of the MiG-21 has also brought to light concerns over the Air Force's dwindling squadron strength, something which the Ministry of Defence is working to address with orders for the homegrown Tejas fighter. Now, in an exclusive conversation with CNBC-TV18, Hindustan Aeronautics Chairman and Managing Director T.K. Sunil also said that they will be raising their capacity to 30 jets by 2027. Listen in.
We have already made an investment of almost 2,000 crores over the past few years. We have 2 lines in Bangalore producing 8 each aircraft. And the third line at Nasik, we've spent close to 700 crores to expand that and make it another line producing capable of producing 8. And the first aircraft will roll out this month from that line. We effectively have a 4th line in the private sector, where the airframe parts come from the private sector. We get the wings from L&T in Coimbatore. We get center fuselage from VEM Technologies in Hyderabad. We get the center fuselage from Alpha Tokol. We get the vertical tail and the rudder from TASL, it's a Tata Group. So we effectively have a 4th line in the private sector. So this will bring our capacity to close to 30 in the next couple of years.
Moving on then, floods across Maharashtra have wreaked havoc, affecting the lives of millions, especially farmers. Now, CNBC-TV18 Santya Gora travelled to Ahilyanagar to see the destruction in the aftermath of the floods. Take a look at this report.
Soil erosion in agricultural lands, uprooted trees and damaged crops. These visuals show you how severely Maharashtra is impacted because of heavy rainfall and floods. Team CNBC-TV18 is on the ground zero to bring you the ground reality. Maharashtra government claims that 31 districts in Maharashtra are impacted and over 85 people have lost their lives due to heavy rainfall and floods in Maharashtra so far. And crops, over 50 lakh hectares have been damaged, including crops like onion, bajra, maize, cotton, soybean, oranges, pomegranate and pulses. Maharashtra government claims that it has sanctioned a compensation of over 2,000 crore rupees for over 31 lakh farmers so far. Maharashtra government has also sought assistance from centre, and Chief Minister Devendra Fadnavis has written to Union Home Minister Amit Shah requesting funds from NDRF's quota. Maharashtra government has assured proper compensation to affected families and affected farmers, but the farming community has demanded that farming community and the opposition, they have demanded that the state government should announce this year, should declare this year as wet drought year, a decision the state government is yet to make. In Ahilyanagar with camera person Swapnil, this is Santya for CNBC TV18.
Well, a quick programming note for our viewers. If you're looking for the big bets and the market themes that will shape India's 2030, Nilesh Shah of Kota KMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have already signed up. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans.
The final 2 hours of what has been a forgettable trading week for our markets. You're watching Midcap Radar. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vivek Aiyer. Vivek, good afternoon. It's not been a good afternoon. It's not been a good week. And the screen is very evident of that.
That's right. Good afternoon, Hormas. Barring a miracle, I don't expect us to end in the green today. We're down 0.7%. All indices in the red, as you just saw on the top of your screen. Well, we have a lot lined up on the show. Some important stocks too that we will be tracking. So let's start off with the top headlines. Stocks take a beating with mid-caps bearing the brunt after Trump unveils a fresh set of tariffs adding further uncertainty to global trade. Pharma, IT and metals are the big drags. Realty bucks the trend. Mid-caps drag.
Pharma stocks, large cap, mid cap, small cap, all of them are under pressure. Donald Trump has announced a slew of new tariffs, the most significant being a 100% levy on patented and branded drugs not manufactured in the US, while India's generic industry will see no impact.
Vodafone Idea under pressure after the Apex Court defers hearing on the AGR matter to October 6th. Solicitor General seeks more time on behalf of the Department of Telecom.
RailTel is in focus after it has received the letter of award for 970 crore rupee worth of orders from the Bihar Education Project Council. The company has also received an order to establish physics, chemistry and biology labs.
Microfinance institutions in focus after a Motilal Oswal note. The brokerage firms say the industry is experiencing a directional improvement as they expect a more meaningful earnings recovery to materialize only from Q4 FY26.
Boy, if you're a bull, look away from your screens because the losses have only gone from bad to worse in the last few minutes, and every single intraday recovery that the Nifty has seen so far has been very, very swiftly sold into. Same was the case in yesterday's trade. Same is the case in today's trade as well. We are now below the 20 DMA. We are now also very, very convincingly below the 61.8% retracement support of a 24,800 as well. In fact, 24,700 is now under threat of being broken on the Nifty. And also to know the fact that from the lows that we had at the start of this month, which was 24,400 till the 1,000-point rally, we have lost almost 3/4 of that already. The broader markets are no different. The mid-cap index also at the lowest point of the day, now 1.75% lower on the mid-cap index as well. It's a 1,000-point cut over here. And the other, of course, is the small-cap index, of course, trading with losses of a similar quantum, if not more. And it's been read across the screen for the broader markets as well, 2% lower on the small cap index. But is there a pocket that is in the green in this sea of red? Vivek has hopped across to the wall. He'll tell us just that. Vivek.
Well, finding a pin in a haystack, that was how tough it was to actually go ahead and find some green on the screen today, given the kind of advanced decline ratio. It's very, very weak. Like you mentioned, the small cap index down over 2%, and clearly more stocks in the red than in the green. A couple of stocks do stand out. Tata Investment Corporation, that particular stock yesterday was significantly lower. Today has recovered and it's resumed the upward momentum that it was seeing. The other stock on the radar is Jupiter Wagons, this particular stock amongst the top NSE 500 gainers. Writes a couple of order wins for this particular railway-based company as well. That stock higher by 1%. And Supreme Industries, an initiating coverage note coming in from JM Financial. That stock higher by over 1%. Few stocks far, very few and far between, you're actually seeing stocks in the green today. On the other hand, the entire pharma pack, while most of the pharma stocks are under pressure, we are focusing on the CDMO space. All of the CDMO stocks under significant pressure, down anywhere between 3%, and Laurus Labs down to the extent of 7%. The other set of stocks are continuously under pressure the entire week is actually the IT pack. Today, the entire mid-cap IT basket, Persistent, HCL, all of these stocks down anywhere between 2 to 4%. And a few more stocks in the broader end of the market that are witnessing significant pressure. Have a look at names like Idea, Polymedicure, a stock that did quite well yesterday, Ratnamati Metals, Hind Copper, it's been on a significant upward momentum throughout the last couple of weeks today, taking a bit of a breather. And have a look at HFCL, that particular stock lower by over 5% today.
Out of the FNO ban today is HFCL, seeing some bit of repercussions of that as well. Vivek, thank you for that update. In fact, tomorrow is the 27th of September, and tomorrow was the day in 2024 when the Nifty had made a record high, 26,277. and since then returns in the negative. Hemen Kapadia of DR Choksi Finserv is joining in for a quick chart check. Hemen, good afternoon. Thank you for joining in. Well, they are talking about all sorts of supports, 25,000, 24,850, 24,800, all of them taken out now. Where do you find now? Where you still go down to 24,400 yet again? What's your call on the index and specific stocks as well?
Very good afternoon to you, Thomas. Thank you for having me on the show. It's anything but good for the market. But like you said, most of the levels have been gone. I mean, it's like hot knife slicing through butter. I mean, there is absolutely no respite. There were 3 upward gaps. One would have thought the first 2 could get covered up. The latter 2 get covered up. The first doesn't. That gets covered up. And now today we are seeing a bearish gap. So it's been a one-way ride up, one-way ride down. Frankly speaking, the VIX today has gone up, but it was sub 11. So, I mean, normally you wouldn't warrant such a big fall on a VIX which is sanguine. It's not on a tear at 14, 15, 16 or something. So defies logic. Having said that, 24,792 was an important level, which is gone. And like you said, there is little bit at 24,600, but the level to watch is 24,492. So I guess we are heading towards that 24,400 level that you mentioned initially in your starting statement, almost. So nothing good, like you said. IT is weak. I mean, it's all over the place, frankly speaking. There's an exception, like maybe a Larsen and Toubro, and very few things far between.
Absolutely right, Hemen. Very tough to find any specks of green in the market today. But are you being a braveheart today afternoon? Any buy calls from your side, or are you mostly sticking to sell calls?
I wish I could run away and hide, Vivek, and anything. But honestly speaking, on a serious note, Larsen looks good, but it's not broken out. It's been here for 17 months. So will giving a recommendation at this point in time work? I don't quite think so, because I mean, we've been here for ages. So a couple of calls, but these are shorter term calls. One would have to be nimble, because the way it's gone, it takes support, could bounce back. But having said that, 2 sell calls. Firstly, a sell call on Cummins at 3950, stop loss 4,000, target 3850. Secondly is a sell call on HDFC AMC. One can sell HDFC AMC at around 5,700, stop loss 5,800, target 5,500. Overbought, negative divergences, crossover sales, double top, weakness on the weekly charts. I mean, the whole market is that way. But yeah, there is significant weakness technically on the daily and weekly. Cummins is more of a weekly weakness, daily weakness.
If only is a very wonderful statement to use if you could, Hemen. But thank you for sparing time and joining us with your views on the index and on specific stocks as well. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Gaurav joins us. There's an interesting report from Motilal Oswal as far as the MFI names are concerned. Gaurav, take us through the report.
Well, yes, when we talk about the MFI segment, we have already seen some stress which was built up. But now Motilal Oswal is saying is that they are expecting some kind of directional improvement, although the improvement is a little bit slower than what it was expected earlier in first quarter of FY26. What they have highlighted is that over-leveraging was an issue, but at the same time, some specific state-related issues like Karnataka and Tamil Nadu that added a bit of a more time to the recovery. At the same time, when we talk about flood situation, we have already seen states like Punjab and Jharkhand who got impacted, but they believe it is going to be a seasonal impact and it will get contained within 2 to 3 weeks. What they've highlighted is that state like Assam, where they are seeing high-ticket loans and customers' ability to pay those high-ticket loans are a bit low, and that is the reason they have shown some kind of concerns. But when it comes to the overall growth trajectory, they believe that second half of FY26 is where we will see some kind of growth. Remember, the industry has actually degrown almost by 19%. If we compare it with March 24 numbers, it has degrown to around 3.5 lakh crores of total loans. At the same time, they believe that the worst of MFI cycle is behind us now and industry is set for gradual recovery. When it comes to the credit cost, legacy stress is going to keep the credit cost elevated, but we will see some kind of improvement in fourth quarter of FY26 or in FY27. With this, they have also given some stock calls. They have actually upgraded rating for Fusion Finance to buy because currently the valuations are attractive. They are reiterating buy rating for Credac because they believe that although the valuations are high, the recovery for Credac is going to be higher than the industry. And they have downgraded rating for Spandana Spurti to neutral because they believe that the recovery is going to be slow and there are near-term catalysts which are missing, and that is the reason why they are a little pessimistic about Spandana Spurti. So definitely watching out on the entire space as well as these 3 stocks that they have highlighted in their report.
Looking to latch on to any bits of positives at the moment. Gaurav, thank you for that update. Some expectations of improvement from the MFI space. There's one pocket that has been in the news recently, you don't talk about it very often, is the pipes space, and JM Financial has initiated coverage on this today. Ria is joining in with more from what they have to say on these pipe stocks. Ria.
Well, yes, Hormuz, JM Financial has initiated coverage on the pipe sector. First, they've talked about Supreme Industries. They have a buy call on the stock with a target price of rupees 5,400. The capacity for Supreme Industries is set to cross around 1 million tons by FY26, which will be aided by the recent acquisitions that the company has made that will expand technology as well as the regional reach for them. The management has also guided for 15 to 17% growth in the piping volumes in FY26. They are also expecting strong operating cash flow around 50 billion rupees over the next 3 financial years, and the company is also targeting sector leading capex of around 2,900 crores over the next 3 financial years, and this is without any financial strain to the company, so they have a positive view on this one. For Astral, they have an ad rating with a target price of rupees 1,600, saying that the company continues to strengthen its CPVC franchise through backward integration into resin. The adhesives business of the company, which constitutes around 22 to 23% of the revenue, is expected to deliver healthy growth in India, and corrective measures are also underway in the UK operations. Although the company does have some lower utilization in the bathware segment, and there is intense competition in the paint segments as well, and this remains a challenge for the company in the near term. Going forward, they are expecting an 18% EPS CAGR over the next 3 financial years with limited capex commitments, and this is poised to generate around 1,900 crores of FCF over the next 3 financial years, which is 2x of the prior 4 years, and this will also enable net cash to rise by around 4 times. Over the next 3 financial years. Coming to Prince Pipes and Fittings, they have an ad rating on this one as well with a target price of rupees 360. The company is repositioning itself as an integrated water solutions provider by scaling their bathware and water tank adjacency segment alongside its core pipes business. However, the volume for this company has lagged over FY20 to 25. They have a 6% CAGR versus just around 11 to 12% for the leaders in this segment. Margins have also declined. EBITDA margins have come down to around 6% versus 14% earlier. Return ratios have also declined from around over 20% to just about 3%. Going forward, the volume is expected to grow by around 9% CAGR over the next 3 financial years. So positive view on the pipes space coming in from JM Financial.
Thank you so much, Ria, for joining us and taking us through the details of the JM Financial note as far as the entire pipe space is concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
24,700 taken out, and decisively at that on the index. Now then it's a significant fall from for the Nifty, now over 200 points down on the index. The weekly losses now have gone up to 2.5% on the Nifty, which is turning out to be the worst week that the index has had since March of this year. So it's turning out to be the worst week in nearly 7 months for the Nifty. The similar story playing out for the Nifty Bank as well. It had closed below the 55,000 mark yesterday itself, and since then the losses continue to mount for that index as well, even below the support level of 54,500 that we had highlighted earlier in the morning, below that level as well on the Nifty Bank. But on the sidelines of the Branded Residences Summit, Anil Chadda, the MD of ITC Hotels, told Shilpa that they are seeing interest from some developers and are looking to get into branded residences. He also spoke on demand amid the festive season and their guidance on the number of keys for the future. Listening.
I think it's a tremendous opportunity if you ask me, because the movement has just begun, if you ask me, in terms of luxury living, and luxury can be at all levels. It's very personal choice of luxury. So I think in terms of what we can bring to the table is tremendous value with the developer and eventually for the home buyers, because this is a brand that has been built on trust for many years. There is a lot of work that has been done in building some great assets that we've done for hotels, and we can certainly add a lot of value in terms of building luxury. We are extremely well known when it comes to the cuisine part of it, so we can run some great club facilities. We've developed our own brand in the wellness space called the Kaya Club, so you could look at that opportunity as well. And we are a sustainable chain. All our hotels, all our own properties are LEED Platinum. So there's tremendous amount of learning that we've had over the years, which can be shared with the builders, and eventually together, I think we can create a lot of value for the home buyers.
Right. So is this something that you're seriously looking at? Have you already started collaborating with developers? And do you see this trend strongly going forward, that you'll see a lot of hospitality players actively getting into branded residences?
Well, I think in the last year or two, we've certainly got a lot of interest, and that's what we are evaluating right now, because the brand has been built over the years. And what is really important is that you partner with the right developer and you build the right quality. More important than the money you make out of it.
Right.
But what is important is to create a lifetime value for the home buyers.
Right, understood. And so, now we're talking around the time of festive season, and usually around a time where we also see a lot of tourist inflow coming in the second half of the year. So how is the demand looking like currently as we speak? And are we also seeing a significant pickup in foreign tourist inflow?
Well, if you ask me, the second half traditionally is always better than the first half. We are just entering into October. We are, certainly hoping that we have a great quarter 3 and quarter 4. So the real test is now between H1 and H2.
But I mean, just trying to understand early indicators, what they're looking at.
Early indicators are good, but the booking window has also shortened a bit.
Okay.
So as you go along, this is also the wedding season which kicks in.
Correct.
This is also the time when a lot of international movements do take place.
Correct.
So we are certainly looking forward to that.
Right. And early bookings, are they indicating that, this festive and this holiday season will be a lot better than last year?
Remember, Diwali is a festival which you normally celebrate at home, so it's not so much out of that.
But the wedding season also comes around this time.
Yeah, so wedding season is looking very good.
Yeah, in terms of advance bookings, have you seen a lot of demand?
Yes, all the hotels that we do weddings, we are certainly seeing a lot of good demand as we go along.
Right.
We also have a lot of hotels who've done some great weddings in the past, so we can see good traction out there.
Right. And so, the chairman had said that you are likely to exceed your target of 200 hotels by 2030, which could be about 220 hotels, right? And I think last year you signed about 30. How many can we expect will be commissioned in this fiscal, sir?
We are saying that we should maintain our run rate. We opened, our average was 1 hotel per month, and we'll maintain that. And that is why we set a target for ourselves, as the chairman had mentioned, and we are well on track on that to deliver that number.
Well, the Nifty now breaking below the 24,700 mark, no different for the broader markets as well. Over 1,000 points lower on the mid-cap index, the Nifty Bank below key support levels as well. And it's time to call time on this edition of Mid-Cap Radar from Vivek and me. Thank you for watching. Your stocks on the other side with the markets in the red.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, today the color for Navaratri is green, but markets really don't want to follow that at all. Look at the fall that's coming for the Nifty. Furthermore decline. Now it's below 24,700, 24,660 is what the Nifty is trading at the day's lowest point as of now. Now, we had few sectors that were managing to hold on to some green. That was the auto pack, but that has also moved into the red. And now all the sectors today as of now are trading in the red, with sharper cuts seen for the Nifty Pharma as well as the Nifty IT. Looking at the broader end of the market, underperformance coming in there as well. So Nifty mid cap as well as the small cap, clear pressure today seen for both these indices as well. Nifty mid cap down 1.7%. Nifty small cap also is trading with cuts of almost 2% in today's trading session, more than 2%. So that is what we'll be keeping an eye out on. As of now, the markets are trading at the day's lowest point. Keep an eye out on those losers that are coming in for the Nifty 50 as well. So yes, we have M&M, IndusInd Bank, Eternal, Sun Pharma, all these among the top losers for the Nifty 50. But that's why the market setup is looking like as of now. But this is a show where we solve all your stock-related queries, and we're going to be doing just that with our experts for today. We have Shaina Mukaddam as well as Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan. Somil as well as Shaina, good afternoon. Thank you so much for joining us. Somil, I just want a quick word first in terms of the markets, because now again we are around the 24,600 level. What are the key levels we're keeping an eye out on today in terms of the Nifty at close, and what will it mean for us going forward then? If it closes around 24,600, what is the indication then?
Good afternoon, Vinny. Good afternoon to everyone. Markets are sliding below 20 and 40 daily moving average. It is now getting very close to 200 daily exponential moving average. The trend is down, low top, low bottom formation. A lot of sectors like IT, pharma, real estate are looking negative. Even the autos, which were doing good, metals were doing good, and in fact, even the reality was doing good. So these stocks have started, profit booking. Some selling pressure has started coming up. So everything has come up together, and the selling pressure is intensifying now. So I think the next level to watch out is 24,400, which is very close to 200 daily exponential moving average, and that should be the target in the very short term. So the view is negative in the short term. In fact, if the market closes below 200 daily moving average, then the medium term also becomes negative. So be very cautious from here on.
Okay, be cautious from here on. That's the view coming in there on the markets right now. But let's move on and get started with those stock-related queries for today then. The first query for today is coming from Padma. She's writing to us from Andhra Pradesh, holding 200 shares of Granules. The price is 100 rupees as what she's bought it at. Now, she wants to know the future prospects of the stock. Shaina, good afternoon. Granules, from the level that she's bought it at, she's making good amount of profit. But given the concerns that we're seeing coming in, whether United States front or even in terms of their plant issues that were going on, what is the view now on Granules, and should they book out their profit?
Yeah, so Vinny, I would say that she needs to take at least 50% off the table. She's making decent amount of money. As you mentioned, their plant, Hyderabad plant, has got one US FDA warning. Also, in terms of, if you look at their profits, if you look at their turnover, look at it over a three-year period, it has stagnated. It's been almost flat. And the reason being that while they are, they are world leaders in their segments of operation like paracetamol and metformin, but these are older molecules. So the growth over here is limited. Now, added to all this is the uncertainty with regard to, import duties by US. Of course, as of now, it doesn't attract, but there is that possibility that overhangs sword. So while valuations are not very expensive, if you compare their turnover to the market cap, it's just about 2.5 times. So in pharma API terms, it's not that expensive. At the same time, given all the other factors, I would say take half the money off the table.
Okay, take half the money off the table, can hold the remaining half. Somil, what's your view for Granules on the charts and technicals? Would you say they should book out all their profit, half the profit, or continue to just hold it?
I think granules have taken resistance around 550, 555 levels for the third time in the last 1 year, which is a very negative sign for the stock. Now, granules has also started making low tops, low bottom formation, trading below 20 daily moving average. I think the stop loss for a long position would be 505. If the stock closes below 505, exit would be my call. And then the next level on the downside would be anywhere between 430 and 440. So yes, the stop loss for a long position should be 505.
Okay, keep an eye out on those stop loss levels over there as well. Next query for today is coming from Adi Narayan, who's writing to us from New Delhi. He's holding 10 shares of Dixon Technologies. Price is 4,200 rupees per share. The other one is 100 shares of Bajaj Finance at 630 rupees per share. So wants to know the target price to exit for both these stocks, and on the fundamentals, does it merit holding both of them still? Shaina, your view on Dixon Tech as well as Bajaj Finance?
For Dixon Tech, I would say even current price is a good price to book at least half your profits. He's making good money in both. He can, in my view, continue to hold Bajaj Finance with a stop loss, but you can hold the full quantity in my view. Dixon, see, basically, if you see, the numbers are very strong. In Q1, they grew their profits, they doubled their profits. Turnover growth also was very good, more than 100 times, 125%. So they're doing very well in their mobile vertical. These factors will continue on into the current year. But even if it does, even if profits double, if you look at pure valuations, look at 1 year forward, FY27, doubling of profits still, EV by EBITDA is 35 times. So if you're a holder for 1 year, 2 years, in my view, the stock is very expensive. Take half the money off the table. Now, as far as Bajaj Finance goes, I believe their valuations at about adjusted valuations of 4 times price to book, in my view, is not expensive. Q1 was a bit of a dampener, a little bit underperformance in terms of their overall growth, also in AUMs compared to what they have done in the past. Also, their net NPA was slightly higher compared to the previous year. Having said that, I think valuation still at about 4 times adjusted price to book, not too expensive for Bajaj Finance, given that I think the growth in the second half will be much better. So ex bonus price, it's doing pretty well. You could continue to hold. If you want to do some tax planning, yeah, you can always sell the original quantity, a bit of it, but otherwise continue to hold.
Okay, continue to hold Bajaj Finance, can book some half bit of a profit for Dixon Tech. That's the word on the fundamentals. On the technicals, Somil, they want some exit price that you can look at for both these stocks as well.
I think if you want an exit price and you've already made money on this, exit price would be now. Okay. Because for Dixon, in the medium term outlook, I think it is going towards 16,500 and probably around 200 daily moving average, which is around 15,600, 700 levels. So you probably would get better prices to buy, and if you're looking for an exit price, this is the right time to go ahead and book some profits in Dixon. Now, Bajaj Finance, I'm very positive in the medium term, long term, but there is no doubt that this stock will also be correcting a little bit till the 40 daily moving average, which is around 550. So if you're looking to book out some profit or you're looking for an exit price, right now is the time, and you can buy at lower levels around 950, 930 levels.
Okay, keeping an eye out on those levels over there for Bajaj Finance as well as Dixon Technologies, and mentioned when you can exit as well. Let's move on to the next query then for today. We have Ganesh Pai, who's writing to us from Kochi. He's holding 510 shares of ICICI Prudential Life Insurance. This is at a price of 678 rupees per share. They're making a loss on this one. Now, he's asking if he can continue to hold this for 1 more year and wants to know if it's actually worth holding or should he just get out at the current levels. Shaina, your view for ICICI Prudential Life, is this one of those bets you can continue to hold or maybe move to some other life insurance company or overall on another sector?
See, it's not a bad stock to hold for the long term. Having said that, I think at least half of the the quantity he can book his loss and sort of exit ICICI Pru at least half the quantity. See, if you look at valuations, price to embedded value, is around 2 times currently, which in my view is a bit expensive given the fact that their overall growth in revenues is a bit impacted because of the changes that happened last year in terms of the ULIP taxation. While GST, now having been removed for life and health insurance policies, so it's a very good positive for growth, and I think second half will do well in terms of overall growth. At least it will compensate whatever the decline had been for the ULIPs. Profits also is growing well. So overall, there is nothing wrong with the stock. At the same time, I would say that you can take 50% off the table because of valuations.
Okay, can book 50% of the value of your current holding in terms of concerns for valuation, but otherwise a good stock to hold for the long term. Saumil, your view for ICICI Prudential Life, should the viewer continue to hold this because they're holding it at a bit of a higher level from their buy price?
I think it has just started making low tops, low bottom, trading below 20-40 daily moving average, trading below 200 daily moving average from last couple of months already. So it is in a downtrend already in last couple of months. So negative view in the short term, medium term, both. I'll be expecting the stock to go down till at least 560, 550 levels. So you'll get better prices from these levels to buy onto the stock. But overall, if you see the long-term charts trend still remains positive. So buy on decline should be the strategy. But at this point of time, it is definitely heading towards 560, 550 levels.
Okay, keeping an eye out on those levels over there for ICICI Pru. But on that note, we're actually going to slip into a very short break. But a programming note coming in for you all, for our viewers. If you are looking for the big bets on market themes that will shape India 2030, Nilesh Shah of Kotak AMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have gained up and signed up. Become a member today on CNBC TV18 app or log on to cnbctv18.com access plans. Welcome back to Your Stocks on CNBC TV18. We still have with our Shaina Mukaddam as well as Somil Mehta to solve all the stock-related queries. Let's keep it going with the next query then for today is from PS Raju, who's writing to us from Vishakhapatnam. He's holding 10 shares of Hitachi Energy. This is at a price of 19,229 rupees per share. Currently making some bit of a profit here, but wants to know the future prospects of the company and the medium-term outlook. Shaina, Hitachi Energy, what is your view coming in for this cap good company? Is it a good bet? Should they continue to hold it for the medium term?
I'm not sure of the medium term because valuations are pretty expensive. But having said that, I would say, it's a good hold for the longer term because in the short term, medium term, it's more like a turnaround stock. So I wouldn't really look at numbers, but I would look at their order book, which is very strong. They've got order book of around 9,000 crores, and they have got tie-up with they've got some tie-up to sell HVDC plant for in Australia, which I think is going to get them a good amount of revenues and profits because they will be supplying the equipment from their India plant. And if you look at the growth also in terms of their quarter numbers were very strong, and I expect it to continue. Turnover is doubling, turnover is going about 27-28%, but profits are more than doubling. So I think numbers also over a period of time will catch up. So I would say continue to hold. Parent is very strong and hold it for the longer term.
Okay, can hold it for the longer term there. And on the technicals, what's the view for Hitachi Energy, Somil?
Absolutely positive. Agree to the view. Hold on to the stock. The support level would be around 18,350. That would be first support. The next support on the downside is 16,760. So these are the two levels I'm watching out for. I'm looking for this stock to continue the uptrend. Medium term uptrend, long term uptrend is intact. And I think the next level to watch out would be around 21,600 levels as target.
Okay, keeping an eye out on those levels over there. We just had some flashes that came in for Raymond Lifestyle right now. So Raymond Lifestyle, they've given some notification that yesterday certain officials of the Income Tax Department had visited the company's offices as manufacturing units in India, and they had conducted a survey. But as of now, the stock is trading at the day's lowest point. Keep an eye out on that. It was just a survey that was conducted right now is what the information is coming on the exchanges. Let's move on then to the next query. We have next query coming from Aniket Parekh, who's writing to us from New Delhi. He's holding 600 shares around of BLS International. The average buying price is 351 rupees per share. Wants to know the long-term view on the stock. Shaina, what's your view for BLS International?
I would say if you're holding it for the long term, continue to hold. It's a small cap with market cap of about 13,000 crores, and the stock has corrected. But I would say the business prospects remain strong. They have recently also tied up with UAE, and they've got number of other tie-ups with various countries for the consular services and visa services, which include, most of them like China, 70 plus countries. And China could be a good growth going forward from here. Some of the Middle East countries, African countries show good growth going forward from here. So I would say you continue to hold. In the shorter term, you could see some bit of consolidation because it's not very cheap or anything of that sort, but it's reasonably valued. So if you're holding it for the long term, I would say continue to hold.
Okay, holding it for the long term, continue to hold. That's a view on the fundamentals. On the technicals, Somil.
BLS looks negative to me. Trading below the averages, trading below 200 daily moving average. It's been in the downtrend for a little while now. Struggling to go above the averages, which is a negative sign for the stock. The next target on the downside, which I'm aiming, is around 310. And if it does not sustain around those levels, then the next level on the downside is 260. So my suggestion would be to exit this stock. In the medium term, in the short term, even in the long term, it looks a little negative now.
Okay, a bit negative on the technical front for BLS International. So keep an eye out on those levels over there as well. But next query for today is coming from Shashank, who's writing to us from Hyderabad. He's holding 200 shares of IDFC First Bank. Price is 40 rupees per share, making a profit. Asking if you should remain invested in this one. Shaina?
Yeah, I think you should remain invested. Valuations are not expensive. It's about 1.3 times price to book. And here, I believe that second half will be better. They have raised some funds recently on convertible preference issue. And I would say that in terms of both growth as well as valuation, it looks decent as of now at current levels. So you could continue to hold.
Continue to hold is the word on the fundamentals for IDFC First Bank. Technical levels for IDFC First Bank. Should the viewer remain invested or book out his profits?
I think if it is for medium-term trade or a positional trade, then definitely book out some profits, because it is already in the in the downtrend, in the medium-term outlook, in the short term as well, making low top, low bottom below 20-40 daily moving average. And I think the next level on the downside would be 63, 62 level. So almost around 10%, cut from these levels. So anyone who is positionally on this stock should definitely book out some profits.
Okay, book out some profits for IDFC First Bank on the technical front. That's the view. But that was the last query for today. Shaina as well as Somal, thank you so much for joining us as always and helping our viewers solve those doubts. And have a great weekend. And viewers, thank you so much for tuning in. But a quick check in terms of the market right now. It's almost at the day's lowest point. It is at the day's lowest point. 24,640. Around that mark is what the Nifty is trading at. Keep an eye out on that. Pressure continues to be on the broader end of the market as well. But with that, it's a goodbye from me as well as the team who put this show together. Thank you so much for tuning in. Up next, you have Closing Bell to take it to the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up a bit subdued.
Bank Nifty slightly outperforming the Nifty. Here the support is the 20-day moving average, which comes in at 54,680.
And yes, IT has been focused. It's down 5.5% so far this week.
If any significant weakness in some pharma stocks, I would look at as an opportunity to accumulate the stock based on information available right now.
30 aircraft by 2027.
24,840, 24,850 is where we are at on the Nifty.
Bharati can genuinely do very well in 3-4 years.
We have to assess the impact of the tariff.
I would hold.
Hold. Okay, I thought so from the way you said. Wait for uncertainty to abate.
Very same judgment has been U-turned, and it's cleared the way for JSW Steel's resolution plan for BPSL, that is Bhushan Power and Steel.
It's a sixth day of losses now for the Nifty.
Novartis has planned to invest around $23 billion over 5 years.
Telangana government has agreed to take over phase 1 of the Hyderabad Metro Rail project from L&T. We're down 0.7%. All indices in the red, as you just saw.
Well, it is a pretty poor session. That's the day so far. We are down 250 points. 24,800, that big level is gone. And now we are, of course, looking at much lower levels. Across the board, market breadth, terrible. Large caps, mid caps, small caps. I mean, it's a bad Friday. No other way to put it. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surbi and Rima with me. Guys, good afternoon. Nigel is joining us from the newsroom floor, guys. Nigel, good afternoon.
Hi, you classified it as a bad Friday. I thought it's a bad week, right? The Nifty is down close to about 3-odd%. The mid-caps are down 4.5%. The small-cap index has almost inched towards a 6% loss for the entire week. And Hormus tells us it's the worst week since February.
Yeah, and you know, the entire rally that started towards the end of August, I was looking at levels. 29th August is when the market started its up move. It was a slow and steady, but it was a good rally, 1,000 points. We are very close to giving up most of those 1,000 points. The rally started from a level of 24,400, thereabouts. That's where the recovery process started. We're just about 250 points away from that. So let's see. Hi, Nigel.
Nigel is coming on, sir.
Okay.
Okay, all right. 24,642. I think about 250 odd points. That's it. To go back and retrace pretty much everything. And the level we put out in the morning was 24,800. That was like the make or break. And that got taken out in the first, I think, within the first 1 hour or so. But it's accelerated in a very, very dramatic fashion starting about 1 o'clock, 1 p.m. or so. And I think the chart will tell you the story on the Nifty. Bank as well, I think something similar there. Yeah, around 1 o'clock is when the selling, really picked up on the Nifty Bank on your screen. And just look at the mid and small cap indices. It's a 2.5% cut now on the small cap index, and I think the mid cap index also something similar. Started at about 1 o'clock, 2% cut there. Market breadth is 5:1. 5 stocks lower for every 1 stock which is higher. So, it's really kind of a slam dunk sort of a day. Let's just quickly run you through what's coming up. So markets, of course, down, 5th trade session. And as Rima pointed out, worst week since February. Pharma is the worst loser, of course. There's news there. IT stocks also lower. Accenture has issued a weak guidance. So we'll talk about all of this stuff in greater detail as we kind of sort of go along. Many of the large cap IT stocks taking a bit of a hit on your screens now.
And IT is a sector which went into this week with about a 15% cut, right? And everyone was trying to find value. So for a sector which was anyway so beaten down 15% on a year to date, it's taken another 8% knock. That's the extent of the fall. So, I mean, you were trying to find value, but in the face of H-1B visa wars, the hike and slowing growth, there is no value, right, at the end of the day.
You're absolutely right, Rima. And I think what has also happened with IT, there's Accenture.
Accenture, yeah.
Right? So that is the primary driver in that sense?
For today, it's the primary driver because Accenture's organic revenue growth is 0.5 to 3.5%. Yeah. Basically, it's reiterating. It's not that it's fresh news. You know that IT is not growing this year. It's going to be in low single digits. But this is a reiteration that, guys, there is no growth.
Yeah. There's one more thing I'd like to add, which is that, there was a bit of a break between Trump's tariff announcements, right? There was almost a period of a month and a half, no real tariff news flow. And suddenly you've got a bunch of all these
escalation in the... Yeah.
So it's not, the issue is very much alive in that sense. And with IT, I saw a note on Hire, the Hire Act, which has been proposed and is in the Senate right now. 25% tax on offshoring.
Outsourcing.
So outsourcing. So I think that is the...
fear.
That is the fear. I mean, it may not go through, etc., but I think it does raise the concern in that sense. I think, is Nigel with us now? Okay,
I think let's get to Mitesh then.
Yeah, let's go across to Mitesh for his quick take on how the market seems to be breaking down. Mitesh, how do you look at it? Levels?
Yeah. Afternoon, Prashant. So, today morning also I said that we'll be slightly negative because we've started trading below 25,150. And I looked at a possible target of 24,700. The idea was that we've been falling for the last 6-7 days, and today being a weekend, I was hoping that there'll be some short covering. That's what happened. In fact, today morning we had a gap down and there was no attempt by the Nifty to fill that gap, which means that the recent lows of 24,450, 24,400, 370 zones, I think those, that range could be revisited. I think while the market after 6-7 days of decline may give you mild pullbacks, but as long as we are not capturing 24,850 again on the upside, I think the texture will be slightly on the negative side. And as I said, I think 24,450, 370 zones could be retested. Having said that, on the stock side, Jindal Steel has come on my radar. Sorry.
Go on, Mitesh.
Jindal Steel has come on my radar. I think the stock is trading around this very critical support of 1,030. So, and the structure is slightly turning negative in metals as well. So, if it breaks 1,025, 26, take a short position with the stop about 1,046 for targets of 985. And Indus Tower is a sell. Keep a stop at 353 or 353 half and look for a 332 kind of a target.
Okay. All right, Mitesh, got that. Thanks very much. By the way, look at the VIX. The VIX is up by, I think, 15% today. So, and that's been rising. Even yesterday in trade, the VIX was up, so 7.5% this week. If you look at that's today. If you look at this week, then it's up in double digits. Yesterday, the VIX was up about 3.5% as well. So steadily, that's what I'm talking about. 7 days, 17% rise in India VIX. Not the best of signs if you look at it as well. And the broader market today, there's a total slam dunk. There's a lot of selling there. If you're looking at the mid-cap index, it's down 2%, twice as much as the Nifty. The market breadth, almost 2,400 stocks declining and only 400 stocks advancing. So it's telling you it's a very different kind of a market as well. I suppose what this has done, the twin actions on Pharma and on IT, is that all the excitement that was rising around Prime Minister Modi's birthday about the social media exchanges and we're friends and all of that, I think that's also gone, at least for the timing, it's gone out of the window. So whoever was putting in bets saying that there is a resolution and immediately something is in sight, because the actions are not adding up with the social media messages and the exchanges. And remember, our Commerce Minister has come back again. No concrete, forward steps on the trade negotiations as well. So all of that has obviously added up. Before we start talking pharma in a big way, I just want to point out the losers in the broader market. And there's so many casualties out there. Some are on news. For instance, Wari is down 7%. Because of this probe that Bloomberg has reported, which has started in the US, that they're allegedly circumventing some US regulations, and there's a probe that's underway. Vodafone Idea, obviously, because nothing came from the courts today. But even beyond, if you have a bunch of pharma stocks which are down, but non-pharma names, PSU names, NBCC, SAIL, Hoodco, lots of names on the downside as well. Hindustan Copper yesterday was rallying on the copper rally. Today it's straight away profit taking, 5% lower. Anyway, that's the texture of the broader market. But let's stick with the big story of the day, and that is the 100% tariff that has been levied by the US president on imported branded drugs and patented pharmaceuticals coming into the US. We have Ekta joining in with a detailed account of what this means for Indian pharma stocks.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts. many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15%, and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Okay, that is the big story and statement coming in with respect to the India-US trade deal and Piyush Goyal's visit to the US. And the key takeaway is the delegation had constructive meetings with the US government on various aspects. Both sides exchanged view on possible contours of the deal. They will continue with the engagements in order to achieve an early conclusion of a mutually benefit trade deal. The meetings have evoked a positive response, and the business leaders reposed confidence in the India growth story. They have expressed a desire to intensify the business activities. It all sounds very good, right? But at the end of the day, there is nothing which is being signed.
No,
or a conclusion.
There was no. To be fair, there was no expectation that something would be signed on this visit. But this does look. It's a very, balanced, carefully worded, almost sanitized. No real excitement in that sense, right?
You use a great word, sanitized. I was thinking,
Sanitized.
if you were the press secretary or the press person in charge of the Commerce Ministry, what is the statement you'd write? Exactly this, right?
So, and I think this is also because of essentially who you're dealing with, right?
Yeah.
And you don't want to say something and then it gets picked up and then, So, and that's the reason why I think for the last 4 or 5 days, there's been zero news flow. On this,
on the
US-India,
talks.
although our minister has been there and talks have been undergoing. So absolutely, hope is work behind the scenes quietly and get something done. And I think this is a move in that direction. But this is the only thing, both for the currency and from an equity point of view, which is the most important bit.
But I don't want to sort of throw cold water on any hopes at all, as hopeful as all of us and the rest of the market. But if you go by Mr. Jaishankar's comments, they weren't as quote-unquote sanitized as the Commerce Ministry statement right now, because he brought out that issue on, self-dependency and energy security and trade and security and how you balance out the needs of individual nations. So let's see. Politics still very much center stage, global politics, when it comes to the market, the street here.
And global markets today were also downbeat, right? Most of Asia's ended with losses. Hang Seng's down about 1%, about 1.25%. You've got a cut of about nearly 1% on the Japanese markets. The Shanghai index lost more than about 0.5%. So even Asian markets, there you have it, like more than 1.5% gone on the global picture. As post the strong data coming out of the US, there's a rethink on the how many rate cuts we will get. So there was softening in the global markets. I'm just saying that's added to the de-escalation, the escalation in the tariff tension.
We didn't have the best of cues, to start with, no taking away from that. Anyway, but let's get back to the big story, the pharma impact, which continues to play out on the entire pharma spectrum, even though generics have not been touched, at least as of now. We caught up with Mr. Habil Khorakiwala, a veteran of the pharma industry. Remember, Wockhardt itself has sold off its US generics business recently, but they do have a drug pipeline and they're planning to file a couple of these products in the US. He explained to us what the implications could be for Wockhardt as well as Indian pharma. Take a look.
See, Wockhardt is not, has exited a generic business completely from US. So as a company, we are not affected at all. But talking of industry as a whole, it's very difficult for the US to have drugs not coming out of India because 40% of entire usage of medicine in US comes from manufactured in India. And if there is a shortage of drug because of any other reason, it will have a catastrophic effect in the healthcare management in the US. So either the levy will be passed on to the user, that is to government or to insurance companies, and the prices of the drugs will go up accordingly.
I strongly believe that generics will be exempted because putting tariffs on generics can be disastrous for the US economy, the US healthcare system. Drug shortages can go through the roof, which can hit back at Trump's support base. So generics will remain exempted in the foreseeable future is my strong belief. And in addition, the tariff on the branded drugs, if at all some real, in select cases, very select cases, not across the board, could benefit generic pharma as well.
Okay, we'll get to Dharmesh Kant and ask him his view on pharmaceutical, but Nigel is also joining in. Nigel, hi. Afternoon.
Afternoon, what a day, right? I mean, just take a look at the markets. At the low point of the day, who would have thought? The breadth of the market is telling you that portfolios are getting hurt and selling across the board. Let's get in Dharmesh Kant, though, head of research at Chola Securities, who joins us on the show. Dharmesh, is this a buying opportunity? If yes, what are you buying?
Yeah, good afternoon, Nigel. Thanks for having me on the show. Yeah, definitely this is a buying opportunity, but you have to be mindful of what you are buying. And the idea is very clear. I mean, you have to buy domestic-centric companies where the focus is entirely domestic, and Government of India is the biggest spender out there. So, I mean, infrastructure space for the likes of, say, L&T, they are likely to do well going forward in the S2 of FY26, and that's typically a good season for them. So, infra space, railway infras is also looking very good. Auto infos has been coming in thick and fast for most of the companies. And there, I think Ircon International is fairly priced, and with this correction coming into play, the valuation looks pretty attractive going into the second half of FY26 with the budget in the mind. The spaces which we like has been the defense, which has been a structural growth story. And again, there has been a rolling in of order inflow, so it is least impacted by any of this. And some in financials like housing finance companies or banking space like private and public sector banks. So these are the select pockets when one should be focusing on, rather than trying to catch the falling life and where there is plenty of uncertainties prevailing around.
Okay. All right, Dharmesh, hi, good afternoon. Stay on, we have more questions for you. Actually, we've spoken so much about the losers. Let's talk about some of the green on the screen as well. And L&T is one of those stocks. It's managed to retain some of the gains. Let's get the stock up on the screen if we can. Yeah, still retaining 2% gain in a market like this. Some good news came their way. One of their projects which hasn't worked out so well for them, which is the Hyderabad Metro. It seems they're finally sorting it with the government and getting out of it. Vivek is here with the details. Vivek, we desperately need the green, the good news. So tell us more about L&T.
Absolutely right. The only green on the screen, apart from what most of us are wearing, but when you're talking about L&T itself, the important development. Remember, the Hyderabad Metro has been dragging the financials for quite some time. In fact, almost 6,600 crore of accumulated losses over the last half a decade is what L&T has been suffering due to its exposure to the Hyderabad Metro. So yesterday, reports indicate that Telangana government is now going to take over phase 1 of the Hyderabad Metro Mail project. They will buy out the entire equity stake of L&T, and they will pay L&T 2,000 crore for this. Remember, L&T's ask was close to 5,900 crore. But more importantly, they will also take over the debt of close to 13,000 crore. And remember, L&T was paying off the interest costs, post which it was becoming unviable for them to go ahead and continue running the Hyderabad Metro. Now, important reactions coming in as well. JM Financial says this particular exit potentially removes a long-term overhang on the stock and is modestly EPS accretive. Exit from the assets avoids PBT PAT loss of close to 626 crore on an L&T level, this on an annual basis, and expect an EPS uptick of close to 4%. Losses were at approximately 3% of L&T's consolidated PBT and approximately 4% of the profit after tax for FY25. They believe that this exit is also further positive given the fact that it boosts ROE by close to 60 to 70 basis points. We also reached out to L&T. They had to respond to our queries on this particular development.
Okay, all right, got it. Thank you for that, Vivek. Dharmesh, L&T seems to be, slight good news that's coming in. What's your call on the stock?
We have a buy recommendation on the stock, and the reason being the order book has been pretty strong, almost over 6,12,000 crores of order book they are sitting on. And last quarter Q1 was also exceptionally good, almost 30-40% kind of order book growth at 76,000 crores. This quarter also the flow has been quite significant. On a base case basis, 46,000 crores of order book they have already won. And I think with GST benefit and all rolling in, there can be some incremental 10-20 basis point kind of a margin accretion to the overall run rate. So we are expecting 12 to 15% kind of a growth. And in this environment, when you are looking for stability with such kind of a growth, I think stock price is already low and 15-20% from the all-time highs. So that kind of a tracing back to the all-time highs is a possibility. It's a tactical fundamental buy as well. And going into the budget with more infra push coming into the play, good news can be expected on the factor.
Okay, all right. Dharmesh, I wanted your view on this company, Vare Energies. I think you had got it spot on. I think you had some coverage out there and the stock did quite well. However, today the stock is under some pressure. Let's go to Vivek. He'll revise the piece of news and then Dharmesh should tell us what should investors do. Vivek, you take over.
Well, that's right. So Vare Energies, remember, there's a potential overhang and some concerns as well. So what reports are indicating is that agencies are reporting that the company is under the probe by the US Customs Department. And this is for evading solar tariff duties. Customs officials are actually investigating if Vare Energies sidestepped US tariffs by going ahead and exporting Chinese-made cells and panels and labeling them as India-made exports. Remember, Chinese-made cells and panels are subject to both anti-dumping as well as countervailing duties in the USA. So they are subject to much higher tariffs compared to what the Indian exports are accustomed to or are subject to. Now, talking about this particular development, this is actually in addition to an earlier worry that the company faced in August 2025. Remember, a consortium of US solar manufacturing companies petitioned for both anti-dumping as well as countervailing duty on Vare Energies. And why are we talking about Vare in particular? Remember, over 40% of the order book actually comes in from exports, almost 20% of the top line from this particular geography itself. Vare went ahead and gave a clarification to the exchanges. They're saying that in the past they have cooperated with US investigations and they will continue to cooperate in the ongoing investigations.
Okay, all right. Thanks a lot for that, Vivek. Investigation ongoing, stock under pressure. Dharmesh, what do you make of this? Otherwise, I think you highlighted the prospects. The runway is quite large. But this clearly has hurt sentiment.
Thanks a lot for asking me this. See, we have been recommending. Yeah, definitely, yes. See, we have been recommending Vare Energies since its IPO days at 1,500. And subsequently, we had this stock in our high conviction mid-cap basket, and then we had an initiating coverage at around 3,100. But we were aware of these developments in our interactions with the management, and there's a first solar company in the US, which is a serious competition to them. And management has always maintained that these are allegations which they can fought it around. However, the stock price did touch the target price of 38.50, and there we decided, because of all these exigencies troubling in, to book profit and get out of it. So as far as recommendation is concerned, we have given a profit booking at 38.50 with our target price, because the run up was very fast and very soon. And as far as fundamentals are concerned, those are in place. They also have a capacity in US, but these things are creating a bit of a problem for the company. And if it materializes in whichever ways, which I suspect it will, but in case that's the scenario, then there will be a significant dent into their profitability, because 40%, as has been pointed out rightly, does belong to the exposure is to US. As of now, 17% has been accounted for, but eventually it will grow to 25-26%. So, I mean, let's wait for the management's further clarification, concrete point by point. At the same time, if this fall should not be used to, buy or take a fresh position into Waaree Energies. So solar, as of now, with Reliance and Adani coming into play in a big way, I think it's better to be on the sidelines rather than being invested into it.
Yeah. Point taken there, Dharmesh. We'll leave it there. Thank you very much for joining us. Good speaking with you as always. Had a bunch more questions later when you join us. Have a good weekend. We'll take a break. We are back. And we'll go across also to Vijay Khandelwal, who will be with us when we return. Of course, it's been Ajay Khandelwal, beg your pardon, Motilal Oswal Asset Management Company. We'll also have Hormuz with us as we come back to put the spotlight on the movers in the market. Stay tuned, coming up.
Welcome back. Still down 1 on the index. The mid-cap index is down 2%. 1,200 points now gone in the mid-cap index. No sight of recovery. 30 minutes to go. Let's put the spotlight on individual stocks, the ones that are getting hit hard and the ones which are still managing to buck the trend. It's over to Hormus.
Well, the market has had a very forgettable week, but the one segment that has not had one is the auto ancillary space, and they continue to move a bit unabated. And both RACL, Geartech and Automotive Stampings, both of them are seeing double-digit gains even in a market like today's. And you take a look at the volumes here as well. RACL Geartech has seen 15 lakh shares already being traded compared to a 20-day average of just 22,000 shares. And look at Automotive Stampings as well. 55 lakh shares have already changed hands today, and compared to a 20-day average of just 65,000 shares. Now that's where the good part ends. Now you go on to the losers today. Prudent Corporate Advisory is the one is down all 5 days this week. Another 6% shaved off today. The 13% fall this week has now made it the worst week that the stock has had since March, and we have had more than 2.5 lakh shares traded today compared to a 20-day average of just 15,000 shares. And now important levels on the downside after this fall is the 200-day moving average support of 2552. Very close to that level is Prudent Corporate. The other one, of course, had to mention TCS. 6th day of losses now for the stock. 52-week low, has lost nearly 1 lakh crore in market cap this week. The weekly volumes are the highest since April. We've had more than close to 2 crore shares that have been traded on TCS this week. We had 35 lakh shares change hands today itself, and that is almost double of the 20-day average of 17 lakh shares. And the price at which it currently trades of 28.95, only 3 analyst targets are now lower than the current price of TCS. So that is one level that you need to watch out for. And lastly, Apollo Pipes. And pipe stocks have been in the news over the last few weeks, and this is down for the 5th day as well. 15% down this week, the worst one since March of 2020. And this is had today's session. We have had more than 3 lakh shares that have changed hands. The 20-day average here is just 43,000 shares. It is trading below all key moving averages considering this fall, and the underperformance continues because it's down 25% this year already, was already down by a third in 2024. So an underperforming stock is Apollo Pipes.
Right. Hormus, thank you very much for that. So those are individual moves and what's happening out there. We have Ajay Khandelwal, who's with us, fund manager at Motilal Oswal Asset Management Company, manages a range of equity hybrid schemes. Ajay, great to have you with us here. Thank you for joining us. Market may be whatever it is doing, but I was checking out, looking at some of the stocks you own in, some of your funds, names like, CCL Products, Shelley Engineering. It's been fantastic going for many of these companies actually, as I'm looking at it. With full disclosures, etc. I don't know if I can entice you to talk a little bit about Shelley. And broadly run us through what the logic is and what prospects are. And of course, not to be treated as a buy or sell recommendation.
Yeah, hi, thanks. So again, sorry, can't speak about individual stock, but if you look at the space, for example, the GLP-1, I think we have spoken about it before also. So if any business which is part of value chain and participating in GLP-1, I think they are benefiting. Secondly, if any business which is engaged into durables, fast-moving products like mobile phone, so some of those businesses are seeing traction. The order books are improving. So I think any business which is to do with these two areas are doing well. Also, I think where we are focusing on is that we are looking at those kind of businesses which are kind of market leaders who have global market share and where they have seen some kind of adverse commodity cycle, and now that is reversing. So the working capital is improving and they are seeing profitability improvement now. So I think that is working for us, Prashant. And generally, if you look at our portfolio, you will find that we run concentrated portfolios. So whatever is happening around, I think some of these businesses clearly have no impact because of it.
Hi Ajay, good to see you in. This is Nigel on this side. But what's your take on the markets on the whole? last 1 year, India has been a stark underperformer. And it's the largest underperformance you've seen in multiple years, even if you compare the Indian markets to the emerging market index. Do you think that we're getting to a stage where, in fact, it's either make or break, and which side would you be leaning towards? Also, a quick word on earnings growth, because we say the Indian markets are adjusting themselves, etc., but earnings are yet to show up. So do you believe second half of the year we'll actually get to see that earnings growth, the long-awaited earnings growth?
So, Nigel, how we are looking at this whole situation is that I think from last September onwards, we have seen almost 5-6% kind of earning cut in Nifty. Whereas it's not that the globe, the other emerging market developed economies have seen earning upgrade. It's just that there is re-rating which has happened. Some bit of it can be a function of they have better AI plays and market belief. I think that businesses which are providing and dealing in AI or beneficiary of it will do well. But it's not that their earning upgrade has happened. Whereas for us, in last 1 year, we have seen earning cut. And now if we look at it, as you mentioned, compared to the global and emerging market, our market premium now are at 10-15-year low. So from valuation perspective, from earning going forward, we don't see any earning cut. So I think given the uncertainty for this quarter, but if you look beyond that, we are very well placed.
Ajay, I know you look at the jewelry space. There are some investments in Bluestone, Kalyan, Sky Gold. So again, not getting into stocks, but have you done any channel checks on the kind of retail demand we've seen this festive season, given the prices are at record levels? I mean, what are the footfalls looking like?
See, because there is almost 40-50% kind of increase, we expect that volumes are going to come down, but all in all, the overall sales numbers will still show 25-30% kind of growth. So I think this is what, as of now, the channel check suggests. And if you combine it with the festival sales for other discretionary products, which has happened last 1 week, we believe, I think it has surprised positively. Even though there was no GST cut on some of the luxury items, but even they have seen the kind of premiumization. So I think we believe the discretionary products, especially the higher ticket size products, will continue to do well.
The gold jewelry companies can sustain this 25-30% kind of revenue growth, even if prices plateau at these levels. It's still very expensive, right? 1.2 lakh for 10 grams gold.
So see, our understanding after talking to the managements is that people come with a certain amount in their mind. So if I have a budget of X amount, I actually go and spend that. So when you look at the volume growth, because the underlying commodity prices increase, you will always say that volume growth is lower. But it is the overall spend which is still increasing. The same is true for other industries where actually commodities they have seen deflation. So there the volume growth is higher, but the overall revenue is not so great. So that always is the case.
Yeah, I mean, is there a consumption over capex kind of preference you have, or this is all single stocks? I mean, doesn't matter. As you said, it's concentrated, and most of the holdings, at least, and I'm not talking about large caps, but I'm talking about some of the mid and small caps. They, as you said, they don't too much impact from what's going on around.
See, how we look at it is that with all the macro factors, which are those stocks and businesses which will be least impacted? Now, we have clearly preference. So, for example, rural is doing well, and now we see that urban will make a comeback. So we have added those stocks where now the urban presence is higher. Even in terms of, if you look at sectors, for example, maybe IT services. Now, we see that there are these uncertainties which will impact the near-term growth. But if you look at the business process outsourcing companies, the dependency is extremely low on some of the factors which are adversely impacting the services. So there, within sector, we have looked at those subsectors where the impact is low. Even in financials, if you look at, we have asset financing companies which are dealing into gold primarily. The other financials we have is on the capital market side. So, Prashant, our idea is always simple. We try to make a portfolio which is least impacted by the given conditions, and that is helping.
Yeah, got that. More later. Thank you very much, Ajay, for joining us. Good conversation as always. Appreciate it. All right, we'll take what we'll do is we'll get you the latest in terms of what's happening on the F&O space. How is positioning looking? Because that is always important to take note of. Nigel has walked across to that F&O desk. Nigel, over to you.
Well, the problem, Prashant, is all the technical levels are getting broken and any kind of bounce is getting sold into. And today, the sense you're getting in the last hour or so is that, there's no signs of a bounce whatsoever. So telling you some of those leverage positions actually are getting taken out. And the call writers, they are making hay when the sun shines. You look at the 24,800 call, 24,900 call. Open interest built up out there is massive, and that's what's caused the PCR to actually move towards those oversold levels. So we'll have to keep an eye on that front. But for the time being, the call writers believe that when you have expiry on next Tuesday, they believe that they can defend higher levels. So 24,800, 24,900 call. On the downside, the 24,600 put, take a look at the premium. At the start of today's trading session, it was 13 rupees. The last I checked, it was 65 rupees. So those put writers as well are making money. Shorts getting added to the system, calls getting written, and puts being bought. But we're getting to that zone where you should see some kind of support coming in at around this 24,600 odd level. The Nifty Bank, well, that's the problem pocket today because that's given away any kind of support, and that was the one at least that was holding one end up a couple of sessions ago. But the last two sessions, actually, that one as well has given way. However, RBL Bank as a stock actually you should focus on. We have seen it periodically move in and out of the F&O band. Now, in the last 1 month or so, that's clearly been an outperformer. Even this week, RBL Bank is more or less flattish when the Nifty Bank is under pressure. That's telling you the street is sensing something out there, and the positioning is extremely high on that counter. Moving to the other stocks, Alchem Labs, we're seeing some fresh shorting on that particular counter. And there are some unwinding of positions as well as rollovers taking into play. Laurus Laboratories, we're seeing some kind of unwinding out there. Finally, we normally tell you the stocks that could possibly enter the F&O band. This time around, Bandhan Bank appears like the one that's going to be entering the F&O band. And the one that could likely exit the F&O band will be Sammaan Capital. So by the end of today, keep an eye on both these two. They should, feature in the list of making it in and out of the F&O band. Back to you.
Absolutely. It's useful, Nigel. Thanks very much for that. Take a break. We are back. As always, we tell you what's happening in dealing rooms. D-Street Chatter with Nimish coming up in just a bit. And, of course, some buying and selling ideas, short-term, coming up as well.
Welcome back. Market still down 250 points. The Nifty Bank down close to around 600 points. Good time to get you an insight into D-Street chatter. Nimesh joins us. Nimesh, you know, the bails have been taken out by the wicketkeeper. All of a sudden, the bulls have got stunned. What are you picking up?
So clearly, you know, it came as a bit of a surprise, as you rightly pointed out, Nigel. Again, you know, some very crucial technical levels got broken out. So I guess that's putting pressure as well. And again, I've been saying, right, I mean, there has been FI selling as well. But I spoke to a lot of fund guys, the sell side guys and all. Couple of, things which comes out as the key reasons for the recent underperformance. One, the fresh fears of tariff war, right? We saw what happened to IT, and now there is a fear about same thing can happen in pharma as well. There could be few more sectors which can be under pressure. So that's a clear fear about further tariff wars as far as the US is concerned. So that's one big reason. The second big reason is the aggressive FIS selling. We saw what the kind of number we saw yesterday as well. There was a bit of a feedback yesterday. There is a basket selling, and you saw the gross number and the net number. The net number was more than 5,000 crores of FI selling. So that relentless selling is still there. And the third and the most important part is, if you look at the recent support for the system was the domestic liquidity, and now there is a fear that a lot of these IPOs are sacking out the domestic liquidity in the very short term. I was talking to some fund managers yesterday. The feedback is virtually the entire day they are busy from meetings to meeting, meeting all those IPO companies, and also clearly there is not enough bandwidth for when the domestic funds and the domestic flows to look at the secondary market. It's all getting sucked into the primary market. So these are the few explanations given for today's fall or for the recent underperformance. As I said, technically also we are looking weak now. Some crucial support has been gone. Mid-cap index is down 2%. The bigger pain is in the broader market. Yes. For the last 1 week, every day you're seeing the broader markets underperforming, and that's clearly a pain point, so to speak. But having said all this, we keep highlighting this, right? Anytime when the PCA falls below 0.65, you see a bit of a technical pullback. Market looks technically oversold, so one pullback is round the corner. It can happen in the next week or so. But we have the expiry as well as the RBI policy. So that will be the big triggers to watch. Maybe that can be an impetus for a bit of a short covering rally. But clearly, market looks oversold, but there is a lot of FI selling even in today's market.
Well, that's right, Ramesh. Well put. What about individual stocks? What are you picking up?
Well, so again, at least there are some outliers even in today's weak market. So the first stock on my list is AU Small Finance Bank. It's relatively outperforming in a weak market today. There is buy flows, what I understand as well. A couple of reasons for outperformance today. One, there is a Morgan Stanley note in the morning. They've sharply raised the target price on AU Small Finance Bank to 1,000 rupees. And they believe Q2 would be the worst quarter and things would improve from there on. And also technically, I understand one of the leading long-only fund, who's a large holder into AU, they had to sell some small stake and that's got sold out. So that supply seems to be largely over. So that also explains a pullback there. The second stock is Nuvama. It's been relatively underperforming along with the capital market basket in the last few weeks, but a bit of pullback in today's market, a bit of short covering as well as a bit of buying as well. Also, there was a note in the morning from Citi, and they say that there is extreme pessimism now, and that's not to fear about. So that explains a bit of move there. The third stock is HDFC Life. This is something interesting. It's relatively down in the last couple of days, but there is buying, is what I understand from some leading domestic funds. So buy flows and delivery-based buying as well. And the last is Apollo Micro. Within the mid-cap names, this is relatively outperformed. Well, the stock is down 5% today, but this month the stock is up 25% and has outperformed. But now I understand there could be a block in this particular stock very, very soon. So that's something to track in APL Apollo Micro.
Do we know who's going to sell, Nimesh, in Apollo Micro? Is it the promoters? I mean, who's going to be participating in the block?
There is going to be one non-promoter entity which has a substantial stake, and they're going to sell stake. So that's the indication as far as market buzz is concerned on that particular block.
Got that. Thank you very much for that. In Apollo Micro, about 50%, a little more than 50% is held by the promoters. Retail have about 40, foreign investors a little more than 7. And 1.5% is held by mutual funds. That's Apollo Micro. Thank you, Nimesh, as always, for that. Mitesh is now back with us for a few BTST calls that you can take forward for the weekend. Mitesh. You're on mute.
Yeah. I was saying I have actually, STVT calls given the way that the market is nearly closing at the lows. So Nika is something which has come on radar. So STVT with a stop at about 232.5. Look for a target of around 225, 26. And the other one is an estimated on Uno Minda. That's a stock which did very well, had a good rally, and now is showing kind of profit booking correction. So estimated here with a stop at about 1277, 1278, and a target of around 1245 million.
Okay, thank you very much for that. One auto ancillary which has done very well this week. Hormus has spoken about RACL Gear Tech, but Bharat Gear 16% up this week. It's a fresh high, and the stock has gained 30% this week and 55% this month. Bharat Gears, let's pull up a week and a monthly chart. But let's put the spotlight on the MFIs. Motilal Oswal has written a note on it. Gaurav is here to tell us the details. Gaurav.
Well, yes, ahead of the result season, let's understand what is happening in MFI. First is that Motilal Oswal says that there is directional improvement, but the improvement is actually slower than what it was estimated in first quarter of FY26. When we talk about key risk, there was a risk of over leveraging, and at the same time, the stress which is appearing from some of the select states like Karnataka and Tamil Nadu, that is actually dragging the growth and the improvement that was expected to happen. Other than that, they have also highlighted one thing: flood-related impact in the states like Punjab and Jharkhand. It is going to be seasonal, and the impact is likely to get consumed within 2 to 3 weeks. And at the same time, they have highlighted that Assam could be one point to look at, because customers do not have the absorption capacity to repay the high-ticket debt that they are getting. Other than that, industry loan growth, we have already seen it has declined almost by 19% since FY24. But now Motilal Oswal believes that from second half of FY26, we will see acceleration in the growth. In terms of the overall MFI cycle, they believe that the worst is behind us, and from here on, industry is likely to improve. In terms of credit cost, which was higher, they believe that the legacy stress is likely to keep credit cost higher for the coming quarters in near term. But from fourth quarter of FY26 or in FY27, we will see this credit cost also coming down. As a result, they have given 3 key stock ideas. First is that they have upgraded Fusion Finance to buy, because they believe that the current entry level at a valuation is lucrative. When we talk about Credac, they have reiterated their buy rating despite having higher valuation, because they believe that the improvement and the recovery is going to be faster than the industry. And third is that they have downgraded Spandana Spurti to neutral. And the reason being that they believe they do not have any near-term triggers, and that is the reason they are being a little pessimistic on this stock. So definitely, ahead of the result season, we will be watching out on MFI space, and specifically on the 3 stocks that they have highlighted.
Okay, all right. Thank you very much for that, Gaurav. We'll keep that in mind. No respite for the market, by the way, 234 points down and not too far away from the intraday low that we've hit today. That low was 24,629, so basically 630, and we're just a couple of points away from that. Well, it's a good time to actually revisit what a year it has been, because guess what? It's been exactly that, 1 year since the market fall pretty much began. We have Hormas now joining in to tell us what the journey has been like, and it's been a painful one, I think, for many stocks, but there are those who've outperformed. Here you go, September 27, 2024. That's when we hit that record high. Seems such a far memory now, Hormas.
Almost distant memory, indeed. 26,277, that record high, which was actually tomorrow, the 27th of September. Many stocks also made record highs on that day, and since then have not seen those levels. And since that level, of course, this is as of yesterday's close, at 5% down on the Nifty. We'll add a couple of more percentage points to this today. 17 stocks that have delivered positive returns in the last 12 months, and more than 24 stocks on the Nifty have declined 10% or more in these last 12 months. Now, ever since the Nifty made a record high, we've seen a lot on this market. The consistent FII outflows, sluggish earnings, cuts to the EPS estimates for the Nifty. And then from the start of the year, the reform push began from the government's front as well. We saw income tax cuts during the budget. Then came the tariff tantrums in the month of April. They still continue. And of course, we saw the GST reforms also taking place just this month. But among the Nifty performers, which are the top ones? Surprise, surprise, Eicher Motors is the top performer, 38% higher on that stock. BEL, of course, the defense stocks that have done well, 37% on that. Bajaj Finance, the compounding story of the decade, 30% higher in the last 12 months. Has seen some bit of underperformance off late, but still among the list of top gainers. Maruti, of course, with the recent rush in auto stocks, and Eternal, the new Nifty entrant, also making its way to the list of top performers. The list of worst performers is slightly longer though. IndusInd Bank has halved. Trent, with some positive returns almost over the last decade, is down 40%. Tata Motors, the list of woes just don't seem to end for this. TCS, the worst performer on the Nifty. IT, since that index made a record high in December. And Bajaj Auto down another 30%. You take a list of the other underperformers: Asian Paints, Coal India, Infosys, NTPC, HCL Tech, IT has been the biggest drag on the index over the last 12 months. You take a look at the mid-cap index. Well, of course, mid-cap and small-cap indices made their record highs in the month of December, but you're still taking a one-year view here. The mid-cap index was down 5% in the last 12 months. Almost half of the index has declined 10% or more. And if you take a look at the best performers here as well, there's an underperforming name as the best performer. Paytm is up 70% in the last 12 months, as is BSC. And look at Muthoot Finance, Vari Energies, Defense continues to make a mention here with Masgaon Dock as well. You take a look at the list of the underperformers and you will get to know Ola Electric, that has nearly halved. Sona BLW has nearly halved. Tata Technologies, the woes here continue as well, is almost approaching its IPO price now. And Godrej Properties, the list of real estate underperformers, 38% lower in the last 12 months. The losses of the small cap index are slightly bigger as compared to the Nifty and the mid cap index, down almost 7% in the last 12 months. And more than 55 stocks on the small cap index have declined 10% or more. But look at the outperformers here. Laurus Labs has nearly doubled. Amber Enterprises is up 80%. Garden Reach, another defense name, up 60%. And an IT name finds a mention here, Sagility, up 50% in the last 12 months. And the list of underperformers on the small cap index, the Tejas Networks has halved, HFCL has halved, as has Ramkrishna Forgings, Natco Pharma and Sonata Software too, seeing losses of anywhere between 40 to 45%. That was the year gone by on the index since it made a record high, and we are heading into a very, very important month with lots of triggers, starting off with the second quarter results.
And the policy next week. Thank you so much for that, Hormis. Just last week, Prashant, we were saying that, it's perhaps going to be a good Diwali and markets are priming, that maybe we'll get back to our all-time high levels, but we've just increased the distance between the current level and 26,300.
Blame the IT services sector.
And Pharma.
And Pharma. Yeah. Well, why should I be blamed alone? But it's true, right? I mean, it was so far it was just about goods, and for the first time with this H1B fee, etc., which became services. And it just raised. I just looked at, if you can pull up the week-to-date changes, it's in the Nifty IT index is down 8.5%. That's Friday to Friday. It was slow burn early on the back of H1B. There was not very much by way of a cut, but it just accelerated into the last 2 or 3 days. Of course, today included 2.5% cut there. We'll take a break. I think there's about, 5 minutes to go for close. We are back just to sort of wrap up things and get you more opinion.
It's been a tough Friday. It's been a weak week as well. The Nifty is going to end below 24,700, down more than 200 points in the index on Friday. But for the entire week, it's a gash of nearly 2.7%. The mid-caps also in free fall. For the day, 2% lower. For the week, 4.5%, with the small-cap index down closer to 6%. Look at that advanced decline ratio. By the close of trade, if you've got to put it in numbers, we had 500 stocks advancing for 2,400 declining. It's about 2 stocks to 9 stocks. That's the extent of the pain that you could see. Like bears in complete control. Sectorally, it's the IT and Pharma index. Also this week, we saw an escalation in the tariff tensions. It started with H-1B visa hike, and then add to the pain for the Indian IT sector were Accenture's poor guidance for FY26. But we ended it with a potential blow on pharmaceutical, or at least worries, about a tariff coming through. Individual stocks, at least as we wrap out the day, IndusInd Bank, top loser, 4% lower. M&M came in for profit booking. Tata Steel, Eternal, Bajaj Finance, Sun Pharma were the stocks under pressure on the way up. Only an L&T stands out, 2.7% up. Tata Motors, ITC, Eicher Motors saw some grain on the screen. Well, that brings us to a close on today's trading session. As I said, it's been a tough one, a forgettable week, the worst weekly performance since February of this year. Get into a break. On the other side, we'll come back with Editors Roundtable. Don't go anywhere.
Dalal Street posts its worst weekly fall in nearly 6 months. The Nifty and the Sensex have seen cuts of around 3% each this week. All sectoral indices ending in the red. The IT index has tanked 8% in 5 trading sessions. The Pharma index is down about 5%. Over the next 30 minutes, we'll decode the week gone by, what's behind this latest bout of weakness on the street. And of course, we'll put the spotlight on the US president's moves on H-1B visas, the impact on the Indian IT sector, as well as his moves on tariffs, which have now become a reality for certain pharma imports that are coming into the US. Hello and welcome to this edition of Editors Roundtable. I'm Surabhi Upadhyay. With me, as always, Prashant Nair, Nimesh, and of course, Nigel. And today we have with us in the studios Mahesh Patil, CIO at Aditya Birla Sun Life AMC. Great to have all the team here with us. And Mahesh, thank you for joining in. Must say, you've chosen a difficult week to come in. You know, on Friday, sometimes the market is good, people are feeling better, talking about the turnaround. Tough questions coming your way for sure.
No, it's been, I mean, this was supposed to be a festive week, right? And we were expecting that, okay, now, okay, that's, you will see all the GST cuts benefit. But actually, it's been a pretty bad. I think the end of it, it's not been, possibly because of the global factors, right? I mean, Mr. Trump has been again on the loose.
You know, let's frame it in philosophical terms, right? We rallied 1,000 points.
Yeah.
1,000 point thai nahi. वो भूल जाओ. You just given back 1,000.
Back to the start.
You rallied from 24,400 to whatever 25,500.
Like,
back to square one.
Counting on the all-time highs, right? Suddenly we're down 1,000 points.
3% away from all-time highs, and look like it would be any time. But you know that when was that H1B news? It was last weekend, right?
It happened over the weekend. It was
over the
broke
weekend.
on Saturday, basically.
And the entire weekend was hand-wringing about H1B impact. And if you think about it, Monday was not that bad. IT index, if you look at it. Tuesday, it was kind of slow burn initially. And then it picked up towards Wednesday, Thursday, Friday.
Yeah.
And that kind of sort of counts to... Let me actually, why don't I just run through the numbers, and I think that will put the entire thing in... okay, they're still making the graphics, so we'll have that.
So many stocks falling, it's taking time to make the list this week, Prashant.
But I think we can... okay, Mahesh's phone is ringing off the...
It's all happening. It's been a hectic week, clearly.
I don't know, it's mute and...
But Nimesh, kuch to bolo yaar. What are you picking?
Everybody just sits scared. You were waiting for all-time highs and suddenly we're down 1,000 points.
No,
I spoke to a lot of guys in the dealing rooms, some fund managers as well.
Yeah.
So 3 things stand out for me this week. One, of course, is the fresh tariff war, which I highlighted in the closing bell as well. Second is the aggressive selling by the FIs. Look at yesterday's number, right? 5,000 crores of net selling. The gross number was 22,000 crores. And there is a chatter around large funds, sovereign funds looking to sell out of India at this point in time. And that's largely because of the fears of how far this US-India war can escalate as far as tariffs are concerned. And last but not the least, and this is where maybe Mahesh can put in a bit of a perspective, every fund manager seems to be busy evaluating IPOs. So a lot of money is getting sucked into the IPO market. So primary market seems to be a bit, given up, so to speak. There is so much of action happening in the primary market. Even not only the domestic funds, Prashant, larger HNIs and the individual family offices, they all seem to be chasing these, private deals and unlisted markets. So again, that's also adding a bit of pressure of lack of domestic liquidity. So all this put together, again, it's a combination of IT down, pharma down, and now there are fears of some other sectors may get impacted. So that sums up the kind of mood which was there in the market all of this week.
Mahesh, on that point, the bigger point is so far it was only goods, right? With that H1B, services also come into the ambit. You think it's like an opening shot? We'll see more. There was a note I was reading saying that H1B fees hike is still manageable. That Hire Act, which proposes that 25% on outsourced services.
Yeah.
That is it's much more damaging if it really comes through. Right. Do you think that those are fears which people are sort of contemplating about now?
So come to think of it, if you look at on the services, I think nobody expects him to impose tariff, because if you look at on the services side, on a trade side, they actually trade with US is a surplus. Right? Because
US is in surplus.
Yes, because we also give a lot of services to all the Googles, the Microsoft, okay, what we pay on the services side in that sense. So given that, I doubt whether I think you will see anything, because that will also have an impact, right? On we can also retaliate over there. On the H1B visa, clearly, I think it is negative, but I think that, as you rightly said, if you look through the actual impact on the companies, it's around 1 to 3%, right? Which is not all that big. And there are various levers of trying to do some offshoring over here. So I think that is not, but I think it is the continuous negative news on that front. I mean, IT sector, if you look at it, it's been hammered so many times. At multiple times on the same news, it's been down. And in fact, we were actually turning a bit positive on that sector. Not from immediate, but a contrarian view, because valuations are reasonable over there. There's under ownership. I mean, you've seen a large amount of selling from FIs already in that sector. And most of the negatives seems to have priced in over there, right? Expectations are already low. And with US rate cuts coming in now, right, there's some amount of discretionary spend which could pick up, right, and that could improve over here. But I think the news from Mr. Trump has been
the added news flow.
Yes.
You know, Mahesh, on that point, and if we kind of take a step back and think about it, if you look at it numerically in terms of the numbers, this whole US situation was never supposed to impact the market, because as a percentage of GDP or exports to the US, you know, not that meaningful. The most economists estimated the impact to be like 30-40 basis points of GDP over a year. So numerically, this was not a big issue, but it has become the biggest sentimental overhang on the market, despite, you know, very sound actually macros. I mean, rupee has been depreciating now, but otherwise pretty sound macros, GST cuts, you know, rate action from the RBI, sizable domestic liquidity, domestic funds still getting money. So why do you think this has become such a big overhang? And it has triggered a fresh round of FPI selling as well. We've seen the FPI selling pick up since the H-1B visa situation came about. Now, we don't know what happens with Pharma, but for foreign investors, they're definitely using this as another trigger to load up on the exits.
Yeah, so I think that has been a trend. I mean, if you look at year till date, actually, India market has underperformed the emerging market by almost 26% in dollar terms. That's a large underperformance. And primarily, I think other markets, probably the outlook there was from a bottom, it was improving, whether it was China, whether it was in the Europe, and they were attractive, right? So we saw that money flow. Initially, that was the trade which was playing down. And India, I think after the trade tariff which have been imposed, while the impact is not so much on the GDP, and probably GST would to some extent compensate for that. But I think from a larger picture, I think foreign investors think that is, I mean, the relationships between US and India are not that great. And in the longer term, it has an impact, right? Because the potential, okay, what India could probably benefit in terms of catering to the US supply chain, right? Displacing that. So that opportunity kind of, the upside is at least temporarily off the table until we come to the deal. I think that, and then rupee depreciation itself, like foreigners, like if we expect the rupee to depreciate, foreigners, because they're looking in dollar returns. So in fact, rupee against the dollar in this quarter is down 5%, right? And if I look at vis-a-vis other currencies, it's down even more, right?
Euro, GBP, I mean, I think...
Yeah. So I think that has been a factor again, which has, and that is primarily also because of, there's a lot of FDI, if you look at it, right? So FDI, which used to be positive, is almost flattish or negative. There's a lot of money which is being pumped out not only from FIs, but also from these private equity guys, promoters, large promoters in MNCs selling and capitalizing on the markets, okay, which were higher.
Yeah.
So on that note, if I could just ask a follow-up question exactly to the point that Nimesh raised, and that's also a disconnect, because some of us who've been watching markets for years and now decades now, typically when the secondary market sentiment is so sour and weak and, you know, index is flat, typically the primary market action used to cool off a little bit as well. This is the one time where there's a total disconnect. It's actually, you know, gone in the opposite direction.
Right.
What explains it? Do you think it's healthy, or is it a sign of caution?
And that is a very interesting question, because see, if you look at the companies which are coming in the primary market, they are slightly differentiated companies, right? They are high growth companies if you look at the new IPOs which are coming in. So they are, some of them, the large ones, are good quality names, and in a market where overall growth has been pretty sluggish, if you look at it, right? These are some companies where the growth outlook at least is better, right? So it's kind of, that is attracting the interest in some of the large IPOs which are coming. I don't want to name them, but you will see those coming in. And that's where there's some churn which is happening, right? Because you have to create liquidity. See, domestic, at least we are getting inflows, right? But foreigners, okay, they are trying to take it out from the same pool of money and trying to create space for these IPOs. And they're large ones, right? Now we are seeing almost $1 billion, $2 billion of IPOs in the pipeline in the next single company in the next 2 to 3 months.
PhonePe is coming. Many others are coming.
Yeah, we have some large ones lined up.
Okay, Arundhati tells me that we can put the numbers out. Actually, before the numbers, I wanted to put that graphic out. It's just the chart for the Nifty. Basically, just it'll come up on your screen, and let's put that up. Yeah, there you go. Yeah, that's the one. very clearly, I think, they say picture worth 1,000 words and all, tells you very clearly what's happened, right? I mean, 1,000-point move higher, as you can see. And, the levels that you see, that's nothing but the retracement from the low, the low of 24,404 to the high that the market got to. And now, as of Friday's close, we've kind of broken below the 61.8 and about 200 points between where we closed to the starting point. So back where we started. Okay, now the damage this week, Nifty down 3%, the Nifty Bank down 2%, the mid-cap index down 5%, the small-cap index down 5% as well. So these are pretty large cuts, the broader markets especially. All sectors negative. Even the sector which lost the least was the metals index, down 1%. The largest cuts, IT 8, real estate 6, pharma 5.5, capital markets 5%. And then I looked at the NSE 500 universe. Before that, IT stocks. Actually, on the Nifty, maybe one or two names which are higher, like Maruti, etc., but otherwise all down. TechM down 10, TCS down 8.5, Wipro down 8, and that's the reason why the IT index was down 8 itself. NSE 500, lots of pharma, lots of IT again. Coforge 14% cut, Emphasis 11% cut. Kaplan Point 12, Riddington down 11, Kalyan Jewelers down 11, Loris Laboratories, Balrampur, all actually on the NSE 500, 20 odd names with cuts of over 10% is what we saw. And of course, I mean, I think in terms of what the market is focused on, it's of course India, US more than anything else, and that remains the top sort of talking point. Let's just, Nigel, why don't you come in and run us through the IT and pharma is what you're looking at, right?
Well, that's right. I think the domestic factors at play are definitely good. Whether you talk about the RBI cuts, whether you talk about GST 2.0, we're expecting earnings to pick up as well. But I think the market is fixated for the animal spirits to come back. We need to see India-US trade deal. And that's the reason that we are seeing so much of selling. And just case in point, two sectors this week. Mr. Modi got the birthday wish from Mr. Trump, and everyone was running off with the races that we're going to get a deal, etc. But over the last weekend, he went and surprised everyone. He said that an H-1B visa from 2027 onwards will cost $100,000 odd. There was a clarification that this is one-time in nature. In the near term, it's not going to be there. But in the time to come, this is definitely going to hurt. And the intent to hurt a particular sector, that is what is weighing on sentiment out there. And, we had a couple of brokerages that said that the impact on earnings could be 7 to around 17% approximately. On an annualized basis, it could be 2 to 5% odd. And there will be ways to mitigate this particular hit. But still that sector was down 5% for the week itself. So that's telling you the kind of sentiment that's getting hit out there and the intent to hurt a sector. Next up, at the start of the week, he started with tech. Then Trump said on Friday, I want to go for pharma. And for pharma also, if we look at the fine print, actually Indian companies are pretty okay. But again, the intent to go ahead and hurt this sector, that's what's hurting sentiment out there. For pharma, what did he say? 100% tariff effective October 1st. That's going to be on branded products. Remember, for India, our exports are more or less generic in nature. So in that sense, you'll say we are protected. But still the index sold off, and sold off big time in Friday's trading session. Indian companies, well, as of now, the impact is, reasonably protected. Sun Pharma is one company, 19% of the total mix is specialty, out of which most of it goes to the United States. Last year, there was a good growth out there. And analysts estimate a 5 to around 10% hit on the EBITDA front. We'll have to await clarity on this front, but it's hurting sentiment. It's telling you that maybe, in fact, at some point of time, generics as well come into the loop. Maybe the CDMO sector players as well. They thought there's going to be a big, big runway in terms of growth for them. Maybe some part of that indirectly gets hit, and we'll have to await clarity on this front. So, I was just wondering, Mahesh, what is your view? It seems on the domestic front, we're taking various measures, which is good, right? The problem is, sentiment is getting hit. And for animal spirits to revive, it'll have to be a trade deal between India and the United States. And we have state elections that are coming, in the offing, which maybe could be pushing the deal a little bit as well. Your take?
Yeah, no. So I think, while the GST cut has improved the sentiment on the demand side, right? So that is something which is positive. But really, for it to sustain, right? Because the key question is how long the GST cut will sustain the buoyancy what you are seeing in the auto sector, other sectors. So that has to be followed by the capex cycle coming up, and that's key, because in this period of uncertainty, right, especially on tariffs, large investors or businessmen who want to invest, they will still want to wait out and get a clarity over there. So I think that private capex, which will lead to the next cycle of growth, right? Because investments happen, job creation happen, and that virtuous cycle, I think that probably gets pushed out. And I would agree in that context, I think the trade deal will be important to at least get a clear picture and at least for foreign investors to start coming in. See, now India is no longer that expensive, right? I was just looking at some data. So compared to your historical relative, the valuation premium which India had, and if you asked 1 year back, India relative valuations were higher. That is no longer the case. Now they are coming closer to their long-term average relative. So I think it's more about sentiments, and you can see, again, the money flow can come back.
You know, just an anecdote on this H-1B, Nigel. I was talking to somebody who, I didn't talk to the person is based in the US. So apparently how it works is, the visa is 3 years, right? And you can extend every 3 years. So people have been on this H-1B for 13, so somebody said 13 years. So basically, you can keep extending it. 3 years, 3 years, 3 years. And you don't have to pay and that's the reason why the clarification came that on renewal you don't have to
there's no
go through the entire process. You can show, you can change jobs, whatever. The employer has to show the sponsorship, and that's it. So the existing workforce for now, and that's the reason why I think the impact generally is kind of limited in that sense. Should we take a quick commercial break here? I think we'll come back. Mahesh is still with us. We'll continue this conversation on the other side.
Welcome back. You're with us on Editors Roundtable, and we're in conversation with Mahesh Patil. Mahesh was just telling us in the break how the positions are shifting. At the asset management company at Birla Sun Life. So Mahesh, just take us through that call, because you seem to be now slowly taking a slight tilt from capex to consumption. Now, we want to understand that what in consumption. Clearly, you're taking that call believing that this is a more durable trend, not a passing fad in the market after the GST cuts. So what is the approach to consumption? It's a very wide basket.
Yeah, so I think if you look at post-COVID, the economy was driven by investments, right? Investment to GDP as a percentage went up. Again, primarily government side investment which was there. And that has now slowly come down as fiscal consolidation has happened. And for the first time, there is a shift from the government in trying to stimulate the demand side, as we talked about, right? So consumption, and there are other factors also. It's not only that. We've seen in the budget there was a tax cut which was there, okay, which will favor the salaried people. Rate cut, okay, which has been there. Monsoons have been good, right? So all these factors, okay, and there's been an underperformance in that sector, right? So that leads us to believe that, okay, this is a sector, okay, where we need to now tilt, and again, not GST, just a kind of a trigger. And in that, while GST might give some kind of impetus to discretionary spend, especially in the auto sector, And again, if you look at the auto sector also, right, it's been down for quite some time. If you look at pre-COVID and now, the growth hasn't been really much. So I think with the stimulus, you will see some pent-up demand, some replacement cycle to kick in. So I would say that it would have still much longer legs over there.
So auto is fine, but what about the others? I mean, whether it's your value retailing, QSR, staples,
so I think
durables.
it will percolate down, right? So if your disposable income, right, because whatever savings you have because of rate cut or interest rate cut, that should move into consumption. But only I think I would like to caution is that because there's a lot of leverage which has happened at the personal level in the last 2-3 years. So some amount of that savings will go towards deleveraging also. So you'll not see everything being spent on consumption, but it will be there to delever at the balance sheet at individual level.
Mahesh, next week the big trigger to watch out would be the RBI policy. The street seems to be divided at this point in time with regards to further rate cuts. What's your call and how are you positioned towards the banking sector? And especially in real estate, because post the IT fall, you've seen a bit of a reaction in the real estate names as well.
Yeah. No, I think our view is that clearly you will see a couple of rate cuts, okay, in the next 6 months. Whether it happens, this policy or no, it's difficult to say that because, but there is a good possibility because inflation is very much under control. Yeah, it's been tracking well below the RBI trend. And with US also likely to cut more rates, I think they provide some room. I mean, the rupee has been a bit under pressure, but again, I think that is something which you look at. I think there's a broad consensus that you need to support, right, the GST rate cuts along with the monetary policy so that the recovery in consumption is more sustainable, I would say that.
Sure. In terms of the type of funds, I mean, for viewers who are watching, I mean, you have multi-asset kind of strategies,
yes.
Mahesh?
Yeah.
You think those are things to kind of sort of, gold has done phenomenally well, precious metals have done phenomenally well.
Yeah.
You're at perhaps one end of the interest rate cycle.
Yeah.
You've got equities which have been flat for a year. You think those are the kind of funds which perhaps over sectoral funds or, I mean,
No, I think that's been what we have been advocating or to investors for the last 1 year. And you're right. I mean, while it's difficult to make nobody believed that gold could give you 40% return, right, in the last 1 year. And equities will be flat, right? Yeah. But as a diversification and the fact that equities were also looking kind of fairly priced and we're seeing a kind of a slowdown in earnings growth. So that's the category which naturally, and again, our view on fixed income was also that now rates have peaked out, right? So you could play that cycle also, at least slightly with extending some amount of duration in a portfolio. Even now also we feel that there is some amount of duration play, which is there tactically to play into the bond portfolio. So given that, I think multi-asset allocation look fairly good because that at least gives you some amount of kind of return. If if equities don't do well, you have others to compensate for that. And the view is not that you're going to runaway rally in equities even from here, right? I mean, it's still a kind of a more moderate view. So it's better to diversify.
On a lighter note, I've seen conversations over the last several years shift from gold, from an Indian perspective, we're anyway over-owned, looking at, physical jewelry and all in the house, look at equities and all, to conversations talking about which is the best silver ETF to have. Can you still buy gold at, current levels on that? So,
but that's again looking backward, right? Yeah. You don't know, right? Because if you see people are seeing the gold, but I think where it is, right, while there are stem drivers, but gold has also seen correction of around 50. People see gold is safe. Yeah. But if you see in the history, it has corrected by 15-20% multiple times.
Yeah, declines can be sharp as well. So what's the one sector to bet on next 1 year?
I mean, as I said, difficult to make that call. But I think if you want to play a kind of a contrarian and play the consumption, I think I would say auto sector has already this thing played out, but I think there could still be some more legs over there. Staples, consumer staples is, again, coming through. This quarter might be weak. See, most of the companies, again, the market is because this quarter would still be weak. We have to see really in the third quarter, okay, where the momentum sustains over there. So that could be a sector. Even the power utility side, right? So we've seen, again, there the investments there, especially on the coal and this thing, the plan has increased. So power T&D sector looks good. If you want to really look at the capital goods sector.
Okay, so those are some ideas. And I think he's picked consumption. I think it's time to call it a day and a week and do our bit for consumption as well, right? Maybe I'll go and shop. Nigel, I think you have some consumer consumption plans as well. And I'm sure tea. Okay.
Yes. I mean, the new teas that have come out, they're really relaxing.
We'll discuss it after we close the show. But thank you very much.
Thanks,
and Mahesh, thanks so much for dropping by today. Great conversation. Well, with that, it's a wrap on this edition of Editors Roundtable. Thanks so much for watching. We'll see you with the markets bright and early on Monday morning. Till then, keep watching CNBC TV18 for more news and updates.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Dalal Street down for the fifth day. Sensex and the Nifty lose 3% this week, marking the biggest decline in 6 months. All sectoral indices close in the red. The Nifty IT index down 8%. President Trump announces a 100% tariff on patented and branded drugs not manufactured in the U.S. No impact on India's generic industry yet, barring select players like Sun Pharma. Trump also imposes a 50% tariff on kitchen cabinets and bathroom vanities and a 30% tariff on upholstered furniture, citing unfair competition. The Commerce Minister returns after a 3-day visit to the U.S., his first since 50% tariffs were imposed. The ministry says the delegation held constructive meetings and both sides agreed to continue the engagements to achieve an early conclusion of a trade deal. JSW Steel will retain Bhushan Steel after the Supreme Court overturns its own decision in a landmark verdict. The apex court rules the purpose of the bankruptcy code was achieved and it would be disastrous to undo the 20,000 crore rupee deal. The Telangana government will take over the first phase of the Hyderabad Metro from L&T. The state will pay 2,000 crore rupees to the company for equity and absorb 13,000 crore rupees in debt. In a bid to woo first-time car buyers, Maruti Suzuki plans an EMI scheme at just under 2,000 rupees. The move follows unprecedented response since the GST cuts, with bookings for small cars saw an uptick of 50%. President Trump signs an executive order outlining a deal to transfer TikTok's U.S. business to American ownership. Vice President Vance says the business will be valued at $14 billion. Oracle, Silver Lake and Rupert Murdoch will be the key investors. No representatives from Chinese parent ByteDance were present at the signing and the company has not acknowledged any transaction. The order book of Hindustan Aeronautics rises to 2.7 lakh crore rupees by FY27 after the government's contracts to buy 97 Tejas fighter jets. HAL chairman says price negotiations with General Electric are now complete and a final contract for additional 113 engines will be signed in October. That's an exclusive. After more than 6 decades in service, the Indian Air Force bids farewell to the MiG-21 fighter jets. Air Chief Marshal A.P. Singh flies the last sortie with Squadron Leader Priya Sharma. Defence Minister Rajnath Singh calls it a national pride. Well, let's start with the day's market action. The Wall Street declined for the 6th trade session. Pharma and IT stocks dragged the Nifty lower, in fact below the 24,700 mark. Broader markets underperformed as well. Mid-cap index down over 2%. The Nifty small-cap index also lost 2%. The Sensex closing a percent lower. For the week, the Sensex and the Nifty have posted the worst weekly fall that we've seen in nearly 6 months. Down over 2.5% for both the Nifty and the Sensex. The Nifty IT index, look at that. That's the H1B impact playing out for the IT index, down almost 8% there for this week. All sectoral indices closing in the red, and the Nifty Pharma index fell 5% for the week, and that on account of, again, the worry and the concerns that after President Trump has decided to act on branded and patented drugs, will he go after generics? Prashant is standing by now to take us through the market action. Prashant, it's been a trying week for our markets, closing in the red across the board. What next now? What does the next week look like?
Well, a painful week, no other way to put it. And in a way, today was the culmination, the climax, or whatever you want to call it, for what started as a bit of a slow burn, but then really picked up into the last few trading sessions or so. But at no point through the course of the week was there enthusiasm or a turn, intraday bounces maybe, but nothing beyond that. So, Nifty down about, 2.7% for the week. Nifty Bank down 2%, mid-cap index 5%, and the small-cap index down 5% this week as well. All sectors in the red. The sector which lost the least was metals index, but that was also down 1%. The top losers, of course, IT services down 8%. Real estate lost about 6%. 5% cut for the pharma index week to week. Of course, bulk of it coming in on Friday, and the capital market index also losing about 5% in trade. Large caps, few gainers, but nothing very large. Maruti was up a little bit, and one or two more names. Tech Mahindra, the big losers, right? Further cuts. Tech Mahindra 10%, TCS 8.5%, Wipro down 8%, and that's how all of this showed up on the IT services index. And then I sort of broadened the gaze to look at NSE 500, and I counted 20 names outside of what I already mentioned with cuts of over 10%. So I'll just sort of, and of course, technology here as well. Coforge, top of the list with a 14% cut this week. LT Foods down 13%. Kaplan Point down 12%. Emphasis down 11%. Reddington down 11.5%. Sumitomo Chemicals down 11%. Kalyan Jewelers down 11%. Laurus down 11%. Balrampur down 11%. And there are more, as I said, 20 double-digit losers today. I think that summarizes price action. What are markets watching from here? I think very, very squarely focused on any positive progress on the India-US, not deal, but maybe some sort of a thaw. It looked like it was a thaw. Then, of course, the H1B fee hike kind of hit. And I think what's also happened is that last night, that is, Thursday US and, Friday early morning for us, those Trump tariffs break a pause. I mean, it was almost a 2-month pause when we didn't hear very much on tariffs at all. The last was, of course, 30th of July, remember. And after 30th of July, when copper tariffs were introduced, there was nothing for 2 months, except, of course, the 50% tariffs in India, but nothing apart from that. And that kind of sort of was broken last night with what was announced with, Big Pharma, not on generics yet, but I think, of course, it raises uncertainty at the margin whether generics at some point will be included as well. And, of course, IT services, H1B fee hike is, of course, something to be watched, but the much bigger, more lasting damage can come from what is the Hire Act, which is that proposed 25% tax on outsourcing. Hopefully doesn't get through the Congress in the US, but of course, it's something which people are keeping a watchful eye on. I mean, a poor week, and the market now basically about 200, 250 points away from where this entire 1,000-point up move started, which was about 24,400 or so. Back to you.
Well, many thanks, Prashant. That was the stock market action. The rupee hitting a record low against the US dollar in early trade. Towards the close, most losses were paired and the rupee ended at 88.71 to the greenback. 10-year bond prices declined marginally in trade today. That's the rupee and the bond market action for you. But from currencies to commodities, crude oil prices remain steady and on track for the biggest weekly gain in 3 months. This after Russia announced a ban on diesel exports until the end of the year after Ukrainian drone attacks hit the energy infrastructure. Meanwhile, gold prices holding steady near record highs. This after better than expected US GDP data dampened bets of further US rate cuts, while investors awaited key inflation data. President Trump has fired a fresh salvo on Big Pharma. The US government has imposed 100% tariffs on branded or patented drug imports. This will come into effect from the 1st of October. However, the government has clarified that these tariffs won't hurt a company unless they build a manufacturing factory in the US. Now, the Indian generics industry so far is unscathed by this order, but select companies like Sun Pharma and Wockhardt, who sell branded drugs in the US, will be impacted. Ekta is here to explain the Trump tariffs on pharma, the impact and the implications. Ekta.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts, many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15%, and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Ekta, many thanks for joining us. And it was not just Big Pharma. A slew of items were targeted by President Trump with additional tariffs. Let's start. Imported kitchen cabinets and bathroom vanities now face a 50% tariff. What else faces a tariff? Upholstered furniture faces a 30% tariff. Heavy trucks face a 25% tariff. This will take effect from the 1st of October. So those are the new items that are being tariffed. President Trump defended the decision, claiming unfair outside competition. The Trump administration is also planning to reduce the reliance on semiconductors made abroad. According to the Wall Street Journal, the White House is considering a plan to mandate a 1:1 ratio of domestically manufactured to imported semiconductors. What this means is a company will be allowed to export semiconductors only if it supplies the same number of chips to U.S. companies. Any company failing to meet this ratio will face tariffs. This is, of course, not been confirmed yet or announced yet by the White House. Now, Commerce Minister Piyush Goyal has returned after a 3-day visit to the U.S. This is his first since the 50% tariffs were imposed. The Commerce Ministry says that the delegation held constructive meetings with the Trump administration. Abhimanyu is here with what the government has said. Abhi.
A delegation led by India's Commerce and Industry Minister Piyush Goyal had visited the United States from the 22nd to the 24th of September. Now, negotiators from both the sides were also present in the meetings which had taken place between Piyush Goyal and the U.S. trade representative on the other side. Piyush Goyal also met the U.S. ambassador designate to India as part of his visit. He had met several business leaders to promote trade and investment from several businesses into India. Statement has been issued by the Ministry of Commerce and Industry, which reads that the delegation had constructive meetings with the U.S. government on various aspects of the deal, and both the sides exchanged views on possible contours of the deal. It was decided to continue engagements and with a view to achieve an early conclusion of a mutually beneficial trade agreement. It was also indicated in the release itself that the meetings with businesses and investors evoked a positive response, and the business leaders had reposed confidence in India's growth story, expressing their desire to intensify their business activities into India. It remains to be seen how early the next round of negotiations is going to take place between both the sides, even as earlier the 6th round of negotiations was slated for the last week of August in New Delhi, which had gotten delayed.
Abhimanyu, many thanks. Now, U.S. President Donald Trump met Pakistan's Prime Minister Shehbaz Sharif and the country's Army Chief Asif Munir at the Oval Office. The talks, which were attended by the Vice President J.D. Vance and Secretary of State Marco Rubio, lasted for 90 minutes. Trump praised both Sharif and Munir ahead of the meeting, calling them great leaders. The White House has not released any details about the meeting. However, Pakistan's Prime Minister's office has said that both leaders also discussed counterterrorism cooperation and the possibility of new U.S. investments into Pakistan. Well, President Trump has signed an executive order outlining the terms of a deal to transfer TikTok to American ownership. Now, under the plan, U.S. investors will take majority control of TikTok's operations along with a licensed copy of its powerful recommendation algorithm. American companies are expected to own about 65% of the new U.S. entity, while ByteDance and Chinese investors will hold less than 20%. Restructured TikTok will be overseen by a 7-member board of cybersecurity and national security experts, 6 of them American. Trump said the deal brings TikTok into compliance with U.S. laws, which would have otherwise forced the app to shut down for American users. However, no representatives from Chinese parent ByteDance were present at the signing, and the company has not acknowledged any transaction so far.
This is going to be American operated all the way, and great respect for President Xi, and I very much appreciate that he approved the deal, because to get it done properly, we really needed the support of China and the approval of China. The biggest reason is that it's owned by Americans, and very sophisticated Americans, and people that love the country, and very smart Americans too. So they don't want anything like that to happen. Yes.
Well, that's President Trump on TikTok. JSW Steel will retain Bhushan Steel after the Supreme Court overturned its own decision in a landmark verdict. The apex court ruled the purpose of the bankruptcy code was achieved and it would be disastrous to undo the 20,000 crore rupee deal. However, shares of JSW Steel saw only a brief spike in intraday trade and closed in the red like the rest of the market. Ashmit is here with more. Ashmit, it is an unprecedented move for the Supreme Court to turn over its own previous judgment upholding the IBC. Certainly good news there for JSW Steel, but more importantly, good news for the bankruptcy code.
Right, so a massive relief coming in for JSW Steel, the Supreme Court overturning its own judgment and granting its blessings to the 19,700 crore rupee resolution plan by JSW for Bhushan Power and Steel. Now, there are various findings which emerged in favor of JSW Steel. The Supreme Court, for one, observed that as far as the delays in implementation of this resolution plan is concerned, the Supreme Court said squarely that this is not the fault of the lenders, this is not the fault of JSW Steel. This is due to an ED investigation that was investigating Bhushan Power and Steel under PMLA. Mind you, this is important given as how the first time when this entire resolution plan was scrapped, that was due to citing of these delays. That's number one. The second is the Supreme Court very clearly records as a part of its order that the company Bhushan Power and Steel has changed, has turned around completely, that it was a loss-making, defaulting company. JSW Steel brought in crores of rupees, brought in thousands of employees, and with that has managed to turn the company into a profitable entity. And this, the Supreme Court said, is at the very heart and the very intention of what the IBC is trying to do, and therefore using that to back JSW's resolution plan for 19,700 crores. Not just that, there was another third key aspect, and this is a fresh demand that had been raised by the lenders, that the EBITDA for the period that the company was under insolvency, that EBITDA should flow towards the lenders. This figure was stated to be 6,100 crore rupees. The Supreme Court has struck down on that demand as well, saying that there is no need for grant of this additional dues from JSW Steel to the lenders, that this was not a part of the resolution plan and therefore no case is made out for that. So on all fronts, a big relief coming in for JSW Steel. Their resolution plan now slated to go through for Bhushan Power and Steel.
All right, Ashmit, many thanks for joining us. Shares of Vodafone Idea slumped over 8% intraday after the Supreme Court deferred the AGR case to the 6th of October. Now, this comes after the centre asked for more time from the top court. Earlier, the Supreme Court had deferred its hearing from last week on the 19th of September to today. Now, after more than 62 years in service, India's battle-tested MiG-21 fighter jet flew into the sunset one last time in a glorious farewell. The decommissioning ceremony held where the aircraft was first inducted 6 decades ago at the Chandigarh Air Force Station. Air Chief Marshal A.P. Singh flew the last sortie, as did Squadron Leader Priya Sharma. The Indian Air Force elite skydiving team descended from a height of 8,000 feet as the MiG-21 aircraft flew past, receiving an aerial salute. Jets belonging to number 23 Squadron, which were nicknamed Panthers, were then given a water salute after landing. The Indian Air Force's first supersonic fighter jet played a pivotal role in the 1965 and 1971 wars, to the 1999 Kargil War and even the Balakot strike in 2019.
मेरे मन में इस समय गौरव की भावना भी है, तो वहीं एक तरफ कृतज्ञता की भावना भी है। MiG-21 ने मिलिट्री एविएशन की जर्नी में कई और प्राउड मोमेंट्स यानी गौरव के क्षण जोड़े हैं। दुनिया के मिलिट्री एविएशन के इतिहास में ऐसा कोई फाइटर जेट नहीं हुआ जो इतनी बड़ी संख्या में निर्मित हुआ। दुनिया भर में MiG-21 के 11,500 से अधिक विमान बनाए गए और उनमें से लगभग 850 विमान भारतीय वायुसेना का ही वो हिस्सा रहे हैं।
इसके साथ जो साथ मिला इस जहाज का, वो एक मैं कह सकता हूं कि भूल नहीं सकता हूं कभी।
ये बोलते हुए मुझे बहुत गर्व है कि इस मशीन पे मैंने पूरे 20 साल काम किया और बहुत ही अच्छी मशीन है।
MiG-21 has been a part of us. Like, you know, when we started flying, this was the aircraft that got us into the, Indian Air Force. It was the one that taught us the basic skills of flying.
बहुत अच्छा लग रहा है, बहुत लंबा समय बिताया मैंने MiG-21 के साथ में, बहुत अच्छी मेमोरीज है मेरी और बहुत खुशी है कि यहाँ पे वापस आया और उस एयरक्राफ्ट को देखा जिसके साथ मैं बड़ा हुआ हूँ और ग्रो किया हूँ.
We delivered more than what we thought it will deliver, both in 65, 71, as late as Balakot, and even the latest Sindoor, they were all involved.
Well, that is the MiG-21 getting a water salute as it flies its last sortie. It has done a yeoman's service for the Indian Air Force, flying for over 6 decades. And for somebody who's watched it up close and personal, here's wishing it all the very best. With that, it is time for us to wrap up this edition of Business 360. From all of us here on CNBC-TV18, thanks very much for watching. Stay tuned. The news will continue right after this short break. The Indian rupee has fallen to record lows this week. Interestingly, keeping the rupee company in terms of depreciation in 2025 are Argentina and Turkey, where inflation is more than 30%, but both have fared worse compared to the rupee. The rupee is also declining at a time when the dollar index is weakening. The dollar index is down nearly 10% so far this year, and the rupee is down over 3% in the same period. Now, one of the key reasons for the fall in the rupee is the rapid outflow of foreign funds from India. More than $21 billion have been pulled out in the last 12 months, making India the least favored emerging market for foreign flows. Indian stocks have underperformed global peers so far in 2025 with just 2% returns, but other asset classes are booming, with commodities like gold and silver in particular seeing a spectacular rally. Now, weak rupee is not necessarily all bad. It can help exporters offset some of the impact of the 50% US tariffs. It could also bolster remittances from abroad. So how low will the rupee go? The government does not seem overly concerned at this point in time. Before I bring in our team of editors, here's the Chief Economic Advisor Anantha Nageshwaran on the weakness in the rupee. As I pointed out, he doesn't see the current levels as a key risk. Take a look.
I'm not too concerned about the rupee's current sort of recent weakness or the current levels per se. It's all right. Obviously, we have ample foreign exchange reserves and we have very low external debt. So it's not that the rupee is vulnerable in any particular manner. It is just maybe the current demand for dollars or the reduction in the inflows on the portfolio side may have contributed to this weakness. So I'm not worried about the wider.
And does it actually also help offset some of the, at least as far as the exporters are concerned?
To a limited extent, it's actually a good thing because if the Indian rupee is depreciating on the back of a depreciating dollar, it does impart a certain competitiveness in the near term. But of course, anything that is overdone will be a challenge. But that is not something we are facing right now.
Well, that is the Chief Economic Advisor saying don't see the decline in the rupee as a key risk at this point in time. And we'll get to the competitiveness aspect in just a second as well. But let me welcome on the editor's playbook, Latha, Prashant, Nimesh, Surbhi and Sriram. But first up, our in-house governor. Latha, what's going on as far as the rupee is concerned? The big question on the street, how low will the rupee go?
Well, if you only want a poll of what economists believe, most of them think that 89 is a good level. It's a round figure which the Reserve Bank will protect. And perhaps you will hear the odd 89.50. But most of them are telling you that the bad news is already in the price. There isn't much to go. Even those who speak about 89 or 89.50 will normally tell you that by March, that is fiscal year end, you may see it appreciate back to about 88. The broad range in the market is 87 to 89.
Yeah, and imagine this kind of... No, I was just saying, Shireen...
No, I was just going to say that at the CII town hall yesterday, and we had 80 plus CEOs, that was pretty much the consensus there, even when I polled CEOs on where they expect the currency to be. In the current band is what the majority voted, even at that CII town hall that we did yesterday. But Latha, you know, we took our viewers and the audience through what the Chief Economic Advisor had to say. But really, what do you attribute the decline, one of the key reasons for the decline that we are seeing at this point in time? As I pointed out, you know, it's Turkey and Argentina, but they're sitting on inflation at 30%. We don't have an inflation problem at this point in time. Okay, we've seen foreign outflows, but what really is weighing on the currency?
Well, first of all, there is the near flow problem. As you pointed out, record outflows in terms of, foreign capital. We have seen outflows of this, nature or even higher during the taper tantrum and before that during the Lehman crisis. So we should not forget that this is nothing like that as far as our macros are concerned. During the taper tantrum, our current account deficit was 5%. In fact, the last quarter, it was even more than that, the Jan-March quarter. We have now a current account deficit which is less than 1%, a historic low. So probably that is the point. You know, it was too good to be true. For the last 30 years that I can remember, when the rupee became a marketable, a marketized currency, the current account deficit has been 2 to 2.5%. This 1 year, it was 0.5%. So clearly, all over the world, governments are worried that too much is being outsourced. So we should expect some kind of a mean reversion. I wouldn't worry till the current account deficit is 2%.
You know, Shireen, I was just adding, what I was saying was that imagine we're talking about levels of 89 and some predicting 89.50 as Lata is saying at a time when A, she's pointing out our macros have been solid, and B, look at the dollar index. I mean, it's not as if the dollar has skyrocketed and therefore currencies are falling and the rupee is falling. The dollar index, the DXY is down 10%. I mean, from January, the DXY was at about 110 and today it's at 97. And, then we have this depreciation.
That's what most analysts will point out, that we are at bigger historic lows compared to the euro versus several other currencies. And by the way, we are at a historic low versus the renminbi. Until very recently, it used to be 10 rupees or 11 rupees to buy a renminbi. Today, it is 12 rupees 48 paise. So, some of this is, as the CEA pointed out, working to our advantage because, that makes Chinese imports expensive. Yeah. Forget about exports. We always tend to mistake that, it makes our exports attractive. That is the least of the problem. The advantage is that it's a natural tariff barrier for the domestic industry.
For example, the steel.
Steel, absolutely. Why did steel stocks go up yesterday, day before? Primarily because there is an advantage. But I don't think you'll catch the governor saying that he's okay with the rupee depreciation. You don't say that because it becomes self-fulfilling.
On that point, on what the governor may or may not say publicly, let me go across to Prashant because he's been putting this data together. And there seems to be a change in stance, in position as far as the RBI's intervention in the rupee market is concerned. And we were just looking at that. Prashant, in the Shaktikanta Das era, the RBI was much more aggressive in its intervention, was it not?
It was, Shireen. And so I just looked at these two periods and forgive me if I'm picking out extremes of both periods just to kind of sort of contrast and make a point. But I think it still makes sense because I think the contrast is very much there. Although I think, the current governor is he's only taken charge in December 2024.
10 months old.
And Governor Das, was at the helm of things for 6 years, right? So, under Governor Das, the dollar index went from 96 to 106. Now, this is point to point. I think 2022, we also saw 113, 114 kind of level. So, but this is just point to point. So, but you got to live through this point to point, right? And that's what we're doing right now. The policy was clear. Maintain low volatility in the rupee. And of course, the RBI used to aggressively intervene to curb rupee fall during periods of dollar appreciation and vice versa as well, on both sides. Now, this policy of maintaining stability in the rupee actually reached its peak, if you remember, during October to December 2024. This is when US elections, etc. were taking place. The dollar index saw a 10% jump, October to December 2024. And that is the period when RBI intervened, sold dollars heavily, and the headline reserves at the RBI declined $110 billion during this period. And this is both spot and forward positions combined, $110 billion in this period, right? But as a consequence of that, money market rates moved about 200 basis points above policy rates. That essentially, it was like a follow-on effect. It tightened credit conditions, and all of us have sort of spoken to companies during that period. And of course, it led to the cyclical slowdown, which some would say we are kind of sort of still unwinding as of now. Now let's come to Governor Malhotra, and I think right as Lata and we've spoken about this as well. As soon as he took over, there was this. One of the first things was, will he kind of sort of, is there going to be a change in policy with regards to the rupee, right? So far. If you look at point to point again, right? Governor Das left off at $106 index. All that has happened in the last 10 months, from 106, we've just come down to 98. In that 6-year period, we moved from 98 to 106. In 10 months, we've come off from 106 to 90, back to about 98 where we are right now. The philosophy seems to be that, India, you mentioned Turkey, etc., right? The philosophy is India attracts growth capital and it's not interest rate sensitive money, carry money which comes in. So it is so the focus very much is growth, and looks like the philosophy is let's not sacrifice growth for the sake of forex stability. And maybe that makes sense, right? External debt here for India is less than 20% of GDP. 2/3 of GDP, our GDP is domestic consumption. So it kind of makes sense. It is local consumption, which is the majority of the economy. And of course, consequently, RBI has done a lot. 100 basis point in rate cuts, injected a lot of liquidity into the system. but they've also been very tactical with sort of forex intervention. So I picked out a couple of things, and Lata can corroborate because I think she talks to more traders and dealers than I do in a year. In a day, she talks to more. But what I picked up is, they are, for example, in February, the RBI was in the market heavily, selling dollars. That is around the, I think, Liberation Day, etc. Right? Then they went on the other side. So they've been very tactical. It's not as if they are not in the market, and even now they're there.
They were there yesterday, today.
Correct. They're there every day, and maybe large sums of money as well. But they're also coming in slightly at a wider level. Earlier it used to be, say, 10 paisa. Right? Now it's 40 paisa, 50 paisa. I mean, the threshold for them to allow the move in currency has also become larger in that sense. So I think it's interesting that is what they're doing, and I think
I want to do this thing. So one is that the dollar index that we keep talking about, and Lata ma'am, can you please correct me if I'm wrong? But in the last few years, the correlation between a dollar index and EM currencies, while directionally it's the same, but they have decoupled quite a bit. It doesn't, if dollar index falls 10%, doesn't mean that our currency will also fall 10%.
No, absolutely. Oh, absolutely. On the contrary, all Asian currencies are up 7-8%.
Correct, exactly.
Versus the dollar.
Yeah.
Just a little bit in terms of trying to correlate regimes. The Shaktikanta regime held currency only for those 3 months, September, October, November types, because in October, the Indian inflation was 6.8%, above the 6% mark. You don't want imports to become expensive at that time. So the same Shaktikanta regime 2 years ago in 22 had allowed 11% depreciation of the currency in a year. So, it's different. When inflation is very low, you don't mind the currency depreciating.
Also,
and in October, we had $10 billion of FPI outflows along with...
They had to be a little different.
And Governor Malhotra
Short point is, I think, much will depend on the RBI's forecast. It's not today's flows. If they are okay with the rupee depreciation now because they believe that this is temporary, trade, even the CEA said he expects a trade resolution.
I think that's the only thing to try. I mean, for going forward, track the whereabouts of our Commerce Minister, Shireen. He's in the
still in the US. Still in the US. He's very much there.
And if there is a deal which comes, I think that is squarely what people are focused on.
Check social media every day.
No, that's
every
she
hour.
said it. She said
Every hour, check social media.
Don't check anywhere, just check.
Just check social handles
I just want to make one more point about
handle.
the dollar index, right? Shriram, you made that point. 60% of the dollar index is the euro, right? Euro is appreciated. So actually, we're talking about the rupee against the dollar being down 3.5% year to date. I checked out numbers because the euro has gone up against the dollar. I checked out INR euro. You know how much it is? Rupees down against the euro? 17%. This year. 1.7. So against the GBP, British pound is down 11%. So it's actually the euro which has strengthened substantially, and that is the reason why you've got these.
Funnily, it is worse for euro that it has strengthened so much, and for Japan, than our weakness.
Don't take a holiday in Europe.
It's the hit. I mean, they folded too soon with Trump, and they will pay the price for it over a very long time. It was a deal with the devil.
But Shireen and everybody, the advantages of all this is, up until 22, immediately after COVID, there was this burst of revenge travel. At that time, the amount of dollars we spent because Indians were holidaying abroad were huge because the euro and pound were not that expensive.
Yes.
So now there is another natural tariff barrier for Indians traveling abroad. Let's take a holiday in Sikkim.
I'm not so sure it's going to curb foreign travel. I'm not so sure it's going to curb foreign travel and get people to spend on travel.
On a more serious note, education outflows have definitely dwindled.
So you know how much is
because of other reasons.
I'll have to confirm this. UK, the outflow on education from Indian students is $20 billion. $20 billion a year. That's UK. US will be much higher, right? We'll have to look at the numbers. I've heard. So I think all of that, because of what's happening, I mean, people are going to stay here. People are going to, and there are opportunities here in India for students to do that. It's a huge bill, actually. So yeah, you're absolutely right, Lata.
I think the Reserve Bank's and the government's policy after the 1991 liberalization is markets find their level. They don't angst over the rupee that much because at a level, at 89 or 90, rupee will be attractive.
2013
and so
was a-
will the stocks be.
Exactly.
You know, both will be cheaper. So I think we are not at all at the taper tantrum or any angsting
no.
level where we have to take a capital account, step
actually, it's
of restricting. Nothing.
As people have said, macro-wise, I mean, actually, just sheer numbers. I mean, a pretty strong
Exactly.
position.
It doesn't actually get better as far as the macros are concerned.
Absolutely.
No, it does. It does.
But let's just move away from the rupee for just a second, because I want to get Nimesh into the conversation and look at what's happening in the equity market versus other asset classes. I mean, we've all been looking at the mouth-watering, jaw-dropping rally in gold and silver as well, which continues. But Nimesh, let's look at what's happening as far as the equities versus other asset classes are concerned. How do we stack up?
So, Shireen, it's very clear. A good macro doesn't mean a good market, right? I mean, that's been the old proverb, and that's how it proved to be. Look at what happened
China
to...
as an example for 20 years, right?
Exactly. No, and that's the point for India as well. Look at this year. Y2D, Nifty and Sensex are both flat. If you look at the US indices, they are up between 14 to 16%. So double-digit kind of gains for European indices, more than 20 to 30% gains for Asian indices. And even the European indices are up between 15 to 30%. So that's the kind of move we've seen across all the other emerging market, not only emerging market equities, but the global equities as well, as far as Indian performance is concerned. And this is even more shocking when you look at equity performance versus the commodities. The gold is up almost 42%, and this is Y2D dollar returns, right? 42%, 42% Y2D in dollar terms.
Yes.
Okay. If this is,
उसमें से 10% तो dollar का exchange rate है.
You know what?
No, that is in dollars.
That's what I'm saying.
Comex gold.
Okay, you're saying.
If that's the case, you know how much is silver up? 52%. Silver is a 52% Y2D in dollar terms. Forget that. Even copper, which is not a very tradable
This show
commodity.
was supposed to be about gold.
Still, even copper is up 17% Y2D in dollar terms.
Yeah.
So whether you look at commodities, whether you look at equities, global, local, Asia, India is relatively underperforming. That maybe explains the reason why it's not the favored destination as far as FI flows are concerned. It's very visible, right?
Shireen, with your permission, therefore, that question,
Yes.
How will the earnings growth look like? Ultimately, people will come for earnings growth.
Absolutely.
And we have had 5 quarters of single digit, at least if you look at the Nifty EPS growth. What's your sense about end of the year? People are predicting 13%.
13-14%.
Yeah.
If
that
looks achievable, Lata. If FMCG and all contribute, it's achievable. And if that has to happen, maybe this is the last phase of massive FI selling, because the rupee will also, as you rightly
become
pointed
cheaper,
out, so that will help them. And plus, if macros improve, in terms of macro, I mean earnings improve, you're going to see a bit of FI money coming back. But at this point in time, they have enough opportunity globally, everywhere else to make money.
I just want to get Surabhi into this as well, because she's been looking at the FI flows also, and that's something that we've been talking about. In fact, it takes me back to the conversation that we had with the DPAM secretary, where he virtually thanked domestic institutions and retail investors for coming to the rescue of the Indian stock markets. And we've been talking about the Atmanirbhar angle playing out for the stock markets as well, driven by DII and retail investors. But Surabhi, what is going on really there as far as FI flows are concerned? And to Lata's point, the return, so to speak.
Yeah, Shireen, it's very simple. FII money is finding better homes, even if they're temporary homes elsewhere. Markets which are relatively cheaper, which are showing better earnings potential, and which have a AI/tech story. Yes. It's as simple as that. Now, those are the reasons, and then therefore, here are the numbers. And frankly, numbers as of now, last 2-3 months aren't even that bad. Let's just jog memory here. I'm first talking about the India depository data, and then we'll compare it with other emerging markets. When the year started, it was on a really bad note. I mean, we had $9 billion, $10 billion kind of outflows in January. February, it came down. Then it got a little better. Actually, when the tariffs hit us, those months were positive. If you look at April and May and June, those months were positive. Why? Because the hope was, India is a local-driven economy, and we have a great relationship with the US, and we'll be the first in the queue to get a deal. None of that played out, and as that became clear, the outflow started again, because here earnings were not picking up. There was no deal happening, and the FBIs knew that they had to head back to other markets like Taiwan, South Korea, and of course mainland China. Now the outflows: July $2 billion, August $4 billion, September so far only $1.3 billion. But the fact is the market is absolutely range-bound, and that's where the point on domestic money comes in. Retail money, family offices, And, you know, all this money is absorbing so much supply. We've discussed this on the show earlier, but if it was not for the local flow, this market would have had a very different texture and nature. Now, let me just quickly contrast this with some data that Nimesh and I were discussing in terms of how do we stack up against other emerging markets. Really bad, actually. The next big EM, or one of the BRICS, which comes close is South Africa. South Africa has seen an outflow of about, this is 12 months data, about $12 billion. We've seen a $21 billion outflow. We've digested it. If you want the silver lining, thanks to domestic flows, we've digested these outflows really well.
Minus 20.
And South Korea is also minus 20. Yes, South Korea and South Africa.
Guys, coming back to the rupee because we are out of time. Sriram, let's talk about the big C, competitiveness, and we alluded to that, but you put the data together on what this actually means or how it helps India's competitiveness in this challenging environment with that 50% tariff hit.
No, so yes, you already said it, right? I mean, the rupee weakness offsets some of the tariff blow. Even on competitive terms, so for example, let's take the example of South Africa. They had a 20% advantage over us in terms of tariff. Their tariff was 30%, ours is 50%. But their currency has appreciated 10%. So they have already lost half the advantage. And we have lost another 3-4%. So the net effect is much lesser.
Yeah, instead of 30% disadvantage, it's a 15% disadvantage.
It's a much lesser. In fact, instead of 20, it's about 5 or 6.
Fair
In
enough.
the case of Brazil, both are at 50% tariff. Their currency is appreciated 16-17%, which means we are more competitive than Brazil in many product segments. Now, how much of that overlap will differ from one country to another? But the part of the correction was overdue. At the end of November last year, rupee was considered overvalued. And so a 4% correction from there, some would say that it was par for the course, right? That is one. Yes, at the current level, the 89.90 sounds scary. But, and it also helps us with the negotiations to a certain extent. I know Lata ma'am and I had this conversation yesterday about this. And I think that what happens is if Trump wants us to appreciate our currency, it's better to start at 89 or 90 than to start at 84 or 85. So by the time the appreciation, whatever we reach, we are still competitive in the market. But Lata ma'am thinks that,
all said and done, I really want to say that we shouldn't concentrate on exports. It's a very small part of our GDP. The real advantage of a weak rupee is that domestic industry gets a huge tariff wall. I expect growth with a weak rupee because of domestic industry, not because of our export industry. Because Indian exporters don't have that, rare earth advantage. If you will not bring down your garment price down, Vietnam will do. Contracts are set, prices are set ahead of the delivery. So we must not make too much of an export advantage for our currency because it is all contracted.
So
the real advantage clearly is for domestic industry. If domestic industry is gung-ho today, it is in areas where import competition is
there.
Lessened.
The point is that
Sriram, very quickly, we're totally out of time in exactly 5 seconds.
Yeah. The point is that the exports are the most vulnerable segment.
Yes.
So therefore they need the focus. Not because exports growth is necessary. They need to be protected. Let the currency protect them.
Shirin, just 5 seconds for me. I'll just But I want to say that for new money, right, new foreign money which comes in, if the rupee goes down a little bit more, a foreign investor coming in now is starting with a 3.5-4% advantage. Cheaper. Because when you take the dollar out, right, you're starting with that.
Easily.
So I just want to give a slightly pause. आपके 5 seconds.
No. मेरा 5 seconds यही था. Because it's a show on rupee. A word from internal governor. What to expect, ma'am, on the next policy?
Actually, the street is split down the middle. And I think a rate cut
Only because the rupee is...
Because of the rupee, you wonder. But, as Prashant said from the start, we are not a country which attracts money for interest rate differential. Sure. Therefore, I would think that he will give the market a leg up and go ahead and cut. The market is equally divided.
This should be the...
I would tilt. I would tilt in favor of...
That's the consensus. That was the consensus in industry as well, that we will see the MPC deliver with another rate cut. Mere 5 seconds, I'm only ruining the fact that I possess no gold, and mere kismat mein to Paytm gold coin bhi nahi hai. That's my 5 seconds of...
Go out and spend.
Gold is passing out, it is silver.
Silver is the new gold. So,
and my 5 seconds are new gold. Maybe I stand a chance with that. But guys, it's been fun talking rupee rates and relations. But thanks very much for joining us here on the Editor's Playbook. To all our viewers, we'd love to hear from you. Send us your feedback, suggestions, comments. Till next week, from all of us here, goodbye and many thanks for watching.
Hello, welcome to Global Eye. I'm Parikshit Luthra, and today we turn our attention to one of the White House most recent guests, Pakistani Prime Minister Shehbaz Sharif. US President Donald Trump not only welcomed Sharif at the executive mansion, but also praised him just ahead of the meeting. The US leader had kind words for the country's army chief, General Asim Munir, who accompanied the Pakistani Prime Minister. However, President Trump didn't refer to either man by name. He said, and I quote, "We have a great leader coming, the Prime Minister of Pakistan and the Field Marshal. The Field Marshal is a very great guy, and so is the Prime Minister." The talks, which were attended by Vice President J.D. Vance and Secretary of State Marco Rubio, lasted for 90 minutes. No further details of the meeting were released by the White House, and no press conference was held, unlike after President Trump's meeting with other world leaders. However, the Pakistani government did release photos and videos of Trump seated with Sharif and Munir in the Oval Office. Furthermore, the Pakistani Prime Minister's office released a statement which said that Sharif praised Trump for helping to facilitate a ceasefire with India, a claim that the Indian government has rejected. Pakistan's statement said that both leaders also discussed counter-terrorism cooperation and the possibility of new US investments in Pakistan. So is this meeting just optics, or is it a strategic pivot? And what does this mean for India? Joining me right now is Sharat Sabharwal, former Indian ambassador to Pakistan, somebody who has tremendous amount of experience when it comes to India-Pakistan affairs. Ambassador Sabharwal, thank you very much for joining us. What's your reading of this meeting? Do you think it's also unprecedented that the Pakistani army chief was present with the Pakistani Prime Minister during the meeting, and Donald Trump called him a great guy? Asim Munir has already visited the White House twice in the last few months.
Yeah, I think the fact that Prime Minister was accompanied by his army chief is not unprecedented. This has happened in the past. What was unprecedented was Trump's, I think it was a luncheon for Asim Munir some 1 or 2 months ago. This meeting, it seems to me, is part of the new transactional relationship developing between the two countries. It started, as you know, with the business interest of Trump family in crypto business in Pakistan. It then went on to rare earths. Earlier this month, an agreement was signed in Islamabad where an American company agreed to invest $500 million in the mining sector in Pakistan. But the manner in which Asim Munir has been feted in the White House suggests that there is a security component to this new transactional relationship which is developing. Now, what is the exact nature of this?
Ambassador Sabharwal, you said that there is a transactional relationship developing between Pakistan and the US. But is this a strategic pivot, a tilt towards Pakistan?
No, it's a shift in the US stance towards Pakistan. Let me say this, why do I call it a transactional relationship? The two countries never had strategic congruence. They entered into various transactional relationships during the Cold War, thereafter during the Afghan Jihad, the US war against terror. And in each case, the two were working together, but at cross purposes. Pakistan's aims were different from the aims of the United States. It seems to me that they are entering into a relationship of that kind. But you're right, absolutely, that, you know, it is a shift from the posture of the United States towards Pakistan, let's say, for the last decade or so. But if you wish, we can talk of the security component that I believe could be part of this new transactional relationship.
What do you think is Pakistan offering to the United States, and what is making Pakistan's offer so compelling to Donald Trump, according to you, Ambassador Sabharwal?
Well, I mentioned some of those factors earlier, and I was coming to the security component. It's difficult to say the exact nature of the security component that may be involved in this new transactional relationship. But it could be in the context of Iran. It could be in the context of counter-terrorism in Afghanistan, where, as you know, the Taliban are resisting Trump's recent attempts to take back the Bagram air base. The Pakistanis are reaching a breaking point with the Taliban because they believe that they are fanning terrorism within Pakistan. So could the two sides come together to pressurize the Taliban, or could it be in the context of the security architecture in the West Asian region? You would recall that very recently a defense agreement was signed between Saudi Arabia and Pakistan. Now, you might have seen that there has been no reaction. I haven't come across any official reaction from the United States to that agreement. Is it possible that they gave a nod to the signing of this agreement as an attempt to subcontract a part of the responsibility for security in the West Asian region to Pakistan? Now, that would be a strange choice of a partner, but the Americans have made these kind of choices in the past also. So these are the possibilities. Now, things should become clearer in the coming weeks or months. But as you rightly said, the kind of importance that is being given to this relationship now, it couldn't be purely because of cryptocurrency or some possibility of rare earths emerging later on. It may have something to do with some security component.
Right. That's an important point, sir. Whether the Saudi-Pakistan Defense Pact had the blessing of United States or not. But let me also ask you, the Pakistani statement after the meeting said that there were discussions held and Prime Minister Sharif sought US investments in Pakistan's agriculture sector, technology sector, mines, energy. Do you think the conversation was just about this, or was there some sort of larger reason, larger economic reason also why the two leaders met? Was there some offer of supplying critical minerals and giving access to US companies to Pakistan's critical mineral resources?
Yes, these investment in agriculture and education and so on and so forth, these are frills. This is going on for a long time. Some investments come, but not much investment has come in. I think if you talk purely of the economic sphere, Trump has spoken of two things. One is, of course, rare earths. I told you an agreement was signed earlier this month for investment by an American company in rare earths prospection and exploitation later on in Balochistan, possibly in the so-called Gilgit-Baltistan. So that's one. The other, Trump has spoken of oil prospection. Now, there are some reports of offshore oil in Pakistan's economic zone. There has also been talk of shale gas and oil deposits in Pakistan, but there is no well-defined estimate of what they are. So it will need prospection, it will need then exploitation, which is extremely difficult in Pakistan's security environment today. But these are the possibilities that are being talked of on the economic front.
Right. I would also like to ask you, there is no statement from the US side on the meeting as to what transpired, what were the takeaways. The Pakistani side has put out a statement, of course, but why do we know so little about this meeting?
If they made a statement, the United States made a statement, they would have also spoken of those frills that the Pakistanis have spoken of. Trump brought about peace in this region. There'll be investment in education, agriculture, and so on. If, as it seems, they have discussed some other significant things, notably those related to the security field, then they won't put it out in a public statement. And that may be the reason I think the Americans, they haven't released any statement so far. They may do so in the coming day or two, but we haven't seen any statement by them. And these statements coming from the Pakistani sides are also sketchy and, very formal.
That's an important point. Let's see how this relationship develops in the months to come. Thank you very much, Ambassador Sabharwal, for joining us for that very important conversation. It's a meeting that the Ministry of External Affairs has also said that they are watching closely. We're taking a short break, but coming up on the other side, President Trump announces a 100% tariff on patented and branded drugs not manufactured in the US. A special discussion with Jayant Dasgupta, former ambassador at the World Trade Organization, when we return. Welcome back. You were watching Global Eye. US President Donald Trump has fired a fresh salvo on Big Pharma. The US government has imposed 100% tariffs on branded or patented drug imports. This will come into effect from the 1st of October. However, the government has clarified that these tariffs won't hurt a company unless they build a manufacturing factory in the US. The Indian generics industry is unscathed by this order, but select players like Sun Pharma and Wockhardt who sell branded drugs in the US will not be affected. It was not just Big Pharma. A slew of items were targeted by President Trump with additional tariffs. Imported kitchen cabinets and bathroom vanities now face a 50% tariff. Upholstered furniture will face a 30% tariff. Heavy trucks face a 25% tariff. This will take effect from the 1st of October as well. President Trump defended the decision, claiming unfair outside competition. The Trump administration is also planning to reduce the reliance on semiconductors made abroad. According to the Wall Street Journal, the White House is considering a plan to mandate a 1:1 ratio of domestically manufactured imported semiconductors. What this means is a company will be allowed to export semiconductors only if it supplies the same number of chips to the US companies. Any company failing to meet this ratio will face tariffs. To take this now forward, we're now joined by Jayant Dasgupta, former Indian ambassador to the World Trade Organization. Mr. Dasgupta, thank you very much for joining us. First of all, how do you see the trade negotiations that have taken place in the US? The Commerce Minister held extensive discussions with the USTR. The talks have been moving along positively. The Commerce Minister met various stakeholders, including investors, to discuss the India story. But it seems that we are still some distance away from a trade deal. What do you think could be some of the sticking points at this juncture?
The most important sticking point will be, of course, the rollback of the tariffs. The first tranche of that will be the 25%, which was the secondary tariff imposed from the 27th of August. And some kind of a reduction, substantial reduction in the first tranche imposed on the 7th of August of 25%. What we are hoping, it will come down to at least 15%. So this is something which, without which I don't think there would be an agreement. And the second, also very important point, is that we will continue to buy Russian oil. And now it appears that we are also quite, we have progressed quite a bit in joint production of the Russian Su-57 fighter jets. So defense production wise, co-production and purchase of Russian military hardware, I think that is something which we will not be able to compromise on. And President Trump's administration will have to accept that. And the third point, of course, goes without saying on that dairy and agricultural exports, which have been a sticking point.
Okay, I would also like to ask you about 100% tariffs on pharma products that have been imposed by Donald Trump. And this is on any branded or patented pharma products, unless the company is building a manufacturing plant in the US. Ambassador Dasgupta, the pharma industry in India is saying the tariff impact will be limited. But if you were asked to quantify it, how would you do so?
If you look at India's exports to the US, I think this year, of course, we have exceeded $10 billion. There has been a 20% increase. But last year, it was $8.73 billion. A vast majority of the products which we export are generic drugs or, using active pharmaceutical ingredients, we have formulations which we export, which are also, not generic, but formulations. So these will not fall within the purview of the 100% tariffs. And for the time being, and I emphasize this point, I think the Indian industry is not going to get affected very much. There are a few contract manufacturers in India which do manufacturing of patent protected drugs from, let's say, US companies or other companies worldwide. Their exports may get affected because unless the principal has a manufacturing facility in the US or is setting up something in the near future, they will get affected. So I think you mentioned Wockhardt and some other company which makes branded drugs, they could get affected potentially, but the overall hit would be very, very nominal.
Donald Trump has also imposed 50% tariffs on all kitchen cabinets, bathroom vanities, 30% tariffs on upholstered furniture. Does that have an impact on Indian industry?
I don't really think that will affect us very much, but because we are not very large manufacturers of upholstered furniture, for instance. Of course, the upholstery fabric, we do export quite a bit of that. So manufacturers in the US who import upholstery fabric from India and then fit it into furniture which they may have sourced from China or some other country, that might get affected. But I think with this 50% tariffs, the upholstery fabrics also exports is going to get affected in any case. So that is one thing. The other point is very heavy trucks, which are also going to attract about 25% tariffs. That I don't think were actually exporting much by way of very heavy trucks, which President Trump has in mind. And the other point I wanted to mention in this context is that he is again invoking or going to invoke the national security exception for the very heavy trucks, because he's saying, he's mentioned it, I think, in his tweet also, that it is about national security interest. Something to that effect.
All right. My final questions to you now, sir. What do you think happens between India and the United States now? What will it take to finally have a trade deal between the two nations?
I think we have, our minister has already made it public that we are going to buy much more US oil and gas. All other products which could help in rebalancing the so-called goods trade deficit which President Trump is focused on. But having said that, I think the sticking points which I have already mentioned, if there isn't considerable satisfaction on, or almost total satisfaction on those points, I don't think we will be able to have a trade deal by November.
Right. And finally, if both Prime Minister Modi and President Trump end up meeting on the sidelines of the ASEAN summit, do you think that could lead to some positive outcome on a trade deal, or at least an understanding on setting aside 25% tariff, that additional tariff?
I think from what I can gauge, Prime Minister Modi would not be very forthcoming in having a meeting with President Trump without a very fixed kind of an agenda on which most of the agreement has already been arrived at. Because I don't think in any government functionary minister at that and the Prime Minister, of course, will get into a meeting with President Trump without having already decided the fine print of the agreement. So, unless we have an agreement between the two ministers, Minister Goyal and the minister from their side, two ministers from their side, by November, I don't think a meeting between Prime Minister Modi and President Trump will yield anything by way of a breakthrough.
All right. Ambassador Dasgupta, thank you very much for joining us on the program. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Goodbye.
Since the RBI MPC's August meeting, so much has changed. 50% tariffs imposed by President Trump, a giant GST cut by Indian governments, a massive fee hike on H-1B visas by the US, and now a threatened 100% tariff on branded pharma. These steps are large enough to change the entire growth inflation dynamics since the August policy. This makes the deliberations of the CNBC-TV18's Citizens Monetary Policy Committee that much more important. Let me welcome Chairman Pranab Sen and our members, Dr. Soumya Kanti Ghosh, Dr. Sajid Chinoy, Samiran Chakraborty, and Sonal Verma. Gentlemen and Sonal, good morning and thank you very much for joining me. Well, Soumya, as the Finance Commission member, as well, I'm going to begin with you. Last policy was branded hawkish by the market because the Reserve Bank said that the 1 year ahead inflation in, that is second quarter FY27, will be 4.9%. So market thought no more cuts. What's your assessment of the inflation trajectory now after the GST cuts and the huge Asian deflation?
Yeah, thank you, Lata. No, I think you have asked a very pertinent question in terms of the inflation trajectory. Since the last time the policy, in August, the policy was announced, I think there has been a plethora of changes, as you correctly pointed out. There has been a lot of developments on the global front, but most importantly on the Indian front also, there has been this GST rate rationalization. And of course, there are reports that, as you said, there has been serious Asian disinflation. In fact, if you look into the all Asian countries, the inflation is lower than the band of which it is prevailing. If we extend the case to India, I think in India also, the impact of GST is going to be more pronounced. If you look into the trajectory last time when the GST was cut in 2019, I think there was a significant impact on the inflation trajectory on a one-time basis, and then it declined. In the current scenario, there are a couple of points to note. The first thing is that apart from the fact that food inflation has continued to surprise on the downside, the GST rate rationalization actually translates into around 16% weightage in the CPI commodity basket, if I just take a rough approximation. So even if so that actually should translate into 114 basis point impact. But even if I assuming that the pass-through is only 50 to 60%, which is the most plausible and rational assumption, the overall CPI decline could be in the range of 60 to 70 basis points. I take it as 60 basis points. This apart, there is also the likely impact of a new CPI base which is coming into effect from February 2026, where in all probabilities the food weightage should be reduced. So if I take into account all these technicalities and also the fact that core inflation has been running significantly below par, if I take out the gold inflation, I think inflation for this year average will be close to 2.5% with a downward bias. And the most importantly, RBI has been citing this as a forward-looking central bank, that the next year inflation, when the policy is announced in June, it was 4.9%. Now it is tracking decisively below 4%. So my sense is that with an inflation rate which is going to be below 2% in September and October could be the lowest ever. And most importantly, 2.5% inflation average this year, less than 4% next year. I think there is enough arsenal in the room to suggest that the inflation trajectory will be significantly benign in the next couple of months and even in the next 1 year or so. So basically the projections of the central bank or anywise could have changed significantly, could possibly change significantly when the policy is announced on October 1.
Fair point. So 4.9 will definitely be reduced for the plethora of reasons you say. But, Sonal, on the point of that inflation number being revised by everybody for the current year to 2.4, I did a poll, and actually, if you compare to the Economist's August forecast and current forecast, GDP has been raised by 30 basis points, and inflation has been lowered by everyone by about 40 basis points. That's the average I got, and that table will play. So, given that, how can you at all justify a cut?
Yeah, Lata, I think, monetary policy is an art, not a science. And I think the assessment of whether the economy needs a cut or not has to be based on the underlying assessment rather than the headline numbers. So on growth, I think the biggest question is to what extent the 7.8% has been exaggerated because of the low deflators, because an economy which is slowing on a nominal basis has consequences for fiscal finances, but also in terms of business decisions on capex, consumer decisions on spending, because there's also a slowdown in nominal salary growth that happens. And I think, we also need to be forward-looking on growth, just as we are on inflation. And GST impact both on growth as well as on consumption is one-off. And the underlying drivers of consumption ultimately come back to the outlook for job and income growth beyond this one-time boost that we will get because of the GST cut. The tariff impact is already visible from the August data. The exports to US, which were growing at 25-35%, have drawn down to 7%. And going forward, we will see a squeeze on profit margin of companies, the SME, MSME exporters. Compensation that they provide to employees on their payrolls will start to moderate. So second half of FY26 is essentially when we think on average growth will slow down closer to 6% compared to H1, where growth is likely to be closer to 7.5%, because Q2 will also be boosted because of the low deflators. So I think, and I think the final point, Lata, the whole host of factors that you mentioned, which is 50% tariff and H1B visa, pharma tariff. I think the message here, and reading through the tea leaves here, is clearly that we've entered a global environment where reliance on external demand to boost growth is incrementally coming down, and therefore there needs to be a concerted effort both from monetary, fiscal, and reforms to basically push domestic demand. I think it is in that context and the room provided by inflation and the Fed that the assessment needs to be made.
Fair point. Sajid, actually on that, just extending that, can the Reserve Bank cut in the face of a seminal fall in the rupee? Also, just parse the global backdrop, because in your JP Morgan conference that I attended, there were serious concerns about a pan-Asian deflation.
But Lata goes beyond that, right? I think the issue right now is that the uncertainty that we're seeing, both globally and in India, it's very binary in nature. What you're seeing in the US, for example, is third quarter growth is surging 3%, right? CapEx is doing very well, and yet the labor market's at stall speed. And so the question is, how does this break? Does this break in the form of a recession, where the labor market goes into a recession and that pulls the US economy down with it, and the Fed goes on to a long easing cycle and the dollar were to weaken and that opens up space for emerging markets? Or does it break in the other direction, where we've had many false dawns, and in the wake of this large immigration outflow, both inflows being stopped and now some outflows as well, that the break-even rate in the labor market is much lower. And so the labor market stabilizes at 30 or 40,000 jobs in the next few months. US inflation, which has been building, continues to build. And we have a very short easing cycle by the Fed, which is what Fed policymakers warned earlier this week. And the dollar strengthens and puts pressure on emerging market currency. So the risk in the US is very binary. I would argue similarly at home. The elephant in the room is we've got a 50% tariff from the US, but the macro outlook over the next 4 quarters will depend hugely on whether a deal can be struck in the next month or two, or whether we don't have a deal for the next 2 or 3 quarters, right? Similarly, just as we have external headwinds coming from the tariff, we shouldn't ignore the fact that there are building domestic supports beyond the GST cuts. We saw direct tax cuts earlier, direct tax cuts now, very low inflation, which opens up purchasing power, a monetary easing cycle that's working through the system, and a very strong monsoon. So in the wake of all this uncertainty, right, you want to invoke Brainard's attenuation principle from the 1960s, that when you've got so much uncertainty and monetary policy has limited room, you want to move cautiously. I'm not arguing that there's no space to ease. The question is now the right time to ease? I would argue that in a couple of months, a lot of this uncertainty will be resolved. By December, we'll know A, was a trade deal struck and is the macro outlook different? B, we'll know is the domestic supports offsetting the external headwinds or are they not? And C, we'll know whether the US is in recession or not. And I think that will give the RBI much more information to then use whatever remaining space there is down the road.
Fair point. Okay, let me extend that fiscal argument to Samiran. Samiran, that is the conventional logic, isn't it? When the fisc is loose, you don't go ultra loose on monetary policy. And this time, despite the government's protestations, it's quite possible that the fiscal deficit is a little higher simply because tax collections are bad. Your take?
Hi, Lata. Actually, this is the crux of the problem that do we right now consider that there is a fiscal stimulus out there, both through the income tax cut as well as through the GST cut, and that's why monetary policy will have to take a back step? Or do we consider that the growth headwinds are so strong that we need both engines to fire at the same time? I would argue that we need to think a step even beyond that. Whatever monetary has done, even that part is not getting fully transmitted because of the bond market channel not being as effective and trying to impact even the bank lending channel through some marginal increase in loan rates for fresh loans. So maybe there is this thinking which is slightly different from the traditional thinking of saying that only one can fire at point of time. Maybe it's now where we think that both needs to be coordinated, having a simultaneous impact. Because for me, the big issue also is that while I agree with Sajid's point that there is a lot of uncertainty over the next 2 months, maybe some of that will get resolved. But who knows, there could be more uncertainty coming in the next 2 months with more such headline news. We live in such a world. And to convey today to the market that we have some space, but we are keeping that space for another day is not going to be a very easy communication. In other words, a dovish pause is going to be a very difficult communication for RBI. Maybe that's why delivering a 25 basis point cut, even on the face of the fiscal stimulating, might be tactically a better stance, but it's a very marginal call.
Okay. Yeah, it looks like, from what when I speak to the market, it looks like a very divided call. But before I ask you all to vote, let me get the chairman to weigh in. Dr. Sen, does growth really need help now? Is it that bad?
Well, Lata, the issue really isn't growth in and of itself. The issue, I think, now are the set of expectations that have built up because of the various factors that people have talked about. The problem, of course, we don't have a full understanding of what these expectations are. And I'm talking about both consumer expectations as well as investor expectations. And that really is the issue. Now, the whole question is that we all agree that uncertainty is heightened.
Yes.
But despite uncertainty, people are going to make expectations about the future. They're going to hedge, perhaps, but they will have expectations. The real question is, how do we handle it? Do we allow those expectations to express themselves, track it in terms of the data that we are getting, and then take the next step? Or do we preempt those expectations? Now, my personal sense is that at least I do not have a good enough feeling as to what these expectations are for me to take a decision now.
Okay.
And the question is, I can do a leap of faith.
Okay.
Or alternatively, I can wait a little bit.
Okay.
And that really is the dilemma that is going to be facing the MPC.
Fair point, sir. Fair point. Actually, lots more to discuss, but let's have a vote first. The first question, obviously, is going to be what will the RBI do on October 1st, the RBI MPC? Can we start with the lady, Sonal?
25 basis point cut.
Okay. Samiran?
A marginal call of a 25 basis point cut.
Okay. Chairman, I'll come to you later. Shaumyo?
Close call, but 25 basis point cut.
Okay. Already majority is 25 cut. Sajid?
I think they'll hold.
They'll hold. Chairman, which way would you tilt, sir?
I would hold.
Hold. Okay, I thought so from the way you said. Wait for uncertainty to abate. So let me start with Sajid. Sajid, when you parse the global environment, you did admit that there is an Asian deflation as well. What is the solid reason not to cut?
No, Lata, a couple of things. There's no doubt that inflation is good and has been very benign over the last few months.
Exactly.
The question is, how durable is this? And I would say there are two elements we need to keep in mind. One is some of this has been driven by vegetable prices, which can, rebound. And the second is GST tax cuts. Yes, to the extent that they impact inflation expectations, they will have an impact. Otherwise, there are tax change, a one-time change in the price level, right, which kicks in for the next 12 months. So ordinarily, monetary policy should see through that. I'm not arguing that monetary policy, that inflation is the reason the RBI should not cut. The question is timing. We've already done 100 basis points of cuts. Fiscal policy is now kicked in. You've got 0.5% of GDP in tax cuts. It's purely from the GST compensation cess going away. And so now there's, one would argue, limited space that monetary policy has. And the question is, when do you want to use that space? Do you want to wait and see what the outlook is in the next few months? If growth remains resilient and inflation creeps back up, then you remain on pause. 2 months from now, if your fears on growth are confirmed and inflation remains very benign, do you then want to use more space then rather than cutting 25 basis points now and holding? And that's an equally tricky communication. You want to wait till later and then cut by 50 basis points at that point. I think that's the dilemma. So no one's arguing that the RBI doesn't have space. The question is, given heightened uncertainty, which is in both directions, I think that's the key to realize here, that we're focusing on the external headwinds. There are also some domestic tailwinds that are building up. So when there's two-sided uncertainty and the risk is very binary, you sometimes, and having moved 100 basis points, you sometimes want to be a little bit cautious and preserve your remaining space to act at the appropriate time.
Okay, fair point. One point before I come back to the main inflation debate, bond market, they have played a bit of a spoil sport. So Samiran, should there be separate steps for the bond market?
Yeah, I mean, there could be two different pushbacks on why RBI should not be doing anything for the bond market. One is that at the fag end of the rate cutting cycle, typically the term premium always goes up, so don't fight against it. And second is that the root cause of the bond yields going up is more an unfavorable demand-supply balance in the market, not as much linked to monetary policy. But having said that, even if these two are valid, for a better transmission of monetary policy, RBI needs to communicate that there is some way they are trying to have a view on the yields also. Now, one possibility is to just rekindle this expectation in the market that there is still space for doing OMO purchase in the latter part of the year once the CRR cut period is over, because clearly RBI's FX intervention has reduced the durable liquidity to some extent, and maybe that can be filled up by OMO. So that sort of communication, what it does is that some of the actors, some of the demand side guys on the bond market who are right now not buying because they don't see any chance of yields coming off, maybe they jump into the market based on that hope that RBI can come in at some point of time. And then there could be somewhat more market nuanced interventions like small secondary market purchases or not chasing the tail in the bond auctions, etc., etc. But the limited point is that to completely ignore the bond market channel for transmission, saying that this is beyond the control of RBI, is giving some sort of a helpless feeling in the market, which the RBI might want to reverse in the October policy.
Okay. No, that's well said. I always thought that there was a fundamental mistake in taxing equity at equity capital gains at 10% and removing those indexation and 20% on debt. But that's a debate for another day. Communication. Soumya, what's your sense? How should they communicate? If they give away the cut, then maybe the bond market will again misbehave or will not fall in line. What's your sense? How should they communicate?
Well, I think, Lata, that's a fair question because we have seen that in the June policy where they had cut by 50 basis points, but the forward guidance which they had given out was at 4.9%.
Yeah.
So that actually completely rattled the bond market. And also there was subsequent discussion when the RBI itself admitted that the bar for a rate cut is even higher. So that came against the backdrop when inflation was actually declining. So I think to be fair to the RBI and to be fair to the market, and to be fair to also the marketplace, I think the RBI also needs to appreciate that at the end of the day, it's also the date manager. The date management function of the central bank is also one of the functions apart from monetary policy making. So from that perspective, I think if the RBI tomorrow lowers the inflation projections and suppose it doesn't go ahead and cut the rates, that will give a wrong signal to the market in terms of saying that in terms of forward-looking nature, it still believes that the inflation could actually move ahead. But keeping aside that, I think the communication of the central bank, whatever decision it takes in the October policy should be nuanced, structured and succinct. In the sense that if you actually look into the minutes of the June policy, when the only term discussed was front-loading. In the August policy meeting, you will see that plethora of times like front-loading, uncertainty, vegetable disinflation, food disinflation, tariffs. So I think the market actually got a little perplexed of what is the forward-looking there. So I think whatever decision the central bank takes, maybe a nuanced and a structured communication that is completely data dependent would also help the market in terms of bond market transmission.
You're right in saying that 4.9 forecast was what disturbed the market in August. So, Sonal, what will you expect or what should the Reserve Bank forecast in terms of growth and inflation? Your expectation?
Yeah, Lata, I mean, like our forecast of what the RBI will forecast. I mean, on GDP growth, I think Q2, the momentum is reasonable, but importantly, the deflators will again be positive on the real effect. So I think H1 looks good. So for FY26, we think the RBI will raise his projection from 6.5 to 6.7%. So a very strong H1 with some moderation in the second half of FY26. For CPI, where the RBI was at 3.1%, I think it needs to take into account the ongoing food disinflation plus the GST-driven disinflation when the new forecasts are presented. We think RBI will forecast this 3.1 at a number that's closer to 2.7%, although our own forecast suggests risks are clearly that inflation will undershoot, with some of the tracking estimates actually showing we could see 2 consecutive quarters of inflation undershooting 2%. So while we are seeing upward revision on growth and downward revision on inflation, which suggests different policy responses, I think the forward trajectory on growth and on inflation, discounting for the base effect, I think should still support a cut. One point I did want to make, Lata, I think there's been a lot of discussion around what's the right timing when the RBI should move. I think on that timing issue, October is quite crucial because this is the festive season. This is the busy credit season. So if we want the virtuous consumption investment cycle to pick up, credit growth to pick up, banks to actually pass it on, it makes a lot more sense to actually deliver it in October rather than wait until December. And from a pure risk-reward, strategy perspective, I don't think there are risks with this strategy. So I think even from a timing perspective, October to us makes more sense.
Fair point. And of course, there will be 17 days to Diwali. So perhaps it would come in handy. Dr. Sen, a final word of advice to the MPC.
I think we are in a situation where the communication that the RBI does is far more important than what measure it takes. And it's really that what they should be focusing on. Because typically what happens otherwise is that the focus goes on to what are the rate decisions. I think this time around we need to get away from that. There is a lot of uncertainty in the world, in India in particular. And as Sonal said, I mean, there are headwinds and tailwinds depending on which side you're looking, outside or inside. These have to be communicated.
Okay.
And not only that, they have to communicate their expectations as to where they think these things will go and what would be the appropriate action if and when a particular eventuality happens. I think that's far more important than simply rate signal.
Okay. No, I agree that communication will be more important. Remember, in June, it was 50 basis repo and 100 basis CRR. And the yields went up. So communication is going to be way more important than rates. Take your point. We already had your vote on what to do on October 1st. How many more rate cuts do you expect? That is the next voting question in this cycle, including the one on October 1st, if you are expecting one. Sonal, how many more rate cuts?
So incrementally another 25, so we have 5% as the terminal rate.
Okay, so 2 cuts basically, October and another one. Samiran?
Do the October cut and then wait.
Okay, 1 cut. Doctor, I come to you last. Soumya?
We are going for 1 cut now,
as of now. Okay, all of you are tentative. Sajid?
It's very binary. I would say 0 to 1, depending on how things pan out.
0. I'll have to take that 0 because that's an outlier vote over here as of now. Dr. Sen?
I would vote for 1 cut.
1 more. Okay. So there you are. Definitely everyone expecting a cut except Sajid. That's the majority view. And of course, Sajid kind of compensated by Sonal expecting 2 cuts. Gentlemen and Sonal, thank you very much for joining me in this extremely enriching deliberations of the Citizens Monetary Policy Committee. That's it on the show. Thanks for watching.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Dalal Street down for the fifth day. Sensex and the Nifty lose 3% this week, marking the biggest decline in 6 months. All sectoral indices close in the red. The Nifty IT index down 8%. President Trump announces a 100% tariff on patented and branded drugs not manufactured in the U.S. No impact on India's generic industry yet, barring select players like Sun Pharma. Trump also imposes a 50% tariff on kitchen cabinets and bathroom vanities and a 30% tariff on upholstered furniture, citing unfair competition. The Commerce Minister returns after a 3-day visit to the U.S., his first since 50% tariffs were imposed. The ministry says the delegation held constructive meetings and both sides agreed to continue the engagements to achieve an early conclusion of a trade deal. JSW Steel will retain Bhushan Steel after the Supreme Court overturns its own decision in a landmark verdict. The Apex Court rules the purpose of the bankruptcy code was achieved and it would be disastrous to undo the 20,000 crore rupee deal. The Telangana government will take over the first phase of the Hyderabad Metro from L&T. The state will pay 2,000 crore rupees to the company for equity and absorb 13,000 crore rupees in debt. In a bid to woo first-time car buyers, Maruti Suzuki plans an EMI scheme at just under 2,000 rupees. The move follows unprecedented response since the GST cuts, with bookings for small cars saw an uptick of 50%. President Trump signs an executive order outlining a deal to transfer TikTok's U.S. business to American ownership. Vice President Vance says the business will be valued at $14 billion. Oracle, Silver Lake and Rupert Murdoch will be the key investors. No representatives from Chinese parent ByteDance were present at the signing and the company has not acknowledged any transaction. The order book of Hindustan Aeronautics rises to 2.7 lakh crore rupees by FY27 after the government's contracts to buy 97 Tejas fighter jets. HAL chairman says price negotiations with General Electric are now complete and a final contract for additional 113 engines will be signed in October. That's an exclusive. After more than 6 decades in service, the Indian Air Force bids farewell to the MiG-21 fighter jets. Air Chief Marshal A.P. Singh flies the last sortie with Squadron Leader Priya Sharma. Defence Minister Rajnath Singh calls it a national pride. Well, let's start with the day's market action. The Dalal Street declined for the 6th straight session. Pharma and IT stocks dragged the Nifty lower, in fact below the 24,700 mark. Broader markets underperformed as well. Mid-cap index down over 2%. The Nifty small-cap index also lost 2%. The Sensex closing a percent lower. For the week, the Sensex and the Nifty have posted the worst weekly fall that we've seen in nearly 6 months. Down over 2.5% for both the Nifty and the Sensex. The Nifty IT index, look at that. That's the H1B impact playing out for the IT index, down almost 8% there for this week. All sectoral indices closing in the red, and the Nifty Pharma index fell 5% for the week, and that on account of, again, the worry and the concerns that after President Trump has decided to act on branded and patented drugs, will he go after generics? And the rupee hitting a record low against the US dollar in early trade towards the close. Most losses were paired and the rupee ended at 88.71 to the greenback. 10-year bond prices declined marginally in trade today. That's the rupee and the bond market action for you. But from currencies to commodities, crude oil prices remain steady and on track for the biggest weekly gain in 3 months. This after Russia announced a ban on diesel exports until the end of the year after Ukrainian drone attacks hit the energy infrastructure. Meanwhile, gold prices holding steady near record highs. This after better than expected US GDP data dampened bets of further US rate cuts while investors awaited key inflation data. President Trump has fired a fresh salvo on Big Pharma. The US government has imposed 100% tariffs on branded or patented drug imports. This will come into effect from the 1st of October. However, the government has clarified that these tariffs won't hurt a company unless they build a manufacturing factory in the US. Now, the Indian generics industry so far is unscathed by this order, but select companies like Sun Pharma and Wockhardt, who sell branded drugs in the US, will be impacted. Ekta is here to explain the Trump tariffs on pharma, the impact and the implications. Ekta.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts, many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15% and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Ekta, many thanks for joining us. And it was not just Big Pharma. A slew of items were targeted by President Trump with additional tariffs. Let's start. Imported kitchen cabinets and bathroom vanities now face a 50% tariff. What else faces a tariff? Upholstered furniture faces a 30% tariff. Heavy trucks face a 25% tariff. This will take effect from the 1st of October. So those are the new items that are being tariffed. President Trump defended the decision, claiming unfair outside competition. The Trump administration is also planning to reduce the reliance on semiconductors made abroad. According to the Wall Street Journal, the White House is considering a plan to mandate a 1:1 ratio of domestically manufactured to imported semiconductors. What this means is a company will be allowed to export semiconductors only if it supplies the same number of chips to US companies. Any company failing to meet this ratio will face tariffs. This is, of course, not been confirmed yet or announced yet by the White House. Now, Commerce Minister Piyush Goyal has returned after a 3-day visit to the US. This is his first since the 50% tariffs were imposed. The Commerce Ministry says that the delegation held constructive meetings with the Trump administration. Abhimanyu is here with what the government has said. Abhi.
A delegation led by India's Commerce and Industry Minister Piyush Goyal had visited the United States from the 22nd to the 24th of September. Now, negotiators from both the sides were also present in the meetings which had taken place between Piyush Goyal and the US trade representative on the other side. Piyush Goyal also met the US ambassador designate to India as part of his visit. He had met several business leaders to promote trade and investment from several businesses into India. Statement has been issued by the Ministry of Commerce and Industry, which reads that the delegation had constructive meetings with the US government on various aspects of the deal, and both the sides exchanged views on possible contours of the deal. It was decided to continue engagements and with a view to achieve an early conclusion of a mutually beneficial trade agreement. It was also indicated in the release itself that the meetings with businesses and investors evoked a positive response, and the business leaders had reposed confidence in India's growth story, expressing their desire to intensify their business activities into India. It remains to be seen how early the next round of negotiations is going to take place between both the sides, even as earlier the 6th round of negotiations was slated for the last week of August in New Delhi, which had gotten delayed.
Abhimanyu, many thanks. Now, US President Donald Trump met Pakistan's Prime Minister Shehbaz Sharif and the country's Army Chief Asif Munir at the Oval Office. The talks, which were attended by the Vice President J.D. Vance and Secretary of State Marco Rubio, lasted for 90 minutes. Trump praised both Sharif and Munir ahead of the meeting, calling them great leaders. The White House has not released any details about the meeting. However, Pakistan's Prime Minister's office has said that both leaders also discussed counter-terrorism cooperation and the possibility of new US investments into Pakistan. Well, President Trump has signed an executive order outlining the terms of a deal to transfer TikTok to American ownership. Now, under the plan, US investors will take majority control of TikTok's operations along with a licensed copy of its powerful recommendation algorithm. American companies are expected to own about 65% of the new US entity, while ByteDance and Chinese investors will hold less than 20%. Restructured TikTok will be overseen by a 7-member board of cybersecurity and national security experts, 6 of them American. Trump said the deal brings TikTok into compliance with US laws, which would have otherwise forced the app to shut down for American users. However, no representatives from Chinese parent ByteDance were present at the signing, and the company has not acknowledged any transaction so far.
This is going to be American operated all the way, and great respect for President Xi, and I very much appreciate that he approved the deal, because to get it done properly, we really needed the support of China and the approval of China. The biggest reason is that it's owned by Americans, and very sophisticated Americans, and people that love the country, and very smart Americans too. So they don't want anything like that to happen. Yes.
Shares of Vodafone Idea slumped over 8% intraday after the Supreme Court deferred the AGR case to the 6th of October. Now, this comes after the centre asked for more time from the top court. Earlier, the Supreme Court had deferred its hearing from last week on the 19th of September to today. Well, time for us to head into a short break, but coming up after this, more than 6 decades in service, the Indian Air Force bids farewell to the MiG-21 fighter jet. Air Chief Marshal A.P. Singh flies the last sortie along with squad leader Priya Sharma. We say goodbye to the MiG-21 when we return.